La noche no se duerme. La noche no se duerme. La noche no se duerme.
That Tuesday isn't so bad after all. It's a sign that I have somehow survived Monday. On that note, welcome to the third edition of the world's largest Fintech festival, the Global Fintech Fest 2022, organized by the National Payments Corporation of India, the Payments Council of India, and Fintech Governance Council. This edition of the fest is supported by the Department of Economic Affairs, the RBI, and the IFSCA. Before we start the session, ladies and gentlemen, it's only appropriate that we thank our partners, our theme partner WhatsApp, co-powered by partner Amazon Pay, spend management partner Encash, in association with partner Perfios, the payments partner Cash Free Payments, and the CEO's dinner partner HSBC. With that, we start the first session of the day, which is a panel discussion on the topic Evolving Regulatory Landscape, Anticipating the Role of RegTech and SubTech. And to moderate the session, ladies and gentlemen, may I call upon Vishwanath Krishnamurthy, the Chief Risk Officer, National Payments Corporation of India. He will be joined, welcome sir. He will be joined by Mr. Ravi Rajagopalan, who is the CEO, M-Pay's Payment Systems. Mr. Kunal Verma, the CEO and co-founder of Frio. Agnish Banerjee, CBO Data Sutram. Shekhar Bhandari, President Kotak Bank. And Ramesh Lakshminarayan, CIO HDFC Bank. Thank you so much, gentlemen. Vishwanath, you can take it from here.
Thanks, everyone. Pleasure having the co-panelists out here. Distinguished, everyone is distinguished in their respective field. So before we jump into the topic, just thought that I'll give a brief overview and perspective. So as all of you are aware, the fintech evolution has been really phenomenal. Worldwide, the fintech space has been growing at a CAGR of about 27%. But in India, we are growing at a space of about 31%. It's very significant. And if you look at the investments which is coming in the fintech space, again, we are kind of outperforming the rest of the world. While the average is about 63%, but in India, we are at around 87%, leading the space on this front. And so yesterday, we have had the governor speaking that we have had more than about 100 unicorns coming out in the last 1 year from India. So that's a really good space to have. With so much happening on the fintech space, it's also important that there is a regulatory oversight, which is definitely needed, and definitely RBI has been very active on that front. So quite a lot of things on the regulatory front has been happening, and the pace at which the regulatory directions and interventions are happening, whether the industry, be it fintechs or the banks, are they able to cope up with it, and definitely the non-compliance is viewed very severely, and we have seen RBI being very active and levying penalties and fines, etc. So that being the case, just want to get started with the panel members to just figure out how they are trying to manage this, their thoughts on that, and how investments in RegTech, which is basically technology needed to fulfill the regulatory requirements. And SupTech is basically technology for all supervisory requirements, which is mostly handled by the regulator. Just wanted to check with the panelists, their thoughts, their views, and how we are going to approach this particular segment. So with that brief overview, let me start with Shekhar, right? So being a banker, Shekhar, you have the onerous task of meeting customer expectations, uh, yeah, meeting the onerous task of customer expectations, and also at the same time the regulatory expectations. So how do you manage in your particular bank? How do you approach this uh, ever-changing regulatory requirement, and how are you keeping pace with that?
So I think an excellent thought, an excellent part for all of us where we stand, where regulations are supreme and customer experience becomes our motto of serving the customer. And balancing the two becomes the most important aspect at which I think we all are at the inflection point. You try to ensure that being a young bank, your systems are nimble, you are more razor sharp, more focused, and but overall as a banking industry, the systems would be, I call anarchic, traditional, not being able to talk to each other, the data from one system not being able to extract the way it can get and talk to other systems or other modes. And then I think the regulatory needs only increasing over a period. Why does I think regulatory needs increase over a period becomes a very important aspect for all of us. I think trust, safety, and security becomes the epitome by which the regulators work with. And the evolving fintech, the evolving data, the evolving environment probably makes them, I think, a bit more cautious, a bit more concerned in terms of the trust, safety, and security, I think, which they want to work on. As a bank, I think very happy to have I think good systems, a good data lake, good supervisory and control systems, I think, which is one been able to do. Since the systems are new, whether it is the core systems or the middle layer or the front layer, and they are able to talk to each other with a common data set, you generally find that the evolving regulatory landscape, you are able to probably, I think, adjust much better and able to comply much more. I'll give you a classic example that if you have an early warning signal on which you work on, and if you are able to have the entire external data sets and internal data of the customer, and you are able to marry the two, you are able to have one of the most robust risk management systems which is available for you. If you want to be on the trade side, you have a very similar amount of screening which is able to work on the internal databases and external databases. But is the situation same across the industry? I said I think different banks, there are few who have built systems over a couple of years, couple of decades, and yes, there is a significant difference in terms of agility with which they can work on.
Thank you, Shekhar. That was really insightful. Moving on, I'll just jump across to Ramesh. Interesting point which Shekhar touched upon about legacy systems, right? And also building up new systems for the new regulatory requirements which are coming up. How do you manage that in HDFC Bank? I'm sure that you've got a lot of traditional systems there, but bank of your scale, when you have to transform, you've also been extremely agile. How do you manage this complex process where you have to live with an existing system and also migrate to a new system, right? So,
I think it's a like Shekhar said, it's an evolving landscape. First of all, I think there are two aspects to this whole thing. Banks, and to my mind, actually, I'm just qualifying this that all banks are on legacy platforms. Okay, that's the fundamental thing. If you are on Oracle monolithic platform, you are dead. That is the reality of life. I'll give you an example. We spoke about early warning. Try and do a daily NPA on a single monolithic database. The records will never get processed on a daily classification. So you need to think differently because that time has come because the size of the data And regulation today cuts across, right? I mean, if you have to look at an early warning, NPA, ADF reporting, and all of them from RegTech. I'm just taking from a RegTech space. I'm not talking from a regulatory angle of the entire ecosystem. Just the RegTech space, if you look at it, they need very different processing levels. I mean, you have billions of customers today, bank like us, and if you're trying to do a daily NPA on a single credit card across, just that itself is going to take time. And if you're trying to do on-prem monolithic platforms, it's not going to work. So I think for us, both from a RegTech system, even and from a normal system, the path to cloud is a given today. There is nothing that you can, and I find it very funny when some bank comes and tells we can still be on-prem. Actually, because I've been through this journey. I'm not saying from a kind of a back-ended perspective, but you have to, because the data size and the volumes have gone up so much, right? So what we have done, the bank is, we have the same challenge like every other bank. So we've kind of now laid out the pipes to be able to move to new set of platforms. So as an example, we've done a very interesting concept of a landing zone, which is first in India, where our on-prem data center extends into the cloud data center. And we've done with all the clouds. We're very clear it's a multi-cloud hybrid architecture. But what we are doing is now, on top of it, you can bring in a series of new age platforms. So take an example, the entire NPA classification today runs on Spark engine, which is a very different way of kind of processing the entire flows, unlike the classical way of doing RDBMS based processing, right? So I think what will happen, and this creates a nice pathway to interact with new set of players who are bringing, like I said, whether it's early warning, whether it's NPA management, whether it is ADF reporting, whether it is some of the other regulatory, even the information security side. I don't want to kind of dilute that, because a lot of regulatory aspects come from security angle, and a lot of those are coming up nicely in the new ecosystem. So you have to have a two-pronged strategy of kind of saying, how do you push the processing onto the new age platforms, and you continue to rewrite your legacy as time goes. So it's a balancing act, but I think it's an very interesting play out at this point of time. So.
Thanks, Ramesh. That will be definitely helpful for some of the big banks who are into the migration process. Because that's the constant today, right? So we have to keep migrating on the technology and keep upping it, right? So I just come to you, Ravi. So since you also have experience in running the network, how do you see the challenges surrounding data localization, and how do you think the ecosystem is able to take it? Do you think that there's a lot of work involved on that, or that's now more or less settled and it's doable? So that's one of the key requirements of the regulator, right?
So,
Yeah, it's on.
right. So good to be on the panel. Thank you very much to be in such a distinguished panel. I enjoyed the remarks made by Ramesh and Shekhar. So I'd like to preface that with a couple of observations, if I may. Right. So first of all, I think among all the G20 countries, India has had the fastest technology leap in the last 7 to 8, 10 years. And that is something that any one would struggle to cope with. So if we believe that our regulatory and compliance systems are not up to scratch because they're not able to cope with the pace at which things have evolved. And it was all credit to the NPCI, the Government of India, the various ministries that have been involved in this. So I think that's something that we need to take into account. The second is that data localization, specific to your point, I think is done and dusted. I don't know if anyone is familiar with what happened to MasterCard last year. So there are very severe penalties to be paid if you flout the law. Admittedly, for global organizations like Visa and MasterCard, the difficulty is that it's not that they don't intend to comply, it is just that the systems are so complex that it is not possible to move systems from one geography to the other geography. So in MasterCard's case, the global settlement system, which is the heart of the business processing logic, was always run out of Purchase, New York, or St. Louis, Missouri. It's not possible to take that and copy it and put it in India. It's not a Word file or a PowerPoint file. So the thing is that it takes time to move those things, but I think from an Indian compliance, from an Indian regulatory and subtech perspective, it is extremely important that as a significant major economy, that data relating to Indian transactions, Indian customers, Indian businesses are localized in India for the very reason that Ramesh just explained, that the natural migration of companies, of organizations is to go to cloud. You get out of legacy and go to cloud. The moment you go to cloud, the moment you virtualize, it is possible, it is easier, it's not one-on-one, but it is a lot easier to build the necessary hooks to make sure that you're able to get to a compliance perspective. The one country I'm aware of, which actually surprisingly has a very advanced SupTech infrastructure, is Rwanda. They actually dip directly from the bank's co-banking systems. They pick up data on NPAs, they pick up data on loans processed, and things like that. Admittedly, it's a small country, and everything was built from scratch from the year 1998 after the recovery from all the incidents that took place. But it is an example. The newer you are, the faster you are to comply with some of these things. So I look at data localization not as a nationalistic thing, because people confuse that, but in the evolving landscape that we are in, where we are changing at the pace at which we are changing, it is extremely important that we have the ability to localize Indian data and Indian customer data and Indian business data in India, so that SupTech becomes possible. And I see the big challenge only on the SupTech side, not so much on the RegTech side. Because the RBI today, and they will tell you themselves, Mr. Das will tell you himself, it is very hard for the RBI to keep pace with the way things are changing. They make a valiant effort, those guys work very hard. We are a national payment system, we deal with the RBI on a daily or a weekly basis. They struggle, they work very hard. And the only way to make sure that this is not manpower dependent, because that is the danger with making everything, not talk to each other, is that there will be no SupTech in India. By the way, there are two examples of SupTech which already exist in the banking frame. Any import you make, or any export you make, the forms that are necessary for that, including the shipping information, ultimately goes to compliance, goes to the RBI. So it is very hard to import without permits or to export without tax registrations done. They catch you in the end. So that, I think, is a good example of SupTech that exists in India, and that is possible because the data is in India.
Thanks, Ravi, for that. I think there's a lot of work which is happening on market surveillance by regulators such as RBI. And today, they get a lot of information at the click of a button, which was not there earlier. Even the reporting has been streamlined, I think, from the reporting requirements, which were earlier running into maybe a month or so. Now it's all happening within weeks. And so therefore, the regulator is able to identify the trends and do course correction quite quickly as well. Right, and also at the same time identify areas of non-compliance also that much more quickly. Yeah, so just moving on, Kunal, you represent a neobank, right? So how do you guys see the regulatory interventions and the need for RegTech? So do you think that this is an enabler, or do you think that it's a lot more painful? Of course, I think Ramesh was saying that it becomes easy for a new entrant to get onto the bandwagon quickly. But how has been your experience?
Sure. Thanks, Vish. Thanks for having me on the panel. So I think as a neobank, one key objective that we have is that, like everybody is speaking over here, the customer is very clear in terms of what value they want, right? So we are creating a digital banking platform because we think that's the way the future is going 10 years, 20 years from now. Digital is the way people want to consume services, right? So that's the fundamental need for the customer. So that doesn't change whether you look at it from a traditional bank perspective or a neo-banking platform. And we have two brands, right? Frio is a consumer neobank, and at the same time we have MoneyTap, which is one of the largest credit line products. I think regulation has been, it has added complexity for us, which has forced us to invest time and effort, dedicated attention to putting things in place. But it's like solving the tough problems first. So it seems like it's like a first order negative situation where, you straight away go into like pain. Oh, I have to like solve 10 things. But I think it's been phenomenal because once you take that initial complexity or pain head on and solve it, after that we know that we are running it completely kosher. And that actually has also become beneficial because it manifests in form of trust. So when you operate with a clear eye and implementation on regulations. We have an NBFC license in that sense. We work very closely with banks and NBFCs. I think the trust from the customer side goes up because they know that you are a genuine product, genuine service, following regulation, following the law. The regulator looks at you as an entity that they understand because, again, you are following the regulatory aspects. And at the end of the day, it's a huge competitive advantage because there might be entities or organizations coming in and thinking, well, is there an arbitrage? Is there a regulatory arbitrage where I don't need to invest in regulation? I can circumvent it in certain ways and do something very quickly and be a challenger. So I think that is a very short-lived benefit. But anybody who's taking regulatory implementation head-on, I think sees an advantage. So I think that's one aspect, which is it also is an enabler, it's a moat. I think referring to what Ramesh mentioned, legacy systems, and I'm an engineer, so I know and I understand technology and code, and I've done coding so much in my life, in my earlier life. I totally agree that, if you're starting something fresh, I think you have the ability to think first principles and think building scalable architecture for 10 years from now, 20 years from now, versus having a deal with systems, legacy systems or monolithic architectures. I think for us, it's easier when you start afresh, but take it first day onward, saying that, look, I need to think about regulation. I need to build a system which will adapt 10 years from now. So in some ways, it's easier than to go back and modify an existing system. But I think overall, if I were to sum it up, it's a lot of initial complexity. Any institution which is looking at building a long-term sustainable franchise, which wants to be around 10 years, 20 years from now, needs to invest upfront. And I think it adds value over a period of time. So I think that's how we've approached it overall, and it's benefited the customer at the end of the day.
Thank you, Guna. Thank you so much. Agnish, moving on to you, I think you are rightfully sitting in the center of the panel. So the area of specialization that you work on is big data analytics, right? So it is definitely the center of the universe today, right? So how do you see that supporting this, this RegTech related, systems, and where you can play a better role on that, and how do you see banks utilizing big data analytics on this front? Your thoughts on that?
Sure. Thank you so much, firstly, all of you, for having me here. And yeah, so my company, this company we started out of our third year, I think, in college. Even I'm an engineer. So I was very interested into doing something different in the space of India. So being an alternate data company, I've had the honor and privilege to work with all kinds of institutions in the banking system, neobanks, traditional banks, etc. I think to start off with, whenever both parties, both sides of the coin, firstly, regulatory institutions like RBI, and the other one, financial institutions like traditional banks, neobanks, etc. Both parties, when they see the word RegTech, the common initial thought is, okay, then one more block, one more this, one more that. I think personally, as much as I've seen, RegTech and the use of big data analytics in this space can be extremely helpful, actually, to guide the way forward and to make sure that this boom of fintech and this boom in banking institutions as a whole in India that we are having, we have a very controlled boom now. It keeps on rising, but it's very controlled in the sense that risk goes down. Right now in India, and you guys will know this more than me here in this sense, that loans being handed out are much, much more in number, and ticket sizes are also much more. But having said that, risk has also increased that much, right? When you put in the advent of data, and when firstly, on one side, FIs, they use big data to understand customer behavior, to understand exactly what kind of loans are being handed out to them, why are they handing out to them, etc. Credit risk goes down by a lot. in my personal experience that we have worked with banks, NBFCs, etc. On the other side, when you take this entire RegTech conversation to RBI side, you know, systems that they are trying to implement like CIMS, for example, or their public credit registry here in this case, yeah. So these systems that they're implementing as a whole, I feel this is creating a beautiful sandbox in the sense that newer companies and traditional banks as well can actually test out new tech, new advent on how to guide this way forward without, you know, implementing the risk that comes with the entire thing. So to me, I personally believe that yes, data is the new oil. And to me, I honestly feel that the advancements in RegTech that we are having as a whole, it's here for, you know, the best for both sides. So if that is my two cents on
Agnish, I'll ask you one more leading question on that. So I'm sure you guys have worked on concepts such as NLP, RPA, and DLT, and those kind of things. Do you think that these things are really applicable in the RegTech world? And if yes, can you give us some examples on that front?
Sure, sure, sure. So in front of, you know, everything that you just mentioned, is it applicable in the RegTech world? Yes. In one word, one short sense, yes. In the sense, again, I will just jump back to my previous conversation that I had, is that RegTech as a whole, from a humanistic approach, it creates a very, very subtle sense of empathy for both parties, right? So when you understand the behavioral patterns of these people, and when you understand exactly how to go about this entire landscape, you can you can control the boom likewise, having, you know, making sure the risk goes down by that much. So yeah, I'll just keep it very short on that.
Thanks, yeah. Shekhar, I'll ask you probably one of the important questions. You know, so it's more to do with how does the board look at some of these kind of things, right? Do they have oversight on the implementation of RegTech, and so do they look at so are they really approving of investments which comes in this field, or uh, or the approach is let's go in a graded manner, let's wait and watch? How exactly do you take some of these conversations with the board? It'll be quite interesting for all of us to understand that and hear about that.
I can tell you, I think the bank boards are, I think, the best institutions which govern the way the bank is run. And this is, I'll say, for every bank. The reason being, you have a regulator which is on-prem for around 6 months and sees your entire data for 12 months. Has it on a monthly basis, and at times I think at much better frequency. The compliances which are expected of banks are good, and the ultimate responsibility resides with board. So yes, there are executives, but I think the board becomes, since they are the ones who run the company, they becomes most important. So from that point of view, I'll respect our boards for being, first is being aware, then being able to understand the implications of various things, including the technological developments which are happening, the requirements and regulations which is there, and the compliance with respect to same by banks and by the industry as a whole, at times the reasoning behind that. And in fact, it is compulsory for the bank board to get trained as well with respect to fraud, risk management, and solutioning. And I can tell you that they are the best regulators and judges internally before I think you get measured externally. I think coming to the data and the role of I think AI, ML, I think which you touched upon, I guess boards are very, very active in having those paths. Soup tech doesn't happen only outside the bank. I think internally, I think the boards act as a soup tech, and your tech teams will generally be the reg techs, which will be ensuring that you are able to meet the requirements of I think soup techs comes in. And I have seen, I think, this role only evolving over a period and going further, only to getting, I think, more enhanced. So example, the number of frauds which are happening and the customers which are not able to. So I think the board will be even directing on the CX side that I think educate the customer. So one is what is required regulatorily. Second is what even we need to do for the customer. There will be continuous advisory as well as monitoring on that. NPS becomes an important aspect where you generally focus on. I say that it is one of the ways you are able to have the entire regulatory aspect also taken care of. And third is the complaints, and I think what goes to ombudsman, etc., which gets reported. So from all angles, I guess I think boards becomes one is most efficient, effective, as well as knowledgeable soup techs which are within the organization.
Thanks, Shekhar. I can completely resonate with that. So again, talking from an NPCI perspective, even our board is extremely active on some of these things. There's a separate complaints dashboard which is presented every time, and all the important projects related to regulatory requirements are separately tracked. So that's the kind of oversight which board has. Interesting point which you touched upon, Shekhar, on frauds, right? Ramesh, I'll just come to you on this. I know, and I think everyone in the room here knows that probably HDFC has one of the best fraud risk management numbers across across India, and in terms of being pioneers in that field. So to say, implementation of a lot of things such as PRM, which happened long back in 2005 or so, and others were looking at batch processing type of approach. Now again, I understand, since I'm privy to some of the developments in HDFC, that you're migrating from PRM into another system specifically for UPI, right? So I think when it comes to taking some of these kind of big decisions, so what do you look at when you look at a particular vendor? Do you go with the new technology, or you just go with the existing one because you're comfortable with that? Because at the end of the day, you have to get it first time right here, right? Whenever you get into any vendor for any of these kind of developments. So how do you manage this? It's a pretty complex ask. From outside, people see only the success, but internally you go through a very arduous task of right from vendor identification to ensuring that you get it right, and particularly when you embark on something really as big as a new system for UPI.
No, I think it kind of links to the question that you put forward. For example, fraud today can be only driven by AML. There is no other way for a size and scale at which banks like us operate. I mean, fundamentally, you can't put rules. The rules are good enough to that extent, but beyond that, it's kind of very different space now. So if you look at it the way, again, we do this more than, I think, looking at a solution, upfront in terms of which vendor partner to look at, or what kind of, platform to look at. What is the design construct? Actually, you have to come back to the design construct. Take UPI is a good example that you get fraud. The way UPI frauds have to be managed is extremely different from any other kind of. So take simple example, just kind of elaborating, because UPI is quite hot topic and the number of transactions are very different, right? So today, if you look at it, UPI fraud monitoring starts right at the device level. I mean, that's the first point of port of call. You are actually inside the device of the customer. So that's where it starts. So it starts with fundamental stuff like, can your app be completely compliant? Can it be kind of skimmed up and kind of replicated and all of that stuff. Then there is a series of signals that come in, like you said, whether it's in terms of geolocation, IP, type of phone, so many of the other signals that come in. That's basically the adaptive authentication, and you have to really adapt to that, right? I mean, today the big techs, for all the wrong things, they do this very well at scale, right? Every time there's a small change in your behavioral pattern on your iPad, you are immediately kind of prompt up. In fact, banks used to do that. HDFC was one of the first banks that used to do step-up authentication, if you remember, much earlier than that, right? But the game has changed significantly. The kind of behavioral patterns you're looking is very, very different, right? From the way you operate a keyboard to the way you kind of look at it. Then comes the transaction monitoring, which is the correlation. And that's a very different game today. And I'll give you a simple example today. Earlier, you just could do a simple transaction velocity check and you will be happy with it. I mean, simple stuff, debit, credits happening beyond a certain velocity, simple rules to play with. Today, the game has so much changed that you are in a situation where you have to look at the kind of patterns of the fraud. You get things like first a mule account would be opened, on a credit side. So it's a credit account, and the transaction monitoring is happening on the debit side. So an AML system, effectively, that's onboarding, and the transaction monitoring system have to speak to each other. Otherwise, your fraud management cannot be complete. So what we normally follow nowadays, and that's the change that we are doing, is we first looking at the entire process end to end, saying where are the linkages, and then the behavioral linkage. And then you get an ecosystem of solutions, so to say. So it's bit like first you get your house ready in terms of what you want, then the technology is a mirror. So there are platforms to look at adaptive authentication, there are platforms to look at behavioral biometrics, there are other platforms to look at transaction monitoring. It still doesn't end. Then the credit teams then need to stitch it together to be able to really then fine tune. And that's the knowledge, to my mind, that's the biggest pain area. More than the tech solutions, the fundamental knowledge that the risk management and fraud management teams carry over a period of time and how that gets codified into the platform. I think, and those are the parameters in which, so we are, for example, of the entire new system that you spoke about, we are completely looking at from this angle, saying how do I link up all these dots and basis my knowledge base of last 25 years, how do we then bring that into a modern platform, and then you start narrowing down on false positives and really go after the cases that you look at. And that is true for every RegTech project today. That's the real. RegTech projects have become, in fact, if you ask me, they're the most AI/ML-led projects today. People, we tend to look at it more the marketing and the cross-sell and all that. But in banks, risk management and RegTechs are the fundamental, users of modeling actually, and various kinds of modeling. So I think the space is far more, I think, changing in this area. In fact, the adoption is far, because the need is there. Unlike in a marketing space, which is very crowded, you can get hundreds of platforms. Here, in the sharper focus, the ability to have a domain knowledge is also very critical. So it's a very evolving space to my mind. And like I said, never put the solution in front of a platform or a product, but go with the process and then you construct a solution. That's how we're looking at this whole ecosystem.
Thank you, Ramesh. That was really helpful. I think we are really running out of time. Maybe I just ask one question to Ravi, and with that, after that, we can probably open up to the audience for any questions. So Ravi, I'm sure you also work very closely with the regulators, and at NPCA we also do. So one thing which the regulators has always been thinking on is to look at how can they have a diagnostic approach, predictive approach, and followed by a prescriptive approach, right? So how do you think today's regulators are enabling themselves on this front, by using technology?
So the problem is that everyone is in catch-up mode, right? And it helps if some of these things are thought of when we, build things. So we run a national payment system. We were able to design it from scratch. So a lot of the RegTech part of it we were able to build in, but that is now 7 or 8 years old. And actually the technology has moved on. In 7, 8 years, tech has moved on completely. When we built it, people used to look askance at us at putting it in a tier 4 data center instead of our own office. Tumhara server kahan hai? They used to ask us. And now they don't do that anymore. But now if you go to a bank and say we are in a tier 4 data center, but we are not, they say, no, but where is your AWS strategy? Where is your Azure strategy? Where is your Google strategy? So I think the same thing is happening on the regulator side. My experience with the Reserve Bank of India is that I think they are unfortunately in catch-up mode most of the time. It is very rarely that new payment products get built. Like UPI is a great example. We built one, the IMT system. There's another one that we are building, where we have now managed to work with the regulatory and compliance organizations and the banks that we work with to try and make sure that some of these queries are put into place. The problem is the quality of data, right? Especially for prescriptive, call-outs to say that, predictive call-outs, where there is a possibility that something could go wrong and there is an alert mechanism built in, I think that most systems are unfortunately woefully inadequate for that. And to the point that you raised earlier about NLP, that's where you need to look at unstructured data to try and see if you can come up with some kind of a predictive method. Like, Twitter feeds, social media feeds, WhatsApp feeds, you need to be able to look at that in terms of interested parties to try and predict. I think in a mechanistic environment like payment systems generally are, where it is quite predictive, prediction is less of an issue. But where it is more open-ended, like when you're lending, where you're onboarding customers, there it is you need to do something more unstructured. And I don't think there is any regulator, let alone the Reserve Bank of India, who is prepared for a predictive approach on how to generate alerts on this.
Thank you, Ravi. That was really interesting. While always the approach has been to have a to always been an approach of catching up, right? But I still feel that amongst most of the regulators today, the RBI has been really active and in the forefront, right? While the some of the regulations which they come out are really thought through, and they do a lot of industry engagement as well. I think we are completely out of time. Probably we might have. Yeah, sure.
So, thanks, gentlemen. Thank you, gentlemen, for that insightful session. In fact, some really interesting points coming out of the panel this morning. Shekhar spoke about the fact that trust, safety, security is key, and how legacy and new systems should feed off each other. Ramesh spoke about the need to think differently and how stitching together the available intelligence is as important as creating new ones. Ravi spoke about the fact that the evolving landscape, localizing Indian data is key for Subtech to gravitate to the next phase. Kunal spoke about the fact that regulation has added complexity, but it has been beneficial as it manifests as trust, which the customer ultimately wants. Agnish spoke about the importance of a controlled boom and the creation of a sandbox that helps the ecosystem to use it to their advantage. So really interesting points coming off the panel this morning. Unfortunately, we are short of time, so we will not be taking any questions. Apologies for that. But thank you, gentlemen, and take care of yourselves. Have a great day ahead.
Thank you very much.
Thank you.
Thank you.
La noche no se duerme.
For being with us this morning. The next panel discussion is on building next-gen banking experience with emerging technologies. And to moderate the session, we have Prasanna Lohar, who's the Director, Association of Emerging Technologies India and CEO, Blockstack. May I request Prasanna to please come on the dais, please. Prasanna will be speaking to an esteemed panel comprising of Anil Kuril, who's the Chief Technology Officer for Union Bank of India. Anil, please. He will be joined by Riju Ray, who's the Chief Business Officer of IDFI, Baldor Technologies. Welcome, Riju. Amit Saxena, Chief Technology Officer, RBI Innovation Hub. Welcome, Amit. And Hitesh Sachdev, Head Startup Engagement and Investments, ICICI Bank. Welcome, Hitesh. I now have asked Prasanna to take it from here, please.
Hello.
Yeah.
Hello.
Yeah, wonderful. So, very good morning, everybody. We have an eminent panel, experts from bank, expert from RBI Innovation Hub, startups. So the topic is quite relevant, right? The building next-gen experience with emerging technologies. And the way we have seen banking, which was happening last 20 years and before 20 years, and the last 10 years, every 10 years we have seen multifold innovations coming in. And if you look at last 10 years, it was quite innovative banking we have seen, at least in India and outside of India also. Effort from regulators, governments, and since last 6-7 years, efforts are being from Fintech industry, as well as banks also now embarking on their journey to adopt emerging technologies. And in last 5-6 years, if you see large banks and some of the tech-heavy banks are on the stack of API banking, fintechs, some of those experience on cloud. We have Union Bank come up with a metaverse experience, right? We have ICICI Bank who has done fintech banking, API banking, world-class API banking portals. And we have Amit from RBI Innovation Hub, where their role is quite crucial considering the consolidated efforts around innovations across the aim of India, like inclusion, innovation, and the impact. And we have a startup, Riju from IDFI, looking forward to bring on better KYC experiences for our customers. If you see the banking which has happened from a traditional banking where we have had a brick and mortar or a model or a contact center things, and followed by we are in the era of digital banking where we have a mobile banking apps or internet banking, which is becoming now traditional banking. And now all of a sudden we are talking about next gen technologies like AI, blockchain, or big data, and predominantly this technology will take banking in an intelligent era. And down the line, millennials are looking at various other technologies like metaverse or 5G or wearables. So that will be an autonomous banking where we may not have branch models. So, but this is all happening with all research and so much efforts of banks and along with the regulators and in collaboration with the tech companies. So it's very, very important to adopt technologies, and the way we have seen why banks are really adopting technologies, maybe for better customer experience, to reduce the cost, operational cost, or largely to bring a new business models. So we have Anil Kuril, CTO Union Bank. So sir, what's your view around why do we need technology aspect, and why all of a sudden last 2-3 years almost all banks are looking at a technology as a platform or a technology as a radical change agent in the journey of all the banks? Yeah.
So thank you, Prasanna, and good morning to each one of you who are present here, and I welcome all the panelists here. When we are talking about the technology, I think technology is there since inception of a mankind. Whenever we started even the civilization has started, when technology came, technology means when the wheel came first time, then your civilization has started. Now the technology, when today we talked about, obviously we are talking about the IT technology or information technology, which has revolutionized everything, changed everything. Now, the change which has happened during last 2 years after pandemic or during the pandemic, we are seeing that IT has become a pervasive at every place. We as a customer, we as a entrepreneur, we as an enterprise also. In fact, I was going through one of the survey. We say that as a customer, as an individual, our behavior has dramatically changed during last 2-3 years. Whenever we are trying to buy something, we are going to the Google or similar kind of a search. We are trying to identify those products. We are trying to identify who all are providing those things. Then we are comparing it, and then only we are buying it. Which means that as a customer, my behavior has got changed. I am no longer relying on the people who are actually earlier I was going there. As a customer, I am trying to rationalize the things which is the best for me, and I should be buying. Now, all this has happened on account of pandemic and the technology which has pitched in to provide the ease of life. As a customer, what you need? You need experience. You need a ease of doing the things. You need a product which are meeting your requirement. Earlier are days where the product are there, you have to take it or leave it. Now it's no more there. So in terms of our behavior has completely changed. Now banking, is it a different? No. Because finally we as a banker, we need to provide the services to the customer, and customer of whatever they want, and there the technology is coming. So whether you are talking about the behavioral aspect of a customer or we as a banker, technology is there, we have to implement that in order to provide you services. Now during last 2-3 years, we as a bank has completely changed, or in fact every bank has changed, every bank has tried to bring newer technology so that we provide those kind of agility which a customer are needing it. So whether it's adoption of a cloud, whether it's adoption of a newer technology, whether a video KYC and all. So those things have actually brought the revolution in the entire banking space. And as a customer, you are getting those things from the banks and whichever segment you are talking about. So we as a banker or as a common user also, that is how the entire thing have changed. And we are not immune to those kind of a changes, and that's why as a bank, we are putting all those technology which makes your life easy and makes our life also easy for this. Thank you.
So wonderful. So I think every bank or every regulated entity has its own orbit, like private sector bank or a public sector bank, cooperative banks, and they always look at how they can move from one orbit to another orbit with the help of people in the organization or adoption curve on technologies. While doing this, there has to be some regulated enforce, right? I think yesterday we heard Honorable RBI Governor, he spoke a lot about what's really happening, and we feel that we are blessed with such a nice regulator and India, and we look at how India will set a lot of examples, the way we have already set examples like UPI or Aadhaar. So we have Amit, who has run bank for 5 years as a CTO at the largest bank, State Bank of India, and now he's at center stage leading CTO at RBI Innovation Hub. So Amit, the way, what is the role of RBI Innovation Hub to bring the way every bank is their adoption curve or adoption of technologies, and at the same time you are at a larger vision, what is that India is looking at as far as use cases are concerned or fintech adoption is concerned? Yeah.
Yeah. Good morning, everybody, and thank you very much for having me over here. And how we look at it, see, technology is an enabler for business outcome. It's not a panacea which would solve every problem what we have in our BFSI ecosystem, or how we look at it. So obviously the technology adoption would increase, and which we have seen a paradigm shift, the way banks have started embracing technology. Reserve Bank Innovation Hub works toward bringing in collaboration among banks, wherein we should be able to bring banks and the fintech together, wherein all the fintech solutions should be presented to banks in a manner. At the same time, we are also working to see that there is a synergy built in the ecosystem. Not every bank should be trying to put in their energy to look at the same solution, because it's taking up energy both from fintechs as well as banks itself, wherein we want all the banks to collaborate together. We are working with them to see that kind of a collaboration is built into the ecosystem. And as we move forward, you would start seeing that kind of innovation happening. Now, Anilji is over here, and Union Bank have launched KCC yesterday along with Federal Bank. Mr. Governor have talked about it. That's a collaboration approach, what we are talking of. Same solution, two different banks, and both of them have launched. And along with that, the state governments. So the Tamil Nadu government have launched it. Madhya Pradesh would be doing it, and one of the northeast states would also be doing it. At the same time, we also are very passionate about women entrepreneurs to be given a stage in our country itself. And so we run a Swanari program wherein we only selected, or we won't say selected, we would say we got the best of the fintechs which are led by women entrepreneurs. That's a program which is a separate thought process altogether, right? Because if you know, Prasanna and all the panelists over here, 80% of the women in our country does not have access to any kind of loans itself. They are dependent on to, on the better half itself. We want to change that. We work on a last mile solution, wherein we want to take fintech solutions led by women entrepreneur who should be able, to kind of give their loans. We have got some of the new programs which would be coming up on that region. At the same time, the new age technology, what Prasanna you have put across, that what we should look at, AI, VR, ML, right? So they have been talked through a lot itself, right? But at the same time, we would see clear adoption of those technologies by banks itself. Like Union Bank have done a great initiative on metaverse itself. ICICI Bank is working on to some of it. But at the same time, see, metaverse is not going to work with one bank alone itself. It has to be adopted at an ecosystem level. Otherwise, you provided a virtual experience by one bank, the other bank who is not well connected, then you don't get the benefit out of it. Richu would talk about how the fintechs are going to gear themselves up. One point which yesterday FMM have also said, and the governor sir also said, is about the compliance and regulatory requirement of BFSI industry. And we use such forums to pass on this message to all the budding fintechs, and you don't get, overwhelmed by the questions which bank put across to you. Because banks deal in one of the most important commodity in this world, which is called money, right? So obviously they have got a compliance requirement, right? And the better and quicker you learn about the compliance requirement and the risk assessment of your solution, your adoption rate would increase very well. And among different banks, don't try comparing one bank to another bank. Different banks have got a different risk appetite. It works like that, right? So if one banks need 3 steps to have a compliance requirement, a larger bank would have got a different risk appetite, right? Because they have got a different customer base. So over there, you have to work to see that your solutions are having a compliance and risk assessment done properly. Thank you very much, Prasanna.
Yeah, I think wonderful, and you touched upon the last angle, compliance and regulation, and the governor sir also spoke highly around that, considering lot of guidelines are coming, and this lot of guidelines are coming is good for a larger vision of Indian fintechs, right? So that's how I look at it, and furthermore, this regulation will really help to bring right innovations for considering data integrity, security, and many other aspects. While technology is there, we need to see how technology get adopted for a right use cases. So I think moving on. Hitesh, I think Hitesh is someone who has been part of a technology, is part of a fintech alignment at ICICI Bank and investments. Such a large experience, bank chain which was started, one of the experience to bring all banks coming together, and the formation of EBIC, which is the Indian banking blockchain infrastructure company. So Hitesh, you have seen larger role of a blockchain or AI, or you are interacting with a lot of fintechs who are driven by tech. So how you look at API banking of ICICI Bank is helping to adopt the right technology for ICICI Bank. And I think there are a lot of things happens within ICICI Bank also to bring the culture, right? So how it is really helping overall for bank. Yeah.
Thanks, Prasanna. So, any bank which wants to grow, I think there are two methods, right? One is keep growing organically in terms of build your own digital channels, build your branch network, and keep acquiring customers, through some of these channels. The other second method is that you create partnerships, and in those partnerships you create a win-win situation wherein both the partners bring something on table which is being valued by the customer, and ultimately both the partners also gain by offering those services to the customer. So the second model where if you want to partner with anybody, whether it is a fintech or a tech giant, the core is that commercials and other negotiations don't take much time, but when it comes to the technical integration, it's the most cumbersome process. And most of the partnerships, fail because of that. And also, the attitude in terms of today, if somebody is, doing a transaction on platforms like, let's say, Amazon, would he leave the Amazon and come to a bank's platform for doing a banking transaction? Or you offer banking on the Amazon's platform where in a single journey, everything gets completed there and there itself, and the customer experience is superlative. So if you want to do that, I think API is the only way. If you want to create more and more partnerships and tap that route for growing your balance sheet, growing your business, there is no other way except to build robust APIs. And it's a journey itself, right? I mean, in our early days when we started with APIs, we thought about our partners who would use our APIs, how do we make it easier for them to use our APIs. When we built our developable portal, one thing we did was we documented those APIs very well so that every time, there is no confusion. We laid out the standardized, formats for APIs and published it. We also created a lot of dev tools for people to use those APIs, consume those APIs easily. And apart from that, we did some sample product journeys, demonstrated on the API portal itself that how you can use these APIs and how you can create differentiated products using these APIs, right? So, and that has helped us. And over a period of time, we have constantly improved on a lot of those, things. Our idea is if you want to really build an open innovation platform, I think your developer portal or your API banking has to be at a level where it doesn't require any intervention from the bank. It should be plug and play, more of a plug and play model for any of your partners. So that's one approach we kind of followed, and I think it's working well for us. Second aspect, I think you talked about culture.
Yeah.
So I think most of the time when you ask people, what is the constraint? So either, budgets are the constraint. Do you have financial constraints? Technology is a constraint. And most of the time, you will get an answer that budget is not a constraint, technology is not a constraint. Constraint is, people's resistance to change, right? And that keeps holding on so many of the innovation, and that's where, as a bank, we thought that if we want our customers to be digital and for them to be digitally savvy and adopt digital, first we should start with our employees, right? All of our employees should be digitally savvy, and that's where we started a campaign within the bank. Like we all go to gym, we do yoga for physical fitness. We have launched a campaign for digital fitness. Are you digitally fit? And if you're a digital fit person, then you will be able to communicate better with your customers, help them to adopt, digital channels, digital initiatives, which, bank is rolling out every day. So under that, we have, created series of learning modules And it's very intuitive. Yeah. And most of the employees within the bank are liking it. So I think bringing that culture change is the most important thing. And uh, I would say that it is always like no, nothing works, if it is mandated, kind of. It has to be done in a manner that it creates a democratized way of wholehearted participation, right? So I think that's working for us.
Yeah, I think that's the story for every bank. Like if they want to adopt any new technologies, say example, robotic process automation also, you need to take along that person who is doing that operational work and make them champions around that. I think it's a time of or a matter like every bank is doing lot of a digital dexterity or education kind of exercises in their respective organizations so that as a whole ecosystem they know how do you adopt new technologies. I think we heard from all these experts. Now we have Riju, who is part of a tech company and chief business officer at IDFI. I think during 2019, SEBI has said, ki, okay for video KYC, followed by RBI also said, yeah, we'll do that. And during pandemic, I think when customer was not able to visit branches or your branch officer are not able to visit any of the customer for a KYC collection. While we have seen KYC journey from paper to e-KYC or India stack based UIDI based KYC, I think that has solved a lot of things. But during pandemic, we have seen how do you really justify the same customer? Like where video KYC was a recommendation from a regulator. I think a player like IDFI has really helped many banks. If you see the overall journey of KYC, right? Today we have CKYC, e-KYC, video KYC. What next to ease out the customer? Like how technology like AI, ML is helping to build on, or how blockchain kind of a technology will come, a decentralized KYC or a KYC available anywhere and it is available based upon customer consent. So how do you see the future of KYC while you can speak about what's really happening at IDFI's house to bring more innovation for a banking ecosystem? Yeah.
Thanks. Thanks, Prasanna. You and I have been at the forefront of this, and I think been quite a journey with the help of the regulator, obviously, to bring this to a new age of sorts. I actually feel that we're at the cusp of another sort of transformation that's kind of also begun. Four things that I see that are happening. First is that it's become fairly paperless, and it's not really a case where people bring up documents for identity anymore. In a way, India is showing the way to the world. Documents have become digital. Digital documents have disappeared. They become databases. And so identity in general is about collecting information from databases. And it's about obtaining it in a way that you can correlate things and figure out discrepancies and gather information from these sources together to compile somebody's identity. It is not exactly about presenting information as a user so much anymore. That's a big seismic shift, I think, that's happened. The second shift that has happened is the importance of authentication. So we think about video KYC. What's really happening here is the user is presenting himself in a video and demonstrating he's there, right? And he's giving his consent also at the same time. Now, authentication has to be probably not just about opening accounts. It actually has to go beyond it. So if there are some transactions which are quite sensitive, things are of a very high size, authentication needs to be a way of life. It also has to be something that is seamless. It has to become, I think RBI talks about the UIDI 2.0, where they talk about how face match and liveness might become part of their suite now. Really, it's about updating ourselves from onboarding to embracing authentication across various areas where somebody might be defrauded because somebody has stolen your account, those kind of things. We have to get very wary about it. The third thing is about consent, and you mentioned that as well in your introduction. And on consent, and I think this is an important part of democratization, you may very quickly lose control as a user if people start collecting information from databases. Now, account aggregator is here, there's information in so many sources, like UIDI. If the user is not in control, if he's not giving consent to you, that's a very scary place to be. At the same time, it has to be informed consent. It's not like angutha de diya and ho gaya, right? So you have to have a situation where consent is informed, where you're auditable as well. So if you've given consent and then you've gone ahead and done something else, how do you audit that? So these are areas where we really have to make many strides forward. And the fourth area, which you're referring to, and again, Prasanna, you're showing the way to the world in a bit, is actually about the use of blockchain and about decentralized technologies. I am actually on the fence on this. The way I see this is that it's beautiful in a way how one can collect information through consent. But would the regulator understand in terms of would it be okay to have identity spread out in a manner that it becomes very difficult to audit? So there's a little bit of, I think, a curve of sorts where we have to get people comfortable, work in a collaborative manner, that we overcome issues of audit and issues of consent together, right? For it to become something that one may be able to adopt. In fact, I think, Prasanna, you probably want to say a few things here about blockchain and its role in identity. So what do you think about it?
I think, so this is what happens, right? So in middle of a discussion, it's quite exciting. I think blockchain is a foundation technology, like internet is a, so while we spoke a lot about internet and we have seen the internet has really evolved and given lot many use cases to the banking, not only banking, but many other ecosystem. I look at the blockchain and other peripheral technology like 5G or metaverse will bring on lot of path-breaking use cases. And it's really happening. And I think at least by now, regulator, by now banks, by now service providers, by now governments are investing heavily in blockchain and relevant other AI and other technologies. Blockchain is not an answer for every use case. It has to cohesively work with in the periphery of UI and in the back end and in between whatever process you want to automate. And depends upon a business case to business case. I think eventually we will also learn how do we adopt these changing technologies. It could be in payment, the way our Honorable Finance Minister announced central bank digital currency or digital rupee of India, how it can come. So blockchain could be one of those technology. While some countries not adopted blockchain, but eventually blockchain brings lot of a trust and removes lot of settlement and many other manual areas. So I think it has a long way to go. It's just a beginning and good to see that adoption is already started. So we'll not be surprised in 2030 we'll talk a lot of use cases, but not a blockchain. So certainly I think I'm seeing some gestures from our organizers. So I think we'll take just a last line. Hitesh, Anil sir, Amit, you just want to add any of your inputs, couple of inputs. How do you really look at technology adoption? Technology adoption for banks at every level, right? On the UI side, something like mobility or wearables. In the mid, we have API banking to talk in backend, AI, big data, and all the systems. So just in a brief, how do you see startup adoption, fintech adoption, and last message from you all to adopt a better technology for a better banking? Yeah.
No, thanks, Prasanna. So again, I think there are two approaches for any bank or probably any institution, right? One is either to build inside the organization a lot of tech, and second is keep buying, right? And it's always a hybrid approach where you, and depending on the stage at which you are, whether you choose to build more or whether you choose to buy more. But I've always seen that it's a combination which always works. And for, building inside requires a different skill sets in terms of, are you a, technology company running a bank or you're a bank running a technology division, right? Most of the time that question needs to be answered. And on the buying side, I think you always have a lot of innovations which is happening in the startup ecosystem. How do you tap that? For that, as I mentioned, I think one is the culture change in terms of mindset of the banks, that how do you work with startups? Because most of the time startups, the argument would be that they use open source. They might not exist. Some of them might get closed down. Some of them would get acquired. How do you work with them? So those are a couple of challenges which banks have when they work with startups. But having said that, the kind of innovation, the agility which a startup brings on table, I think there is a definite case for banks to work with them.
Yes.
And we as bank have been working with startups for now long time, and we have seen the results. And obviously it started with a lot of concerns, but like, we put our head on our heart and said all is well, all is well, and started the journey. And I think the results are fantastic. So I would urge that, please, kind of to all the, banks or organizations that, we need to create that framework of innovation where you keep doing pilots, POCs with the startups, and some of the use cases will, do wonders for you. And that's had been our experience.
Yeah, thanks. Anil sir, please.
Yeah, thank you. So when we are talking about the next gen banking experience, there are two components. One is the experiential component, which is a customer facing side of it. Second is a inside. If you are not building the right kind of architecture within the organization in terms of a technology, if you are not putting the right foundational technology, then probably that building is not going to remain for a long. So in order to create the strength within the organization, there are a couple of things which other panelists have talked about. Building a core technology, so whether adoption of a cloud, adoption of a API banking, these are some of the technology which probably as an organization you have to look it and adopt those things. Second is a culture. When we talk about the bigger organization, obviously we have a lot of issues in terms of a adoption of a technology, resistance to change. So those cultural aspects probably as an organization, each one of us has to look into, and we have to create an environment where technology is getting adopted, agility is bring into the operation part of it. Third part is when you are looking at the partner, obviously as a customer likes to have a most innovative experience. However, you as an organization, you have to look for that, what is the strength in those technology, whether they are good for your customer or not. If you are doing those kind of a evaluation ab initio, then probably you are at the right place with the right set of a customer. So these are some of the things, probably if you are taking care of those things, so you will be having a experience which customer wants, and you will be having an inner strength to sustain those things. Yeah, thank you.
Yeah, wonderful. So I think we spoke about, rather you spoke about every individual bank's journey and how banks are really adopting. And there comes Amit and says, let me come and, rather RBI Innovation comes and streamline that whole adoption of a fintechs and with a lot of processes. So Amit, you are last.
Right, and let me say this disclaimer, which I forgot to say earlier, right? All views are personal, and they do not represent Reserve Bank of India Innovation Hub or the regulator. So prior to RBI, I was running the largest bank, and over there we used to say we are a technology company which provide banking as a service. Now, as the regulated entity, now we say we are a technology enabler providing banking ecosystem, kind of support what they need. That sums up how we look forward towards whole of this ecosystem. But at the same time, you would see that technology have become much more engraved in our day in, day out life itself, and you would see that this would keep on, kind of enabling our life. Now, I don't think so. Our day starts with WhatsApp and with WhatsApp only, right? In between Tinder and, all such things happen, right? And I'm still learning, right? So both my kids are teenage daughters, and I'm still trying to learn what's a new technology. They are my enabler to keep me upgraded with technology, and it's a marvelous journey. So what you would see that our country would be at a forefront with respect to technology adoption, which we are very keen about, and banks have started working in a collaborative manner. And as Riju said about the technology enablement by fintechs, that's something which is which we have not seen in last couple of years happening anywhere across the world. India is at a cusp of that we would go a very long way when it comes for a technology adoption. Thank you very much.
Yeah, your last views, Riju. Yeah.
I want to actually talk about a story that Amit spoke about, if I may. I want to start with how we need to go closer to the users and experience them. And you spoke about Tamil Nadu and Karnataka and how banking happens there on the ground in terms of the languages that people speak and how people often forget, right? that you need to visit a branch and experience how the common user, is facing troubles, right? It was, I think that if the session today is about next-gen banking experience, actually we have to start with that experience, and that starts with the fundamental of seeing what the user wants and studying him and innovating with him and adopting. And I think a basic cultural construct here also is about embracing change. And Hitesh, you spoke about it as well. ICICI, when I was having a side chat with him, he mentioned how they have devolved responsibilities to so many divisions to actually take decisions. And I feel that it's about breaking new ground and disrupting things sometimes, taking those risks and allowing people to go ahead and do it, and not stopping them by control at the top. It's not like top down anymore. It has to be a lot more go ahead, break things, work with the end user, figure things out. Also, I think that there's an element of culture, which is definitely, you mentioned about cloud in UPI. I mean, it's fantastic that you're talking about cloud adoption and how far you've gone with metaverse. It's just the world has changed.
Yes,
I'm sorry, I didn't mean it I'm saying in a very appreciative way. It's amazing how cloud technology, you are advocating it.
Yeah, yeah.
Yeah, yeah. So that day has come. Yeah, so using SaaS, using cloud technologies, making sure there's a single source of truth, stopping spreadsheets everywhere, ensuring big teams of reporting, people writing reports go away, ensuring that you embrace these new technologies. That starts also from the top. So now I'm going away, feeling very privileged in this company here.
So I think the way we see banking today is not going to be same banking down the line 3 to 4 years. And all effort goes to the every individual bank, people in the bank, management in the bank, the kind of culture they are building within a bank. Then which are those processes are coming? Say example, we have a UPI or account aggregator. Down the line, we'll have an account aggregator or ONDC. It will change the way we do banking, not only for retail, for SMEs also. Post-process, we see technology adoption. You spoke about architecture, along with architecture, API banking. Which are those technologies? We have seen mobility, cloud, which is traditional, which is going to come, or rather, it has been already adopted, like AI, blockchain, 5G, IoT. IoT will be tomorrow's customers. How do we really onboard that? So while we do this, we need to make sure that do we have those right set of partners, regulatory guidelines, is it around with the regulatory framework, compliance where we have RBI, SEBI, IRDA in Indian context. And it all boils down to the customer forefront, right? Customer is ever changing, and customer keep on asking the expectation. They learn from other industry and come to this banking industry, ask for the same kind of experiences. And it's good to see that how ecosystem is really ready for a next-gen banking. So thank you so much for listening us along with Amit, Anil, Hitesh and Riju, myself Prasanna. Thank you so much. Yeah.
Thank you, gentlemen.
Thank you, Prasanna. Thank you.
Thank you, gentlemen, for that really engaging session. I think some really nice points coming out of the way. Anil spoke about the fact that the pandemic has changed the purchase behavior and how rationalization has actually manifested itself. Amit spoke about the fact that collaboration and synergy is built into the ecosystem and how RBI is focusing on women entrepreneurship, which is a key going forward. Hitesh spoke about how partnerships are important for growth and people resistance to change is a challenge, and how at ICICI they've been able to digitally create a program that's called Digitally Fit. Vriju articulated the fact that we are on the cusp of a transformation and having seen a seismic shift in the mechanisms of identification, and how informed consent and audit is an integral part of the next phase of innovation in this space. Thank you so much, gentlemen. Take care of yourselves and have a great day ahead. Yeah.
you. Am I audible?
Hello?
Hello. So we'll get a few minutes for people to settle.
Yeah, that's right. Let's wait for a second. And as always, the best seats are in front.
So guten Morgen, Stefan.
Yeah, danke schön. Thanks.
So to surprise you all, we're going to conduct this session in German. Stefan is from Germany, so we'll just to make it interesting. I hope that's okay with everyone. So I'm just kidding. I only know 2 words in Germany, Guten Morgen. So we'll come back to
No, for sure.
English. And friends, colleagues, today in our session we're going to spend time learning about PPRO, an organization that Stefan represents. He's the Chief Strategy and Growth Officer there. And PPRO is doing a lot of unique, interesting and relevant stuff in today's time and age. And we're going to spend next half an hour learning about PPRO, about how Stefan feels on the digital trends, what are his views on India and collaboration with NPCI International. And I think it's going to be a very, very interesting conversation. So, Stefan, let me start by asking about PPRO. Like, what's the secret behind the name PPRO? Is it an acronym, or is it something that you would like to talk about?
Yeah, there's no secret behind it. Payment professionals, right? And at some point in time, I think we thought we have to change the name, but we never got to it, right? And so the company is existing now for 10 years and still call ourselves PPRO. So no secret source, right?
So give us a bit of an overview around PPRO, the business model that PPRO deploys, and who are the key institutions behind PPRO in the current frame?
So we're solving actually a super important problem, right? So we're giving access to roughly 150 local payment methods across the world, right? So our customers, PPRO customers, are payment service providers, are banks, are fintechs, right? That want to give merchants the ability that consumers can pay with the payment method they prefer, right? And that's really the problem we're solving since 10 years. We have roughly 150 local payment methods or alternative payment methods on our network, right? On the one side of our network, on the other side, roughly 120 PSPs that are working with us, right? And why is this important, right? I always get asked, why is this important? Yeah, because we as consumer have personal preferences, right? And each of us wants to pay with their preferred payment method. And not only that I have a German passport, I also have an American passport. And in the beginning, it was hard to explain to my American friends, right? If you think about global e-commerce, only 25% of global e-commerce is done with international credit cards, right? 75% of global e-commerce is done with alternative or local payment methods. And they are different, right? They're market specific, right? And if you reflect yourself, if you reflect all our behavior, right? We trust actually a payment method more than we're trusting the merchant, right? That's the reason why we want to stick to our preferred payment method, right? And to solve this, right, to get access to 150 payment methods, for sure there's complexity to solve underneath. From a PPRO point of view, not only that we're doing the transaction processing, we are also solving for the settlement. And to do this, we have roughly 450 bank accounts across the globe in 35 markets, so that we can help our merchants that come via our payment service providers or banks to settle the money that comes from the consumer. And the reason why, as I mentioned earlier, why the importance is even increasing through the pandemic, right? Because I think we all learned to shop cross-border, right? And that's another element, right, where local payment methods play an important role. Cross-border is the new normal. I think we get through this throughout this talk. And from this point of view, if a merchant wants to do business in a certain market, he has to offer these local payment methods. Otherwise, he will lose out on quite some revenue opportunities. And maybe to frame PPRO, because you were asking, Ritesh, 10 years in existing, we are roughly 600 people in the meantime, 12 offices across the globe, and really backed by major investors, right? We have major private equity investors, and particularly we are proud of having 3 strategic investors as part of our shareholder base. So PayPal is one of our investors, Citi is an investor, and JP Morgan Chase is an investor in our company. And they're doing this on purpose, right? Because they understand that local payment methods are important to drive business, and that's the reason why they invested in the company, because they wanted a company that solves the complexity for them.
So some big names there, Citibank, JP Morgan, yeah. And you also highlighted some very, very interesting facts, right, that you connect with the 150 plus, payment providers, and more than 70% of the, e-commerce is happening from alternate payments. So tell us more about your views on the digital commerce evolving globally. What are the trends that you see? What are the opportunities, existing use cases, new use cases? It'll be good for us to know.
So clearly, I think e-commerce is growing significantly, despite the fact that, for sure, if you think about the latest data, the growth was a bit of a rise, right? But e-commerce overall still grows between 10 and 15%, depending on the markets, right? But the more important part, coming back to the earlier comment, is cross-border is actually growing more than 20%, right? And I think we'll all experience this. I need to admit, I think I joined PPRO 4 years ago, and in the beginning I was struggling with cross-border e-commerce, right, personally, right? And as I mentioned, I have a US passport and a German passport. I was living in Silicon Valley for quite some time. And my daughter in San Francisco was shopping in London. I never understood it, why she has to shop in London, why she can't get the stuff in San Francisco, right? And if I think about how my behavior changed in the pandemic, right, where we all went to these large marketplaces, right, where we even didn't bother, right, where the merchant was located, right, where we looked for a seamless type of experience, and suddenly we are all cross-border shoppers, right? And I had to revise my discussion with my daughter, and I said, okay, Julia, I'm a cross-border shopper now as well, right? And I think we all became cross-border shoppers. So if you think about e-commerce overall, high teens, right, or the mid-teens, right, cross-border even stronger, particularly driven through all these marketplaces, right? What is very obvious, and we have actually proof points, and this comes back to from a merchant point of view, you have to offer these alternative payment methods, right? Because coming back, and I want to make a comment from one of our shareholders, right? Because again, I think these are the safeguards from a consumer point of view. As I was shopping cross-border while in the US, right, if a merchant didn't offer PayPal, the PayPal wallet, I didn't shop with the merchant, right? Because I didn't want to disclose my credit card information to a merchant I haven't heard about, right? I don't know where the merchant is located. Right, so really the payment scheme, the local payment scheme is my safeguard, right? And you wonder why PayPal invested in the company. Actually, the chief strategist of PayPal at some point told me, look, PayPal is actually a security company that happens to be in payments, right? So that's how they position themselves, right? And it's exactly how I'm using the PayPal wallet, right? I trust PayPal, right? Like people in India trust UPI, right? You trust your payment method, and from this perspective, I think you're willing to shop with a merchant you don't know, right? So that's an important part of cross-border. Another fact I want to highlight in terms of what we're seeing around e-commerce, in terms of what's happening, we see proliferation, right? You will see much more local payment methods evolving. And it's fascinating to see, right? I think one of these categories, for example, is buy now, pay later, If I reflect, I think 3 years ago, maybe in the Western world, we had 10 major ones. In the meantime, you have between 30 and 40, and you have a growing number. So proliferation of payment methods, right? And it's very simple, right? Because these payment methods can be very personalized to a specific market, to a specific user group, right? And that's the reason, I think, why they're not going away. And the second thing, I think we're seeing what is all important for us as shoppers, right? You see, I think that the regulatory framework is increasing, right? And I see it actually positive, right? For sure, we're a regulated entity and we have to deal with the regulatory bodies. But I see it positive because at the end, I think if you think about what's the role of a regulator, it's really to make sure that the relationship between the consumer and the merchant works out, and the money that's supposed to come into the merchant's bank account actually ends up there at the end, right? So complexity is increasing, proliferation is increasing. What is actually good for our model at PPRO, right? Right now, as I mentioned, I think we have roughly 150 payment methods on our platform. We believe, I think, if I think about the next 2-3 years out, probably I think this will increase to roughly between 300 and 350 that are relevant across various markets across the globe.
I think the space is evolving very fast, and earlier we were talking about how some consumers go to a shop, get a feel of the product, and then come order online. Some, check it online and then go and buy it from a retail store. And I think you kind of connected with these concepts by talking about Julia and your daughter. Correct. She's 27 years old. In India, the median age is 28 years old. So, and we are a country of 1.4 billion. 1.2 billion people are connected to internet using mobile. 70% have smartphones. So what are your views on India as a market, as a consumer base for some of these 150 payment methods that you kind of are connecting on the other side?
No, I think India, and this is really, I think, also the relationship we are creating right now is super important, right? So we have, again, I think we have roughly 120 PSPs on our platform right now, and really brand names of the industry, the Stripes of the world, the PayPals, the JP Morgans, the Citis, the Mollys, with roughly 1.2 million merchants behind, right? And if you think about what happened over the last 2-3 years in particular, driven as an inflection point by COVID, right? We have lots of merchants that want to sell to Indian consumers, right? And they fully understand that you only can sell to Indian consumers if you offer the right payment methods, right? And this comes back to this localization, correct? Yeah, correct. So I think from this point of view, with the sheer number, right? India is a super important market for our PSPs, right? They're asking for the merchants behind, as well as for us as a company. And from this point of view, Ritesh, I'm super excited that we have the strategic partnership and building the infrastructure that then can be utilized by the industry.
I think you're absolutely bang on. And if you look at some of the things that have really worked for us in the last few years, one is UPI as a platform. It today is one of the most scaled up fast payment platform in the world, and then our digital ID program called Aadhaar. So I think with these two we have a good combination going on. And when you talk of India, it's very, very difficult to miss NPCI and the role NPCI has played. And we often, in the organization, we say that NPCI is in such a position today that we touch lives of most Indians on a daily basis. So what are your thoughts about the possibilities that our partnership would kind of create in terms of opportunities, and how do you see this evolving in near future?
No, first of all, really, I think it's the right approach, right? What India is doing also with NPCI, right? If you think about it on a micro scale, right? We have an important partner in Europe. It's Ideal, right? It's the Netherlands, right? That has something similar, right? Not exactly, I think, what India had created with NPCI, but fairly similar, right? And the result out of in the Netherlands is very simple. 65% of e-commerce is done via Ideal, right? What would be UPI equivalent in the Netherlands, right? And why is this, right? Yeah, because I think it's a seamless integration. It's a deeply entrenched user experience, right? From a consumer point of view, that leads then by the end of the day to the decision of a consumer to use this as a payment method, right? So if I'm talking to our team, in all transparency, I said, look, what we're doing here in India is actually what we have done with the Netherlands, right, on a much smaller scale, and the magnitude of the opportunity I think we jointly have together is much, much bigger, right? Not only because I think the country is much bigger and there are much more people linked to it, but also I think this entire e-commerce involved, right? And I think we all went through COVID, and I think even as I mentioned earlier, I shop now cross-border, or I shop, right? E-commerce, I really don't care where the merchant sits, right? So lots of things have changed, and from this perspective, I'm super excited. As I mentioned, our partners are excited, our shareholders are excited, as well as our partners, right? Our PSP partners, because they are merchants that want to sell towards Indian consumers.
Thank you. So, Stefan, some very, very interesting facts that we learned today. One is, PPRO connecting to 150 payment methods, Citi, JP Morgan being the force behind, PPRO as a brand, and 70% alternate payment methods. And all this, I think, is culminating into PPRO growing, exponentially that it is. And you being the Chief Strategy and Growth Officer, I'm sure you're closest to the kitchen, or you are in the kitchen, actually, if one can say. So what's the secret behind this exponential growth? This, maybe there are a few things that we can learn, and we have a lot of fintech partners as well as other payment partners here in the audience. So would you like to unveil some of it?
No, for sure. Maybe to step back a bit, right? The reason why I joined PPRO, because I heard about this value proposition and I was super excited. And the reason why I was super excited, because at some point in time of my career, I worked for HP. And I worked for HP at a time as an internet bookstore called Amazon, right? Decided I changed the compute industry, and data centers are not necessary anymore. Everything moves into the cloud, right? And you can imagine, right, for the people that are a bit older, like me, I think it was hard to believe, right? And again, I think Amazon was very different 15, 16, 17 years ago than it is today, right? And the reason why I joined PPRO, because I said, okay, that's the same thing will happen in payments, right? I mentioned earlier, Vitesh, I think payments is getting more complex, right? There's proliferation, right? So from this point of view, there is a need for an infrastructure play, right? For an infrastructure layer that PPRO is providing with payment methods on the one side and PSP partners or fintechs or banks on the other side, right? Because the model of the past was actually that lots of these payment service providers, a Stripe or PayPal, right? They integrated these local payment methods directly into their platform, right? And that's possible, right? If you only need a handful, right? But think about right now, we're talking about 150 that's sitting on our platform. We believe, I think, to be fully covered around the globe, we need 350, right? It's super complex, right? So I think from this point of view, I think I'm super excited because I know that the model I think we're providing, right, from a strategy point of view makes sense, right? Because our partners want to focus on value creation, right, and stuff that really matters compared to an infrastructure layer that they can buy from PPRO. One comment. Second comment why I'm excited, I think is really the opportunities that evolved over the last couple of quarters and couple of years, right, after COVID, in terms of corridors where shopping takes place, right? And also relevant for Indian consumers, I think one of the key corridors we are opening up right now, also with the help of some of our shareholders, is the US. The US is not easy. As a market, because you need 50 licenses, right? It's not that you need one license for the United States, you need 50 licenses, so the license is always a big problem, in particular for smaller companies like ours. We are fortunate to have a major US bank as part of our shareholder group, and actually JP Morgan Chase will sponsor us as a license sponsor for the state. So I'm super excited about the US, and I think that's also relevant for India because it's a big corridor, right? We are very strong in Europe, yeah, so the entire European market. Another area, and this is the reason also why I'm excited about our relationship is Asia for sure. We acquired a company just recently, I think, with an office in Melbourne, right, with 25 people. So Australia is an important market for us going forward. We applied for a license in Singapore. We're in the process of a Singapore license right now, but it's an important part we need to branch out. So really, I think from a strategy point of view, we want to make it as simple as possible, right, for our partners, right, integrating into our platform with one API, with one connection, and then having the opportunity to access all the local payment methods that are sitting behind, right. So this is the key thing, right. In addition, I think there are opportunities for us to expand from a portfolio point of view. Right now, for sure, a bulk of the PPRO business is coming out of digital payment methods or local payment methods building this. I think there are opportunities in particular around risk, right, and risk management and compliance management, as well as funds flow management, right. I think we were all in a very artificial situation that money was pretty much for free. The last 2 years, this is changing, interest rates are rising, right, and there's a difference if you get a settlement today, tomorrow, or next week, right. And I think this is something strategically we are focused on, because we believe, that it's important for a merchant, it's important for a PSP, and so we're building infrastructure layers that help with funds flow management, as well as help with the increasing complexity, what I mentioned earlier, what is in principle good for all of us as consumers, right, around the regulatory framework in terms of risk and compliance, where I think we can be a support organization for the schemes on the one side, as well as for our PSP partners and merchants on the other side.
So if what I gathered is that the secret is that you deal with the complexity.
Correct.
And you connect, payment methods with the consumers and ensure compliance. So I think 3 C's, if I can say: complexity, you kind of do away with, you connect both sides, merchants and consumers, and you ensure compliance. If I think that's really, I think these are 3 things that anybody in the payment ecosystem would look for. So I think thank you for that. Now, one final question from my side. That would be, before you joined PPRO, I think you were working with an ATM manufacturer, right?
Yeah.
So from a very, very cash-driven world, how does it feel to be transitioning to a very, very digital world? I think it's a story that all of us would be interested in. I think a lot of us have worked with banks here in a very, very cash-dominant environment, and now we are into a very, very digitally savvy and digitally connected world. So I think but you have seen it all. So
no, I've seen it all, right? I think I have 2 major experiences that drive me, as well as or influenced me, and also made me to join PPRO. First of all, HP, right? And this is where I was sitting on the wrong side of the table. I always tell investors that I was sitting on the wrong side of the table. This time I'm sitting on the right side of the table in terms of really providing this infrastructure layer. And then I was part of the managing board of Diebold Nixdorf for 5 years, right? And so the change from a physical world into a digital world, right? And for sure, I think while it takes time, over time, and for sure it's also generationally in terms of how you approach certain things, right? The acceleration, the speed is unbelievable. Never thought about that this would accelerate in such a pace, right? And I can even see it with myself. I can see it with my mother is 80 years old. Even my mother's shopping with e-commerce, right? And she's using a local payment method in Germany, right? Because she trusts her bank and her local payment method, right? And even she's shopping e-commerce, right? So I think this will continue, and I think will continue to the benefit of all of us, right? Because the user experience is something very different, right? And that's the reason why younger people jumping on it, why buy now, pay later schemes are so interesting, in particular for younger people, because it's a very, very different user experience in your app compared to some of the old technology. So from this point of view, I'm super excited, right, with my experience to sit really on the right side of the table to help to drive this, because I believe it will benefit not only merchant, it will benefit us as consumers, right? Because again, I think it's the safety net, the payment method, right? It will lead to invisible payments. It will lead to a very personalized shopping experience I think we all want, right? And at the end, I think we also have to be clear, it drives also financial inclusion from a macroeconomic point of view. I think it would be foolish to believe, and maybe some Americans believed it in the past, that countries will come into the financial system via a Visa or a MasterCard credit card. Now they're coming into the financial system via all kind of local payment methods. From this point of view, I'm super excited. I'm super excited about our partnership and this prospect. Again, I think, as I mentioned, our partners, our merchants are excited about opening up the Indian market. And I think it's good for all of us.
Thank you, Stefan. Now, with permission from the organizers, if we can open it up, if you're okay, for a few questions from audience here. So, friends, we have Stefan. He's a guru in digital payments. If any one of you, want to ask a question, please, feel free. We can take a couple of questions if any. Yeah, please.
I am Praveen from Jhatpat Pay. I am TSP for NPCI, implementing FASTag acquiring nationally. So my question is two questions. One is technical, second is license. So I have worked for European Central Bank, ECB, Frankfurt, Germany, and I coded the interoperable platform. Now NPCI has the best interoperable platform, which does not exist in Europe even in today. That is something India has a credibility. Okay. And I am telling openly that we are the first country in the world to develop an interoperable platform. The challenge here is that, which I face working in Germany, working in India, the European products are promoted, sold in India, but the best product of interoperable developed by NPCI in the Indian market is not yet accepted to Europe or America. So I am talking about the reverse sales. If a big market is given to Europeans, why not the European American market is given to the Indians when they have the best technology? That is one question in terms of technology. So, and in terms of licenses, I understand it is complexity in fintech, as I have coded for European bank sitting in Frankfurt. Now ECB exists. So one common license like NPCI can be given so that an Indian company can work in different countries. There are 25 countries, Euro members, where that license can work. So is it that possibility? So these are three questions to both. Yeah.
So before Stefan answers, I think Stefan is, Pipro is an American, entity. So the European questions he may not be able to.
Same applies to America.
Yeah.
But no, I think coming back to technology, I think you have one big advantage, right? I think you can leapfrog some of the technology restrictions that are part of Europe and part of the States, right? This is what you're doing, right? And I fully agree. I'm fully with you that what you have built with UPI, right, and the infrastructure, I think it's hard to compare with some others, right? You know that Europe tries to build a digital euro, Europe tries to harmonize certain things, but it's super hard, right? Across the globe. So I was joking with investors because they was asking me, and is there any danger for your business model, right? So that there is standardization across the globe, right? And stuff is coming together. I said probably not in my lifetime, right? I don't see any standardization efforts right now between countries. I see the opposite, right? But from a technology point of view, I would fully agree with you that you have a leading edge from a technology point of view compared to what we're seeing as people in some of these Western countries.
So instead of open banking, already NPCI developed so much thing that can be taken as a copy paste to Europe, America for a lot of process standard and many things. So instead of inventing new standards, and it is very difficult in fintech, small country, small population, doing business is very challenging, 50 licenses. Yeah. So that NPCI standard, which we are as a technical partner doing in India easily, everybody, we should be allowed to work in America, especially America is more complicated than Europe to give market. They are only to take market. That should not happen.
So clearly, I think I'm much smaller than, or my influence is
not so often
much less than Ritesh with NPCI. But for sure, I think we're working with the regulatory bodies across the globe, particularly in Europe and the States, and trying to influence whatever it is. I think it's a coming together, right? It's crawl one, it's step by step, right? And regulatory bodies have to get familiar with certain models, right? If they get familiar with certain models, if you stretch a bit, right? I think you can move the needle. Don't expect a jump, right? Will never happen with Europe and won't be happening with the US either, right? It has to be in small steps, and I believe collectively as an industry, I think we can drive this.
And I think if you draw comparisons between India, Europe, and America, I think Europe and America were always heavily carded markets. It's just that we have leapfrogged from cash directly to mobile-based payments, but they have not. So every market has unique challenges, and I think regulators are going to take a call looking at their own landscape, which I think is outside the remit of both of us sitting here. So thank you for your question, but anybody else, any questions, please? I think this is the last one we can take.
I think it's the last one. Yes.
This is the last one. Okay.
Stefan, interesting conversation. This is Krishna from Novati, based in Australia. Just a quick thing. How do you address the issue of chargebacks and merchant-related issues when it comes to cross-border, and because you're sitting in between two jurisdictions here?
Correct. So
you as a platform, how do you address that?
Correct. So this is actually part of our offering, right? For schemes that don't have a native chargeback, actually, I think we're creating chargeback functionality, right? So if you think about, and maybe I simplified what we're delivering as a platform, there are multiple things I think we're delivering underneath the platform. And for example, one of the things I think we're offering is a chargeback functionality for schemes that don't have it naturally, right? Because for sure you need it, right? So I think, as I mentioned earlier, there are lots of things that are underneath that drive complexity, from a chargeback, from funds flow handling, from moving money between countries, right? Where I mentioned that we have 450 bank accounts in 35 plus countries, right? So there's quite a complexity I think we're managing, but that's our job, right? So that's the value proposition of PPRO. And again, I think chargeback is something where we're supplementing schemes that don't have it naturally, so that e-commerce can work.
Thank you for the question, Krishna. And I guess we are at the end of the conversation. Thank you so much, Stefan, for making the time. We really enjoyed the conversation, and I hope our friends in your audience enjoyed as well. Thank you.
Yeah, thank you so much, Ritesh and Stefan. We have a small gift of appreciation for Stefan. Ritesh may please want to. Thank you so much. Before we move on to the next session, maybe just take a while to thank our partners. Our country partner UK FCO, our country partner Kingdom of Netherlands, our credit score partner Paisa Bazaar, our conversational commerce partner Carix, our P2P lending partner Faircent, our VIP lounge partner Cred, and our InsurTech partner Cover Genius. Our next session, which is a panel discussion. May I request gentlemen and ladies in the room to take the seats, please. We are now getting into our next session. May I request gentlemen and ladies in the room to take the seats, please. Thank you. So our next session is a panel discussion on digital lending and risk environment today. And to moderate this session, may I call upon Parijat Garg, digital lending expert at BridgeUp, Parijat, please. Yeah. With Parijat, we have a eminent speaker panel, and he'll be joined with Rajesh Sheth, co-founder and CEO Sahi Bandhu. Welcome, Rajesh. Sanjay Sheshmani, Senior Executive Vice President and National Head Retail Assets Strategy, Digital and Excel, Kotak Mahindra Bank. Welcome, Sanjay. Bhavin Patel, co-founder Lendon Club. Welcome, Bhavin. Deepak Jain, co-founder and director Flexi Loans. And he will be joined with Anil Pinapala, founder and CEO FlexPay by Vivify. Thank you, gentlemen, and I ask Parijat to take it from here, please.
Good afternoon. May I request everyone to settle down? I think I can see a lot of people standing at the back. We saw almost $1 billion investment in 2021 in the lending fintechs in India. And with that, the kind of market that we're expecting to serve in next few years is going to cross over $500 billion. And that's going to happen at a scorching pace of 33% CAGR. And that's the kind of impact lending fintechs are making today. And not to say just lending fintechs, but digital lending overall, because banks, NBFCs, everyone is part of that ecosystem today. And these are being driven by both supply side as well as demand side drivers. And we know enough about it, but let me just summarize. On the demand side, India is seeing a huge middle class population with almost 46% households in that segment. And quite a few of them are in the urban segment as well. And in terms of internet consumer base, that number is again growing. We are already crossing 600 million internet users, and this number is going to touch over 900 million users in 2025. So all of these factors are really driving the way lending happens in the country and the lives of millions of consumers and businesses. So during the session today, with this eclectic mix of fintech thought leaders and achievers in their own aspects, we'll try to delve more into what is the kind of impact digital lending is creating in India, what it is expected to do, and how we are managing risks in lending. So with that, let me start first with Bhavin. P2P lending was one of the flag bearers on lending front, but somewhere it kind of slowed down. But we still believe with a population like ours, the potential is huge. So Bhavin, what is your perspective on P2P lending? What kind of potential do you see? What kind of impact do you see P2P lending making?
So you're right, Parijat, when you said that it slowed down from the initial enthusiastic start. So if you look at the initial starting period of P2P, that was between 2014 to 15, and it took around 3.5 years to reach 1,000 crore worth of disbursement across all the platforms. But if you look at the growth between 2019 till now, last 3.5 years, it has grown from 1,000 crore overall disbursement till 15,000 crore overall disbursement. If you look at the current annual run rate of P2P lending platforms in terms of disbursement rate, it is somewhere around 2.5 billion. And I believe by, so there were many projections by international agencies that Indian P2P market will reach 10 billion plus in 2025. But I am happy to share with all of you guys that we will reach that 2 years before that target. Wow. So that's the potential, and I believe the innovation, the way India is working towards making finance differentiated compared to the other global counterparts like US, Europe or China, I believe P2P lending is going to be one of the most prominent future of Indian lending?
That's great. Like, so we're going to see almost 5x growth in next 2-3 years. That's
Absolutely.
a fantastic number. So over to Deepak. We have seen with GST coming in, MSMEs, a lot of data has got digitized, and that has propelled digital lending in MSMEs. So what's the kind of impact that you're seeing for SMEs in particular, and maybe also looking at supply chain financing, because Flexi Loans is also leading the front for supply chain finance?
So, thanks, Parijat. So, in last few years, government has done a lot of initiatives, starting with JAM Trinity initiatives, and now with GST and account aggregator. We're seeing a lot more formalization happening on the economic front. So, if you look at the MSME ecosystem in the country, almost 50 million MSMEs are kind of unserved or underserved. Of the 65 million SMEs, which we think is a serviceable market.
That's a huge number.
That's a massive number. And if you look at this market, which is sub 20 lakh rupees of ticket size loans, almost $50 billion market is touched by the informal economy and not by the formal economy. So if you have to bring them into the formal economy, it's a massive market out there to be served, and that's the problem many of the fintechs we're trying to solve here. With initiatives like GST or account aggregator, this will become even faster for us to use technology and give them solutions to these MSMEs, because when these MSMEs want loan, they want in 24 to 48 hours, and that's where they use either a loan against gold or an informal channel of borrowing. So with more data coming to us in faster methods, and our ability to recollect that through various initiatives NPCI and others are taking, I think the formalization will happen even faster and faster. Another great thing which is happening beyond GST is the trails which UPI and other payment ecosystems are creating. So what's happening is you can tie up with a lot of payments aggregator, and with the customer's consent you can look at their payments behavior and go out and lend to them as well. So that's third major piece. And the third is the supply chain, which again most of the banks and NBFCs, they solved the tier 1 supply chain for large corporates. The long tail of distributors or vendors were not really clearly attacked or solved by this larger NBFCs. That's where a lot of fintechs like us are operating. Just to throw some numbers, in last few years, we have given loans to almost 100,000 MSMEs, pan-India, almost in 3,000 locations. 50% of the loans we give are in tier 2, in fact 60% of the loans we give are in tier 2, tier 3 towns. So it's the real impact which is happening in the smaller towns and cities as well. Our average ticket sizes are in the range of 3 to 4 lakhs. So again, it's the smaller ticket size and faster ticket loans which keep happening a lot.
Sure. So huge impact in tier 2, tier 3. And with that, my next question is to Rajesh, because you operate in gold loans, and recent RBI report said that the penetration for digital lending is under 1% for gold loans. So how do you see that opportunity in gold loans, especially since it's collateral based? And do you see more demands in tier 2, tier 3, like what Deepak mentioned?
Thanks. Yeah, if you look at the focus area for us also has been tier 3 for two reasons. One, the largest gold holding also is in tier 3 in the rural, if you look at. It's not in tier 1 and 2. And this is the market that is underserved. And it's not that they have no access to gold loan, but they all have been going to money lenders, pawnbrokers, and in the recent years to NBFCs, because NBFCs have brought in the comfort, convenience, and the TAT. But it is coming at a cost, which the consumers have been realizing now, that they can shift or make an attempt to go to a bank, where again they have their own constraints in terms of being first-time borrowers, or they have their own constraints in terms of thinking that whether bank will give me a loan. That's the role that we have been playing. So we see a huge opportunity. Just to give you numbers, only tier 3 market is close to about 20,000 crore loans per month from an overall potential, versus almost about 15 to 16,000 crore coming from tier 1 and 2. And that's where our focus is. We have been serving tier 1, 2 also, but majority of the business is coming from tier 3. We see this is going to grow hugely.
So coming to Sanjay, now banks obviously have been creating digital journeys all across, and the technology innovation though started with fintechs, but like especially private banks have caught up really well and are leading innovations themselves on this front. So what is your take from a banker's lens in terms of how this landscape is evolving? What do you see? How is the bank reacting to this situation?
Yeah, thanks, Parijat. In fact, I think banks have a lot to learn from what's happening around the ecosystem. I think banks were late starters. I think the entire payment wave taught banks that they cannot be caught napping. And I think banks have learned, and I would split the learnings broadly into about 3 categories. One is on the customer side, one is on the infra side, and on the tech and analytics side. On the customer side, very clearly, the fintechs brought in a lot of superior journeys and ease, which was a learning banks, processes, and mechanisms. Probably at times were a little more clunky, a couple of more checks needed. The second thing is, of course, newer segments of customers, could be new to credit, newer geographies. And the third, obviously, was what we keep now calling small ticket, small tenor loans. Banks are always averse to those type of loans. I think from the customer side, banks picked up a lot of these things from what's happening around the ecosystem. On the infra side, very clearly, the ability to scale without necessarily having a large physical infrastructure was as a learning there. And obviously, banks generally have had a very people-heavy, paper-heavy model. Not necessarily the leanest and cleanest there. And I think those are learnings which we have picked up with what's happening around. And on the tech and analytics part, again, the amount of various AI models which are there with fintechs to be able to take faster decisions. Fintechs generally are more agile in terms of technology changes and adapting to them. And of course, working on tech-based credit models to reduce the cost of underwriting. So I think what all these things happening around the ecosystem, banks have always been doing some of this, but I think they're doing it a little more efficiently now. And I think it's good for the industry. So I think a lot of learnings from the fintech side, but banks are using their own learnings now to put this in place in a much more probably cohesive manner.
Certainly, I think good for the industry, certainly. You touch upon AI, ML, data analytics. So question for Anil is that since you're an unsecured loan, and that's where the biggest headway has been for lending, underwriting is the key. And we keep hearing that we move to completely AI, ML-based underwriting. What's your take on it? How much is it true? What is really the secret sauce that's behind the scene?
Yeah. In terms of underwriting, I think the principles have always remained the same, right? Like the more we've changed in terms of technology, the principles of underwritings have always been the same. Your first base is to eliminate fraud. Second is to make sure there is an intent to repay. Third is to ensure there is an ability to repay. And fourth, people don't say it aloud. You want to make sure there is your ability to collect on the loan, because that's the most important part, right? To give out money is easy, but to get it back is the difficult portion, and that differentiates any good lending businesses from the bad ones. So in terms of evolution, obviously, there used to be paper-based underwriting. There used to be intuition-based underwriting. Like our neighborhood kirana store fellow knew kisko kitna dena hai. Whether this guy needs 1,000 rupee kata or this guy needs 5,000 rupee kata, he knew it.
Relationship.
but the principle always remained the same. These are the 4 basic pillars on which they built the entire business. So as technologies evolve, everyone adopts it. I mean, I'll show my age now when I say the next statement. See, when OOPS and relationship RDBMS came, everyone adopted it. Today, to go back and say, I use an RDBMS, people will laugh at you, right? Like, everyone uses RDBMS. So just like that, if you say 5 years down the line, I'm using AML for underwriting, it's a laughable concept because everyone will have some level of AML in it. So technology is never is just a tool. It's how you use and how you interpret it. and make sure that while you are doing it, especially I come from a US lending background, that when you are using tools like that, that your monitoring and audit processes are strong, that there is no discriminative practices, and there is no disparate impact that your lending underwriting algorithms could bring. Those are the challenges for the future. But in terms of the principles, they will always remain the same. And we'll try to evolve using technology as a tool to just better deliver the service. What AI/ML or automated underwriting, whether it's rule-based, have done is you are able to now make a decision. What used to take 3 days to maybe 30 minutes can be done in a 30-second timeline. And especially for a company like ours, which is focused on the underserved consumers, and we are trying to make a loan decision. We give loans from as small as 500 rupees to maybe 2 lakhs. When you're, like Bhavin is in the same business, when we are trying to do a 15,000 rupee loan, 4 दिन तो नहीं ले सकते, then your entire profitability is gone. So that the technology tools help you accelerate that decision, but still the principles remain the same, and monitoring and audit is the most important thing that people should focus when adopting these technologies.
Sure. So one more question that comes to my mind for you is that with being physical, like completely paperless, completely faceless, there are situations where frauds can happen, and there were recent news about fake loans being booked in people's name where they were not even aware that their PAN card was being used. How does that really happen, and what kind of lenders do to protect that situation? Because it's also putting lender at with a bad name, as well as the portfolio can go really bad.
See, once more, fraud always exists, and you are trying to figure out various methodologies to do risk mitigation. The recent fraud we have observed mainly, which related to identity theft, is universal and affects everybody. But in terms of mitigating it, the best things are always what RBI mandates and everybody here follows is KYC, know your consumer. And as long as you do it very efficiently, especially when you're doing it digitally, and you should not take any shortcuts. And sometimes, irrespective of how much safeguards you apply, it's not like traditional banks when they're doing paper loans with so much underwriting, it's not like they're not subject to fraud at all, right? Like all the newspaper headlines are about people who have done fraudulent loans for thousands of crores and walked away. So when it happens at thousands of rupees, it's still fraud. And the same principles still apply. Like as long as your processes are strong, you have good know your customer policies. And especially when you're in digital, follow the rule book and the guidelines. Especially RBI now says do a video KYC. If you're adopting video KYC, do it two-way call. And there also you just can't depend on the human that is interacting from your side, but also use technology as an overlying thing so that when they are showing their Aadhaar card or their PAN card, that you can actually use the data within that to real-time analyze it. And we use a lot of those tools. So, so while the fraud is a big problem, especially when it affects a retail consumer who never applied for a loan and now sees an inquiry in a bureau, it's traumatic for them. But I think it's a bit of an evolution and growth process for the space. And I'm sure all of us are trying to make sure that we want to mitigate it. As I said, the first basic fundamental thing everyone wants to do in underwriting is eliminate fraud. And that's, I don't think anyone takes it lightly. But it's still at the same time, fraud still happens.
So, Parijat, sorry. Just to add on, see, it's good thing that in last 4 or 5 years, we have been talking about this issue. Just go 10 years back, or maybe 2008-9, when so many fake credit cards were issued on name of so many people. मतलब आपका bill आ जाएगा, and then you will come to know that, okay, 1 lakh rupees is used, right? But people were not even discussing these points. Why? Because it was very difficult to identify fraud. Nobody was encouraging anyone to discuss about it. Today, after digital lending is coming into place, the identification of fraud has become much easier, much faster. Fraudulent activities have been always reaction by any financial institution. But if we compare it with physical era and digital era, here it is much, much faster than the physical era. And I believe we have been more reactive to the situation, and very fast we close those windows
which are being used by people.
So the reaction time has come down.
Absolutely.
Safeguards have improved, but still like fraudsters may be
Yeah.
still finding a way out.
So it is like we talk about at a global level that from tomorrow there won't be any hacker in the world, which is ideal situation, but practically it is not. Anil, you want to say?
Just to add to what Bhavin said, like the customer who is digital has a pretty good digital footprint, right? Like, and the customers we deal with are very young, and the first thing they do is express themselves on the internet. Like, if you're eating pani puri, they're telling the world that I'm eating pani puri now. So if I see a fake loan account created in I'm obviously going to tell in every platform. So the communication that is happening with the younger customer, the digitally, with a large digital footprint is a lot more. So that gets a lot more currency in the media and everything else. It's just that Bhavin is very right. Like, we get to know it a lot, and that is making us better. Like, we are able to react, and now all of us are taking several proactive measures at an industry level to make sure that we can tackle this problem.
So taking the cue from reaction, so that there have been a lot of macroeconomic situations over the last 2-3 years which have tested both underwriting models and generally the lending itself. So question to Deepak is that how has the underwriting for SME been tested? Because there were models which were working well, but with COVID, everything went for a toss and there were situations. So how has been your journey? What have you seen?
So if you look at this segment of small ticket loans, and if you study this for last 20-25 years, there have been a cycle generally every 3 to 4 years in the MSME world or the consumer credit card world, etc. Now, in every bad cycle, if you go and talk to the bankers who've been doing these loans back then, or you look at data, you realize that the majority of the loans which went bad was the ability to trace that customer. So if the skip customer ratio is very high, you will lose those loans because there's absolutely no way to reach this customer, and thus your ability to collect does not exist. What we did, from the beginning when we started was we never lent to a location where we didn't have an ability to knock on the doors of that customer in real time. Less than 24 hours, can you go and knock on the doors of those customers, even if it's a remotest tier 3 town. So we get leads from roughly 6,000 locations pan-India. We give loans only in 3,000 because these 3,000 locations is where we have the ability to collect. Yeah, we are in business of giving money and not soaps, right? We need to collect back that loan. So thus you need to be very, very sure that you're collating enough data at the beginning to triangulate this customer and the location of this customer when the loan goes bad. So it also depends on what these two gentlemen were speaking, that how many different data sources you're tapping into while giving that loan or making that decision, and how are you using those data sources to triangulate that, okay, so we call it, the propensity to skip. So what's the propensity of these customers to become a skip customer? And there's a special scorecard only for that. Again, we dip into the bureau data, the data coming from various partner sources, the digital footprint, etc., to decide that, okay, what's the propensity of these customers to go skip for us. So those are the kind of things. For us specifically, in the times of COVID, fortunately, a lot of loans we did were online ecosystems. We are one of the largest ecosystem embedded financiers in the country. So, all the digital ecosystems is where we provide loans to SMEs. So all top e-commerce ecosystems, all payments ecosystems, etc. And thus, these were the customers who were doing, or the sellers who were doing really well, because the physical stores were off, but the online sales were happening. And thus, our collection track record was pretty well. In fact, our credit costs were one of the best in the industry, because of multiple reasons I spoke about.
Good to learn a few things from there. So, question for Sanjay. Now, when a bank works with fintech partners, and like you said in your opening remarks, that is critical of how to evolve and how do you see it moving forward, what do you look for in the partner? How do you really select a partner? How do you cover for risks for the bank when you actually engage with the partner?
Yeah, so think banks are pretty clear that we need to work with partners. I think that theory that we can do things ourselves is out of the window. And we at Kotak also keep sort of looking at partnerships to work on. So what do we look for in a partner? We look at, when we are trying to work with partners, we look at partners who can probably bring a much superior customer experience layer, because that's something which banks lack, or I think banks have scope to improve. So clearly customer experience layer, ability to get into newer segments, which we have not really done much, but we would like to test. I think these are 2-3 elements which we look at when we look at a partner. But it seems to be working other way also. A lot of fintech partners are looking at working with banks now to understand the risk frameworks a little better. Some of the collection pieces a little better, because I think you shouldn't be lending if you can't collect. And lending is all about collections. It's not the other way around. And I think it's very easy to say I'll price for risk, but you can't keep pricing a product so high that you get only a portfolio profile which is not very great. So that's not a great business model. And thirdly, I think the fintechs also learn on various profitability metrics which banks look at, which eventually help them. I think that's been one of their challenges. So I think 2-3 things. We look at a fintech who has got a lot of clarity and focus on what they want to do, is able to bring in great customer journeys and ability to understand the customers better, which we can leverage on. And thirdly, who's clearly wanting to be on the right side of regulation. I think that's a strict no-no. Anybody who wants to play in the gray is out of the window. So I think these 3 things is what we look at in a fintech partner.
Sure, so we'll come to regulations in a short while. But a question for Rajesh is that, since you are in the gold business, there would be operational risk beyond the credit risk. We've been talking about credit and fraud risk, but in gold, operational risk takes surface. And you also work with quite a few partners yourself. So how do you really manage operational risk? Who owns the customer in this journey? Because there is bank involved and the segregator model that you operate.
Yeah. In terms of ownership of the customer, we own the customer. Saiband owns the customer. But then, as you said, this is a fully collateralized product. So, and RBI is very clear that 75% is the LTV. Most of the loans are 6 to 8 months tenure. So even if there is a default, bank is not going to lose money. From that aspect, there's no risk, but there's a risk that we carry in terms of assessing the gold at customer doorstep. That risk is carried by us. But it is, as Sanjay said, for us, we come from a legacy of a large group, which is 80-year-old. So commitment to the regulations and compliance is foremost. There's no compromise, shortcuts there. So winning the trust of the customer is very important. So in this product, you can't do everything digital. It is digitally enabled, tech enabled. We make the consumer experience, as Sanjay said, very, very smooth using our platform. But there has to be a physical interaction. So coming to what Deepak said, we have to meet customer in this product. We have to touch the gold. So there's nothing that we will do completely online. So from that aspect, we will know the customer very well. The entire customer's profile is with us. Background, we collect much more data than what the bank needs so that we know the customer better. We cover our risks fairly well. In terms of assessment, our people are trained, but then we rely on established players who have registered, empaneled assessors with them. And they commit in terms of if there is a mismatch with our valuation versus bank's valuation, they take a guarantee that they can pay back that money or they will buy the gold at the value. So that's the commitment that we have from the assessors. There are occasional risks in terms of the valuation mismatch, for which we do a fair coverage in our entire business plan, but that's very small, that's well covered. There's also a risk in terms of transferring the gold from customer's location to bank, which is a transit risk, which there could be intent of the person also. We don't outsource any of the work. We know our employees very well. But then we take adequate insurance coverage in terms of fidelity as well as transit. We've had very, very small cases of what we do is, even if we do at customer doorstep, just to give an example, we know at what time he's entered the customer place, and the entire proceedings there in terms of valuation, everything is recorded through our app, and that is available at the back end. So for a central operations team who do all the checks at the background that everything is fine, and then the money is transferred, and the moment they leave the customer's place to the nearest branch where the loan is likely to book, we know the transit time. So if there is a mismatch in terms of them not reaching, there are enough alarms, checks and balances at the back end. We've used technology to mitigate all this risk, but we feel we're fairly covered to take care of them.
So now flipping to the regulation, Sanjay touched upon that. So Sanjay, maybe the question for you itself. So everyone is talking about the new RBI regulations around digital lending. And so how do you see that kind of playing out? Of course, I think many of the panelists here are already with NBFCs, so fairly covered. But in general, how do you see the landscape evolving? What do you see the impacts of these regulations?
Yeah, no, I think the regulations or the guidelines were needed. I think it's important to have guardrails on what can be done or what cannot be done in the digital lending space. And I think the regulations that come out at least help provide the guardrails. And our own experience in the past is when you have regulations, they tend to bring in more transparency. And the transparency eventually leads to more trust from consumers. And the trust eventually goes back into growth. So I think it's a nice fine balance. You have the right regulations resulting in transparency, resulting in trust of customers, and then obviously resulting in growth. So I think we welcome the regulations, and I think it's good for fintechs too, from a more long-term perspective as they look at growth. And I think it's great for customers because generally the belief is what's good for customers is usually good for the industry too. And I think the regulations are good for customers, so it should help play out well.
Great. So maybe again, question to Rajesh, because now these regulations are talking about digital lending, and since you're doing gold on digital, how does that impact and what kind of alterations that you are seeing in your business model?
Yeah, so from beginning, our model was kept very flexible in terms of how the consumer journey, in terms of, so customer acquisition is completely digital, that there is no change there. Customer onboarding also is being done through our platform. The only change that the regulation has brought is the disbursement of the loan has to happen directly by the bank to the end consumer. Even the repayment journey has to be directly. So for us, getting that customer was very, very important. The data points related to customer repayment as well as the disbursement is available as a batch file later from the back side that we get, which we can consume and analyze the customer behavior, everything. It need not necessarily flow through our system. For us, that owning that customer, that he should come to Sahi Bandhu. And what we have looked at is what is the need of the end consumer. Most of the targeted advertisement that you will see is for gold loan, you come to us. We have tried to go one step behind and see for what are they coming. So we have enough data in the last 3 years in terms of customer end use. That's where we have tried to target. And more and more we do this deeper analysis, then we have been able to expand. People who have not even thought that the gold loan could be an option, they have come to gold loan to meet that requirement. So our focus would be to meet that demand. We will follow, and we have tweaked immediately the model in terms of from the bank partners, the money can be directly disbursed to customer. We don't see any challenge in terms of our business model overall with the change.
So Anil, I'm going to ask you to look into the crystal ball and talk about BNPL, which has been like really a talk of the town for quite a few years now. But globally, it has seen high NPAs. In India, again, we are looking at regulations coming in for BNPL. US is talking about regulations. How do you see that space evolving? Because it directly connects to your business as well of unsecured lending.
Yeah, I mean, BNPL has been a big growth factor, not just in India, but globally. I mean, the business model has been existing forever, right? Like buying products at the market price with a small discount from the merchant and trying to kind of adjust the pricing from the discount from the merchant as a means of managing credit risk. So the global phenomena has been mainly from 3 different aspects, right? Like one is the data protection issue itself. How much data is being accessed? How is it being accessed? Is the customer clearly getting informed about what is being accessed to underwrite the consumer? The second one is the overall pricing risk itself. Is the merchant aware of what they are getting into? Because there are several small merchants who are getting into the ambit of this BNPL products. And what the regulators are clearly concerned about from a consumer point about is the consumer sure about what they are getting into it. So obviously, during COVID, some of these companies have seen a lot of growth. And as especially in the US market, as the free money kind of left it, they are now seeing a bigger pressure in credit losses, which obviously is now trying to get passed on to the consumer. Because one of the biggest revenue earners for them is fee-based. They are charging really high late fees and all. So the disclosures is the challenge that everyone is trying to look at. But if you look at our own digital lending guidelines, it is pretty clear. Like the disclosures have to be transparent to the consumer. So, I mean, RBI has always been a very forward-looking regulator, and I think the digital lending regulations kind of speak to the BNPL product itself. The second thing RBI is trying to do, which is one of the biggest problems the industry faces, is most of them treat it as a payment product, hence don't do credit reporting. And when you don't do credit reporting, there are two risks, right? One of loan stacking, where the customer is over-leveraged. Two, the system, like lenders, other lenders do not even know the risk that they are about to carry, because this particular credit transaction was not even reported as a credit transaction. And if you look at our digital lending guidelines, once more RBI is making clear, if you're giving money to a customer, whoever is paying for it, it is a lending transaction and has to be reported to a bureau. So once more, in terms of, I mean, I don't want to speak globally, and several regulators are tackling it in many different ways. I think the digital lending guidelines that RBI has come up with have clearly laid out what they're expecting any credit product to do. And they have also laid out that BNPL is kind of a credit product. Stop treating it as a payment product and make sure that the disclosures are transparent and the reporting is universal. So, and they've also said most credit lending has to be done by regulated entity. Now, I mean, we used to call ourselves Fintech NBFC, and I used to come in a t-shirt. Now I'm putting a button-down shirt because I want to be first called as an NBFC that is using technology. So, so I think we as a country are better prepared to address these challenges than many regulators globally. And to Sanjay's point, regulation is always welcome, and if the consumer is protected, it's always better for the industry's growth.
Just to add, winning the trust of the customer is very, very important. As Sanjay said, if any RBI regulation is good for consumer, finally it is good for the industry. We've seen with the recent guidelines, there were few practices that were adopted where in terms of transparency, customers were not aware, especially in gold loan. That's how the industry operated overall, from money lender to NBFC, something called jumping rate concept, high late fee charges. All those have been cleaned up now. For us, from beginning, we were very clear that we should have a very, very transparent way of explaining everything to customer. In the long run, we believe that's what is going to happen. So with this regulation now, it's a level playing field. Everybody has to follow the norm. So we believe it will weed out all the unfair practices, and it's a win-win for everyone, the bankers, for us, as well as the consumers.
And Bhavin, I didn't mean to put you on a spot by saying you're on a
No, that's absolutely okay.
Okay, so maybe just last two questions. So on crystal ball again for Deepak and Bhavin. Deepak, your question is, what do you see in terms of like BNPL, embedded financing for SME, since you're focused on SME financing? And Bhavin, for you, it's more on like, how do you see underwriting evolving? What kind of alternative data sources that you see could come in future for individual loans or consumer loans?
You want to go first? So again, you know, the future is always where the customer's problems are solved. Yeah, and when you see the whole embedded finance as a concept, it emerged because, you know, at the point of sale or when a transaction is happening, you know, are you solving the need of credit at that point in time? And that's a real need at that point in time, right? And this is where the consumer BNPL is clicking as well. When a distributor is selling to a retailer, manufacturer is selling to a distributor, there's a real need of credit there at that point in time. And can you solve that in a journey which is embedded in real time? That's what Okin is trying to do as well. That's a massive problem out there. And I believe, if you were to look at next 5 years, supply chain as an industry or supply chain financing will grow massively. That's where FlexiLoans has invested a lot. We are already, lending with almost 20 plus ecosystems, and we have almost 20 lenders at the back end, who are doing this financing along with us, including all the top MNC banks, all the top private sector banks, etc., etc. So there are 3 types of products there: the vendor financing side, the dealer financing side, and the direct to retail or BNPL, the merchant financing side. In all of this, there is a real credit need which the fintechs are trying to solve by ensuring that the decisions happen real time. However, ensuring that you have done enough checks to ensure that the customer is real. Again, in this part of lending, there is a lot of partner data available because most of these merchants are buying or selling to this large anchor corporate or a large distributor for months and years. So you use that data, you use their KYC information to ensure that it's the real merchant who's applying, and then you also use the merchant sales ecosystem to triangulate the identity of this customer. With this, I think the embedded financing will go to the next level, and you'll see a few billions of dollars being disbursed. We at FlexiLoans are seeing massive growth in disbursement. So this is how the network effect happens, right? Initial years, you're collecting data, you're creating a distribution network, you're creating distribution touch points of sourcing, of liability side, etc., etc. In first 5 years of our operations, we cumulatively disbursed roughly $200 million. This year alone, we'll do more than $200 million. So that's the level of network effect, which keeps coming in as you scale and as you grow, and the right capital is backing you as well.
Fantastic. Bobby.
So I'll not take much time, I am sure. They are worried about the time. So in short, I personally see a dream of India where you wake up in the morning, peeping into your mobile, and you see the message that today you may require 5,000 rupees to make this purchase for this plan. And that will be available by 12 o'clock in the afternoon. Go ahead and do that, right? So, and this is possible because data points are available. And I see that in next 2 to 5 years, Indian lenders will go too much deeper inside the data points. Not much on the personal identity side, but inside the usage pattern, behavioral pattern. So if I compare that simply with the physical world, which was going on for last 30 years, so there the bank manager would know the individual who is coming to take the loan, and he will do his own assessment, how they were assessing it. कि अच्छा पटेल साहब आएंगे, पटेल साहब ये करते हैं, इस तरीके से बिहेव करते हैं, कम्युनिटी में उनका इतना नाम है तो उनको 25 लाख का लोन दे सकते हैं, बट लेट्स से somebody else is there, उसको नहीं दे सकते क्योंकि ऐसा है. Now whether this kind of thing is possible by data or not, very much and in much depth, that okay, if Mr. Patel is taking this route to reach the office against Mr. Sinha who is taking the another path, and what is the difference between that and what could be the interpretation of these two differences of personality, right? So there are so many different things are possible. I have seen a couple of US startups, you might have seen as well, where doing underwriting basis on voice modulation of the customer, facial expression change from the video which they are submitting while completing the application, right? These are possible. Now point is how diligently you are working on those algorithms. I think in India till date we focus less on building the product or such kind of algorithm, whereas Europe and US focuses a lot on this, registering the IPs, creating patents around that. I believe now India has started taking action into this direction. So next 2 to 3 years we will see lot different kind of data points, even other than bureau or reporting which is happening in current world. But I think next 3 years will give you the picture, and we'll try to give us some visualization that how deeper lending can get into India.
Fantastic. So with that, I think we'll have to end the session here. We're already over time. But to just summarize, the lending itself is really underserved in India, credit as a product. And we see digital lending going to be the forerunner to make sure that that happens. Technology has enabled efficiency, brought in customer experience, made sure that the NPAs are under control. And the impact is still huge. By sitting in Mumbai, maybe organizations are able to serve in 3,000 plus locations. And what we are also hearing is regulation itself is not bad. That's bringing in more control, more transparency for consumers. And that drives trust, which will definitely bring in more network effect and more business for the industry itself, as well as benefit for the customers. So with that, huge round of applause for our audience and for our panelists who have shared their insights. So thank you very much, gentlemen. It was really a pleasure to have you here.
Thank you.
Back to you.
La noche no se muere. La noche no se muere.
Our next panel discussion is rethinking corporate financial products for new age startups. This will be moderated by Mr. Shashwat Sharma, who is the Senior Partner and Financial Service Leader at Kearney Consulting. May we request Mr. Sharma to please come on stage, please. Thank you. The topic for our next panel discussion is rethinking corporate financial products for new age startups, and which will be moderated by Mr. Shashwat Sharma, Senior Partner and Financial Service Leader, Kearney Consulting. He'll be joined by Deepti Sanghi, CEO and founder of Kodo. Welcome, Deepti. With Zeus Dhanbura, who is the founder and CEO of BridgeUp, and Vaibhav Tambe, co-founder and CEO, Transbank Solution Private Limited. May I ask Shashwat to take it from here, please?
Thank you so much. Sorry. So great, and so great to have be the moderator on a panel which has 3 startup founders, and I realize, at least I'm happy to see Vaibhav dressed a bit like me, in the sense at least he's also wearing a tie.
Ex-banker.
Yeah, but anyways, but no, great to be on this panel with. Something wrong with the mic? Okay. Yeah. So are we all audible in the back? Yeah, perfect. Okay. So, first of all, let's welcome the panel as we have Deepti, Zeus, and Vaibhav. And I think it's a very interesting topic in terms of rethinking the corporate solutions products for new age startups. What I find quite interesting is new age. So we're already making that distinction between, do the new age companies need something which is very different and unique compared to what we have from some of the more established mainstream companies. So that's really what we have to discuss. Let me start by asking each of the panelists in terms of what's really been their journey, what made them take the plunge. As I understand, all of you had stable, steady corporate jobs and were doing really well in your career. So what made you all take the plunge and really join, and what's really the difference or you are actually making in the space? So let's start with Deepti, you.
Hi, everybody. So my journey started with a conversation with a few of my friends who run their startups, who are very strong product and marketing folks, but are scared of finance. Given my background in banking, I was like the finance friend. And I could see that pattern across. And I said, hey, what if I could be that finance friend at scale for a lot of startups? And I looked around and I saw that in companies, when it comes to work tools, teams which are in engineering, design, marketing, they've been given Ferraris, but the finance teams are still pulling cycle rickshaws. And I was like, that needs to be fixed. And that's how we started Kodo. So Kodo is a spend management platform for fast-growing startups. We offer all kinds of form factors for B2B payments, be it cards, bank transfers, bulk payments, QR payments, and for all kinds of business spends, be it for IT and marketing spends, vendor payments, or for utility and tax payments, or employee payroll and reimbursement. To put it simply, we are a spend gateway. So whenever a company has to spend money, they can do that through Kodo.
Thanks, Deepti. Zeus?
Yeah. Hi, everybody. Thanks for the introduction, Shashwat. So when I actually started my career, it was in law in 2012. Graduated as a lawyer. My co-founder was also actually a lawyer. And being exposed to law at an early age, we saw how the financial and other worlds would work. I mean, what we really realized is that being in this space, there was a lot of opportunity in order to create alternative financial products. It wasn't always being pushed in the right way, or it wasn't always being, the needs of the market weren't really being tendered to. Legacy financial institutions were providing debt products or other alternative solutions, but I would say what really pushed me personally to get into this is to become more independent for my own time. Being from a legal background, you don't own your time, you practically don't own your life. So it was necessary to be able to change it up, not only for myself, but for a lot of other people, I would say. And that's where being in the financial sector, I think, really gave us the push. I mean, any other banker will obviously relate to the hours. So I'll say that that was one thing. You assume that you're going to come into a space where the hours might be less or in your control. It's actually much worse. But yeah, being in the fintech space, I think, is the opportunity of the time, and that's what really pushed us into starting it.
Yeah, thanks. First of all, I think so great to see you all, because especially the sumptuous food is there, and still there are a lot of guys looking forward to. So I think I again a career banker, and probably what we have seen in last few years, a lot of thrust thanks to NPCI and thanks to RBI and Government of India on the innovations around entire banking suite. And I think last role I was working as a country head for IndusInd Bank, and we saw a lot of gaps in the B2B side of the payments. While B2C, you can say it's on the maturity curve. Again, many thanks to NPCI for that. But what we could see, a lot of gaps in B2B payment side, which could be addressed as a group of bankers. There were some solutions where we used to work very closely with 4 or 5 banks, but it never used to happen. And that's what me and a couple of my colleagues from bank, we thought of, hey, let's look at addressing this space. And we got a good amount of support from our large institutional clients, banks, and I think good start. I was just having chat with Zeus on that. So I think good start on that, and probably look forward to meeting a lot of you guys and looking at solving more and more B2B problems. And I am so thankful to the team. The topic actually suits exactly, probably all 3 of us, we can relate it to the topic, because we actually are rethinking the corporate financial products, and obviously being the newest startup. I think that's about me.
Very interesting. So Vaibhav, let me just build on your answer, because I think you touched upon a very important point about saying that while on the retail side, we've seen a lot of disruption and a lot of also adoption. Also, a lot of people say that the adoption has also been driven by the absence of any MDRs, right? I mean, on the retail side, and that's been a huge thing. Now, on the corporate side, and like you said, you've been one of the newest startups, but is COVID the only moment of truth, or is there anything else also which you think, which is making the corporates really adopt? And when I say corporates, let's focus more on the mid-size and the SMEs, because obviously the large corporates were always more open to payments on the B2B side. But anything specific you think from your experience in terms of how you are seeing this evolve and change beyond just the impact of COVID?
I think probably 2 different vectors we spoke about. One was COVID, and second was the corporate or startups, the way they look at various aspects of the business, right? So I think COVID, obviously, each one of us, we've seen through. But I think if we have seen the hue and cry as an individual, whatever, cash, name, Milra, etc., you should have, I mean, I used to have, me and my team used to manage around 1,500 odd corporates, and there was a lot of pain. Obviously, not because they were not digitized and all, but obviously they were, it just stuck. It just stuck a lot of startups, a lot of MSMEs to, say, probably a medical shop guy or a kirana shop guy, who's actually running his business based on the footfalls, and these footfalls are over. Some regulatory changes, banks are allowed to operate, but the financial inclusion partners. So there are a lot of things happening around us, and that really, we really saw that, yes, COVID obviously is the turning point. From the B2B client's perspective or corporate perspective, I think most of the guys also have the challenge of addressing the legacy systems, right? So when you want to digitize, entire stack of yours, when you have a look at acquiring customer digitally, or maybe providing payment services to your clients or your suppliers digitally, you always have that legacy stack of yours, which cannot be transformed overnight. And that's what, again, was the infrastructure as a service or the payment or banking or lending infrastructure as a service could come up as a parallel track. So just to summarize, yeah, I mean, unfortunately, it was not a great thing, but yeah, it helped us to probably accelerate our thinking, our processes, our products by probably 5 years.
Sure. So, Deepti, let me request you to add from your experience in terms of, we talked about emerging solutions. So do you think specifically also for the, while I know you focus both on the old economy and the new age companies, but from a new age company perspective, are there specific innovations or solutions which you think are really emerging fast?
Yeah, I mean, as a fast-growing startup, we understand the gaps in the current corporate financial products really well. And we are building the tools to serve similar companies that are growing really rapidly. So when a company starts scaling up, one of the things that happens is the spends spiral out of control. And there is a strong need to have a unified view of all the spends across teams, departments, locations. And traditionally, in the absence of any strong tools, all of this kind of gets centralized to the finance teams. And they create these complex manual workflows and bureaucracy to keep control on those spends. And for those teams, this is a thankless, repetitive, and kind of soul-sucking part of their work. So what we are building is modern tools to help the finance teams have complete control over the spends, as well as give flexibility to the teams, like the non-finance business teams, to make business-critical spends in a timely manner without any bureaucracy. And what we are providing is, through our tools, 3 things: compliance, collaboration, and cost control. So traditionally, the banks offer great financial instruments, payment instruments, but they don't have the tools for compliance and collaboration. The traditional ERP systems take months to deploy and are very expensive. So we offer the best of both worlds, where we offer a completely customizable platform where you can work with the best financial products to manage the company-wide spends in an easy way. So, and we have companies like Grow, Mensa Brands, Zepto, FamPay, even Mahindra Logistics, who are our customers amongst more than 1,500 companies that have come on board to use our platform.
Great, thanks. I think one thing which Zeus, in fact, I was having a very interesting conversation with Zeus, and one of the things he's really trying to solve for is the entire lending problem statement of clients. And obviously for new age startups, sometimes debt and equity boundaries get blurred, but obviously you're trying to create new propositions in a space which is right now more seen either traditional term loans or some kind of working capital business loans, but we're trying to create a new space for more for even the startup economy, where, like I said, and you also were saying that debt equity boundaries can get blurred. With that kind of thinking, do you see a lot more innovation would come in that space? While you are obviously still working with a little bit more traditional bank and NBFC partners, but how do you see really openness to innovate, think through new financing solutions, especially in an era where growth capital and equity capital in the startup world is at least seeing some signs of drying up?
Right, thanks, Shaswat. So yes, that is the space that we are building, and in today's, not only in today's time, even before COVID or after COVID or the financial slowdown or the winter, as it's synonymously called, access to capital has always been hard. Access to non-dilutive capital, debt capital, whatever you want to call it, has been equally harder. Large amounts of capital for smaller companies in a non-dilutive fashion across different instruments or debt products is not easy to access. Legacy financial institutions on their behalf do try to solve that. But modern age assessment techniques using technology in order to scale is still very, very slow in that regard. There are some NBFCs which work with do a fantastic job of it. Bajaj Finance being one of them, obviously the obvious leader in the market, will be giving you a product or a solution for a sub 25 lakh category in under a day. I'm talking about ticket sizes. Larger ticket sizes need a mixture of both qualitative and quantitative assessment. So you are trying to create the technology which allows existing lenders to come onto your platform, see the companies that you've originated, see the assessment that you've taken care of, personalize it to a large extent, and quickly disburse the capital. In today's world, or at least in today's India, the player who manages that at scale has a huge market to address. Non-dilutive capital, debt capital, invoice discounting, supply chain financing, whatever the instrument, recurring revenue financing. The end, I would say, asset is the receivable. You are trying to assess the quality of the nature, quality and nature of the receivable. And I would say that modern lending platforms like us are trying to build in that space to try and provide capital faster and cheaper. India being a price-sensitive market, cheaper is where I would strongly stress. And the way to get that is actually by working hand in hand with banks. Get them onto your cap table in order to get finance at a lower rate so that you can lend it out at a faster and lower rate, right? I mean, that is the way I would say that we are working. But you can't do it in a silo. You can't even expect to, even with foreign capital being infused. You need to be able to work hand in hand with banks also. So yeah, that's my.
Thanks for that. Just building on some of the key challenges which the startup economy is seeing, and also especially some of the clients are seeing. What we do as Kani, we actually have what we call the Kani B2B index, where we actually look at different countries' evolution, and we look at two major metrics. One is on their digital penetration in the B2B space, and the second is around efficiency, which is not just about the payment, but the entire end-to-end process. So what we've seen is that while some components of the value chain, so very interestingly, I think I was talking to someone, and they said, you know, guys, in Southeast Asia, look up to India on penetration, and my answer was that yes, but we look up to them on efficiency. So somewhere we've got the penetration better, but not the efficiency, and vice versa. So in that context, how do you really see when you work with your clients? One, for example, you were talking about financial processes, vendor payments, etc. So while the payment can happen in microseconds or even less, but then there's a process around it, the invoice. So how is that changing? Because till that also starts getting a lot more digitized. The end-to-end process will obviously, one part will be solved, but how do you look at the end-to-end work, and how are both your banking partners and also your other corporate partners, SME partners, how are they thinking about the end-to-end view rather than just a payment view?
Okay, so I see there are two things that have happened in the last few years that have really accelerated this end-to-end connectivity across the value chains. One is the implementation of GST, which has brought all the businesses, they're so intricately connected. I mean, any payment would have the right trails going through. So that's been a strong force factor in creating that end-to-end connectivity across the supply chains. The second thing that's happened is the use of UPI for our personal payments. We are so used, especially in the last 2 years of COVID, we are in our personal retail use, we can't think, I mean, of course there are cards, but UPI has become the de facto thing for acceptance of payments as well as for paying. And people are expecting the same kind of digitization and seamlessness for their business spends as well. Right? So with these two factors in terms of their user behavior, which first started with the consumers, and then it's going into the business side, and the first where it's the regulatory structural thing around GST, these things are helping that penetration across the supply chain for businesses, for payments, to bring it all in a digital fashion and streamline that. Does that answer your question?
Absolutely. Yeah. You want to add anything to that? Or? Okay. So yeah.
Perfectly answered.
Sorry, holding the mic up. So I think just building on some of the challenges which I think each of you have been alluding to. So we have a view we're talking about. You have obviously, like you said, come from a banking world where you're working with more than 1,000 clients, yeah. and obviously you understand the problem statements right from the large corporates to the mid corporate. So if you were to, and I'm not, a lot of it you are doing yourself, but if you were to give any tips to other peer startups or any other people looking at the space? We all say it's a huge ocean. There's so many SMEs who are still not in the organized spend category. So what would be, if you were to give, whatever you can reveal, I know there are a lot of people who are looking up to you, but if there were one or two tips which you want to really give to people to say, look, this is a white space, relatively unaddressed, go for it.
Honestly, this is a topic I'm sure everybody would look at, expanding their own horizons a lot. But probably, sticking to the corporate, financial product perspective, I think, like we've dealt with somebody like Reliance Industries also, and probably 1 crore turnover SME also, right? I think probably, be it a fintech, be it a bank, bankers, I think probably the approach earlier, or in fact right now also, used to be one size fits all. They used to build products for the masses. But I think probably with UPI kind of a product, or maybe there are several products like we spoke about. Transbank does the products around escrows or power of attorney accounts. I think probably we have to understand, the one size fits all not going to really help you to scale up. We have to understand how exactly each and every organization, or at least each and every category, let's look at FMCG as one category, spends as one category, NBFCs as one category, and then obviously the solutions have to be customized. And that obviously comes to the core of your innovation. If you are a startup, you have to have this stack which is scalable, horizontally as well. Obviously you can do vertical integrations and go on adding products. But I think you have to, and same goes with the bank. The way typically banks used to face challenges because of the legacy applications and legacy systems are there, and it becomes difficult for them to add the product layers on layers exactly on their infrastructure layer. And I think that's where probably a lot of infrastructure companies are coming into the play, and that's what I think we are aiming at, right?
So you haven't given any tips?
Yeah.
So
the first,
for a real tip. What you're saying is, look at the India stack, leverage
No,
that,
so I think that's what, so the first probably tip, I'm not a really expert at giving tip, but I think we have to look at, the target segment, go back to the basics and actually look what exactly, he is struggling for. I think that's probably is missing. We have to look at that, be it a startup, be it a fintech, be it an established player, or be it, any other entity. So you have to look at that. And second, obviously, 2 points I wanted to make. First point is obviously customize, try to keep the stack so that you can actually scale up while customizing. It's very difficult, but combination of both is very, very important. And the second part, obviously, when you look at the lending challenges, for example, do not look at the regulatory arbitrages. That's one of the very, very common mistakes we've been seeing around, in the market. And I think we have seen enough actions, enough circulars. Do not look for the regulatory arbitrages. It's not going to solve your problem. Obviously guys like Ani are there for consulting, but if it is not clear, speak to your banker. If you are a fintech, if you're a bank, speak to your compliance teams, but get the regulatory alignment absolutely right. Because today, or in 6 months, in 1 year, it's gonna affect your business. So build your business keeping in mind the exact regulatory and compliance structure, and that's actually probably these two things are at the core of our startup.
So I think Weber was more about what not to do. ZS, anything about what to do?
Yeah, from a what to do perspective, I would say that adding on to what Vaibhav said from a regulatory perspective, it's always hard to navigate this route, Regulation is not always post facto. You need to understand that at some point in time, you will be able to face it down the road like how we are right now, having built business models which don't fit the current regulatory environment. So I would say in terms of what to do, well, this will be more from my legal background, but what you would like to do is sometimes take an opinion from a highly placed legal entity, maybe a consultancy, probably even the RBI. You can actually write to the RBI and SEBI. Many people don't actually know about that, and reach out to them and ask them what they think. And it could actually form a record on your books to say that, hey, this is my business model. I've reached out to you. They, in all probability, they might not respond, but a non-response is also helpful in some ways because it's not a no outright. So yeah, from a what to do perspective, I would say that that might help in a limited fashion, but there can't be a clear answer. A lot of it is sometimes to be predicted. Maybe you can see the hints that the RBI throws down, like, right? You can see where they were going with FLDG for a while now. You could maybe try to avoid that route, but that's just one example. Not everybody can. So, right.
Deepti on what to do. I think we've heard a lot of things about the compliance and regulation, but any idea which you want to throw there, look, this is a white space, go build a new business?
Well, in terms of what to do in white spaces, I would say that when it comes to financial products for businesses, there is a lot of friction out there. So, you just pick up any major point of friction and you can go ahead and solve for that. We often talk about product market fit, but there is something called a founder market fit as well. So when looking for problems to solve, it's very important to understand if you can empathize with the end customer and really kind of understand the pain that they are going through. Because at the end of the day, when you're building something and you're trying to honestly serve your customers, it is important to have that insight and that empathy to change that pain to delight. So that's why picking the problem that you can empathize with yourself deeply is, I think, super important. In terms of white spaces, there is a lot of opportunity in India. There are a lot of things that need to be fixed. And yeah, this is a great time to be building.
Great. So I think we've heard there's lots to be done and lots of white space. But if you were to look at the fintech world, which is serving the startups or the corporates in that sense, what are some of their challenges? And let's also perhaps think a bit about that. I think one challenge which and I know a lot of the panelists talked about expectations on retail like UPI, but what you've seen is that somehow the traction is still more on the consumer retail side, be it of the investor community, the VC community, right? And even a lot more happening there. While I know all of us agree that B2B and SME is a big space, but somewhere the fintechs addressing more the consumer side, again, it's all relative, tend to sometimes get more investor attention. Let me put it mildly like that. So in that context, any thoughts from your side in terms of what more do you think, and all of you focus more on obviously the B2B space, and I'm sure you obviously get a lot of investor attention, but if you were to tell someone who is entering this newly, who wants to be in the B2B rather than B2C or B2B2C, what would you advise them in terms of how would they attract the investors, or is that really a challenge for fintechs who are focused on B2B rather than B2C? Any of you want to go for it? Or?
Yeah, sure. So you know what they say, in B2C you're building for valuation, in B2B you're building for revenue. But apart from that, I mean, obviously that's a joke, but when you're looking at concentrating on a space, you really want to see more than just the numbers. Now, what's happened, and the harsh reality of it is that if you are looking to scale via valuation, then the venture capitalists are going to ask you for metrics which don't really exist, because revenue as a metric is not going to be established in order to get you to a 3x, 4x multiple of your existing revenue within a 12 to 24 month period, which is what is expected. So you start building metrics which can actually be achieved. Number of users, number of amounts disbursed, everything which is not revenue, because that is exactly what is going to be able to build it. Now, while you are building up your valuation in the B2C space and you are taking on a lot more consumers, at some point now the question has changed. The question is, where is your path through revenue, then where is your path through profitability, right? So as a prudent founder, when you're entering the space, it's not really about chasing the venture capitalist. The right venture capitalist will chase you if your business fits. As was pointed out earlier, and rightly so, there is something called founder market fit, and there is also VC market fit. They are looking for you if you're building in the right space. For you, the real question is, what are you going to want? And what is going to be needed down the line? Is profitability going to be a serious question? In my opinion, it should be. We fund companies which are like that, so obviously I'm biased. But I would say that for a sustainable business model which is to be built across a 5-10 year period, it needs to be there. And in the B2B space, more and more companies are doing that. In the B2C space, because of India's per capita numbers, even though we've crossed the UK in terms of the GDP, we haven't in terms of per capita, we're far lower. So it is going to be a much more difficult route to profitability in the B2C than it is in the B2B. The real question is, what are your investors going to look for, and how much of your own valuation, how much of your own equity do you want to save in the next 5-6 years' time? So really a lot of things. We can have a different panel on this, but I would say to summarize, that is what my thoughts are.
Any thoughts from the panelists, or we can go to the next question?
No, I think the only point probably he mentioned about the B2Bs for profitability. I think the only thing I would like to mention over here is when we look at B2B space, the go-to-market strategy or your customer LTV. These are two very important points. How do you assess them and how do you measure them, and then how do you make the most of it? That's very important. There's no cash burn over here, but those are two things which are typically ignored or maybe kind of ignored by startups or even corporates. I think we can look at that aspect.
Sure. And Deepti, I mean, and I'm sure you'll talk on behalf of the wider fraternity, but what are some of the challenges as a fintech which you face as you are scaling up? Obviously, you need to build bank partnerships, you need to reach out to corporates. Well, obviously that's on the business side, but there are also other challenges, people, internal processes. I mean, what keeps you awake or keeps your other peers awake?
Well, of course, building any startup, there are lots of things that keep you awake, and that's the challenge, right? You got to navigate the waters through all the difficulties that come across. One thing across the board is, of course, talent, right? Getting the right talent and getting them to, work at their peak to help them achieve their potential. I think that is something that's definitely, all the companies in the startup space are trying to figure out the right balance. I would say other things, as a fintech specifically, the challenges that are there. For a platform like ours, we integrate with a lot of partners, so be it banking or NBFC partners or any kind of accounting software or ERPs, etc. So having, in India at least, a lot of work still needs to be done to standardize a lot of these integrations across different partners. Some of the Western economies have much more standard protocols, and I think we are headed there. With a lot of innovation happening around open banking, we are in that direction. But for now, that is something that still is something that we need to cross the chasm there. And I would say, the third thing is, of course, the regulatory landscape. And it's never a dull moment in fintech, especially the last year. There have been a lot of activity in new regulations coming into force. And I believe for the long term, this is definitely very good for the industry because now there is complete clarity of what should be done and what should not be done. So that gives a much more stable foundation for businesses to build and scale. In the short term, obviously, there is a little bit of flux where companies need to probably rethink some parts of their businesses. But I think overall, this is a very good time for anybody who wants to serve their customers with the best of finance and technology to be building right now.
Thanks. I think just building on your last point around the entire the regulatory piece, and also I would say the broader policy making, how to increase that ambit. So, Vaibhav, I know you were also talking earlier about the infrastructure and how you can leverage. Now, there's lots being done at the India stack, infrastructure level, open digital commerce network, new standards coming on OCEN. So how do you really see at one level a lot of work being done at the infrastructure level? So this entire PPP or the public-private partnership, while you've seen a lot more happening on the consumer side, but hopefully hearing from all of you, I also believe that will happen a lot more also now on the B2B side. But what do you think, what more would you, let's say, demand on behalf of the industry? What more infrastructure should be created beyond, obviously, the open digital commerce network and all?
So I think
what do you demand?
Probably, again, to split your question in two, probably people over here, bankers over here, we've been hearing so much about, account aggregator, ONDC, OCE, and, fantastic stack we've been building as a country. Before session, we had a chat with UIDI, something they are coming up with. But the real challenge probably is to look at, is the market really ready? I mean, when you talk about PSU banks, when you're forcing them, boss, 31st July ke pehle live jao, are they ready? I just started with the legacy system discussion. There have to be more and more players, and I know, a couple of players in the market who are the, infrastructure players who should help these banks, regulated entities, PPI entities to build this stack. It's very important for India. And I know Mobileware, Satyajit, Amitabh, they're building this stack for some of the other entities. We are building for a couple of products. So I think the real need is when these stacks are being built, there has to be somebody who will handhold the legacy systems of banks /NBFCs/PPI guys and then bring them onto the platform. Otherwise, UPI, it took so much time, but now look at UPI, how it is, it's beautiful. It's the entire world is looking at us. So we need a lot of such players, I would be happy if it be limited periods like us, players like us, but we would need to have a lot of such players who translate. Let's say it's French to English translator. We need that. Otherwise, it's really difficult. You can't just keep on sending letters, BBPS pe live chale jao, But is it so easy for NBFC to build that entire layer? It's not very simple. Builders have done wonderful job for so many years, 25 years, their product have matured. Suddenly you ask these NBFCs and all the microfinance companies to build these products. It's not going to happen, right? So the idea is there has to be more and more infrastructure players, probably offer the product as a SaaS instead of, because you don't know whether it's going to click or not, right? ONDC, there's a lot of hype. You don't know whether it's going to really click for that. Account aggregator. People are, and rightly so, large banks are not very happy about it. Rightly so, because probably they are saying that, we today own the data. It's going to be democratized. So I think more and more fintech infrastructure players or more and more players would be there. And second thing, again, from the regulatory perspective, when they look at licensing regime, probably we can also have some empanelment or some listing where these players get some visibility vis-a-vis the today's player who are going to offer the stack as a tech stack.
Like you say, Dipti,
I think well summarized, yeah. And I think that's where the opportunity is, right? So
I think the way Dipti is building the wealth stack and he's building lending stack, we are building payment stack for B2B, that's the need. And I wish more and more players would come out. I actually don't wish that because there will be competition for all of us. But yeah, we should wish for more and more players.
Yeah, it's like you were giving ideas to your competitors.
That's absolutely okay. We've been giving these ideas to the market when we were bankers, right? Yeah. But there were very few people who could actually capitalize on that because you require a lot of patience to build this kind of business. You require a hell lot of time to actually understand the technology, first of all, what NPCI is trying to say or what Protein is trying to say when they're talking about ONDC. It's very easy to take these terms. But when you're actually building a stack, 800 test cases for UPI, it's very difficult.
You got to make the elephants dance.
Yeah, exactly.
Yeah. No, I think we've had a great discussion, and at least for me, I feel a lot of energized with the energy on the panel and new ideas emerging. Also, in terms of how they're really looking towards disruption, but also very importantly, a lot of optimism that things would change, and yet definitely with the infrastructure coming in, so they are themselves being the change. Like you said, building infrastructure because things didn't happen at the pace which you thought it would happen. I know we are out of time, but if there's any audience question, happy to take a couple. Otherwise, I know a lot of you have not had lunch, or some have had early lunch, but happy to take.
I think we are lucky that we're not going to have too many questions because everybody's hungry over there. But yeah, most welcome.
Any questions from the audience? I'm happy to take a couple. You have these young entrepreneurs trying to disrupt the B2B space, and yeah. Any more challenges for them? Any more thoughts you want to share? Now, I'm sure you can have, yeah.
No, I think probably we were self-explanatory, I think.
No, good. So I think with that, I think I'll close the panel discussion. Thank you so much. I know we had a good audience. When I first saw the room, I thought it was very big, but I know with the social distancing, we've got a good full house with all the COVID norms in place. But thanks for being here. and really look forward to interacting with some of you during sessions.
Yeah.
Thanks.
Thanks everyone. Thanks. Shashwat.
La noche no se mueve. La noche no se mueve.
Joining Sonia will be Arzan Singh Purwala, who's the channel partner leader, WhatsApp for Business at Meta. Arzan, welcome.
Did he just step out?
He stepped out?
Probably he just went to the restroom.
Yeah. We also have Srinivas Jain, who's the ED and Head of Strategy at SBI Mutual Fund. Welcome, Srinivas. Joining him will be Aditya Sudhindrana, Partner Consulting at Deloitte. May I ask Sonia to take it from here while we expect Arzan to come in a bit?
Okay.
Yeah. Just a couple of minutes.
Yeah.
Yeah.
In the back, you guys may want to move ahead.
Yeah, everybody's sitting so far out. Hi, Arzan. Welcome. Great. Thank you for being here. And so we'll get started. A very interesting conversation. We've got, a lineup of somebody from channels, somebody from mutual funds as asset management, and then of course we have Aditya here, who's going to be talking about some emerging trends in technology. So it's going to be a very interesting mix of questions and some thoughts that are going to emerge from this session, hopefully. And especially around the topic is such where we're talking about financial inclusion, right? And with so much of digital happening around us, right? So much of interconnected between services and products that we're all witnessing as customers, you know, it would be very interesting to explore you know, what's next? India, of course, has been recognized, you know, as probably the global hub of fintechs now. And of course, a lot of it, thanks to the Government of India initiatives, a lot of other, you know, initiatives by a lot of innovations by fintechs, which is of course riding on the India stack, that has really helped, you know, to kind of spurt this growth. But looking at still, you know, some of the challenges that we come across, right? Whether it is digital lending, whether it is customer acquisition for various products and services, there's still a long way to go for us, right? So, you know, with the huge populace today that we have, which remains unbanked, Arzan, my question is this for you. So we've heard a lot of buzz in the recent past few days about online grocery ordering, you know, with what Meta has done with Jio. Is this kind of a precursor to what can happen, you know, in groceries to financial services, right? We're assuming that a lot of super app aspirations are there with Meta. And how does this kind of, you know, work for a very tightly regulated financial services industry? It has been very traditional in its approach so far. And where do you see Meta kind of helping fintechs and other financial services to adopt WhatsApp to be able to include a lot of that unbanked or underbanked, or even in larger parts of the you know, urban and suburban population? How do they kind of make themselves more investment savvy, if I were to say that?
Very long question, but I'll try. So first of all, WhatsApp is a technology platform. And so technically agnostic to any segment or industry or vertical, but because it's a consumer app-driven engagement, it is common to any industry which serves a very large consumer base. So typically financial services as a whole is a very big audience for WhatsApp banking, and that's primarily because it serves a very large financially included audience, not just in metros, but even outside. So as a technology, we enable businesses to build their experiences for their end consumers, whether it is pre-purchase, when they are considering to, you know, buy something, you know, during the purchase, when they're actually being able to buy something from WhatsApp, like how you saw in the Jio app, to even post-purchase when it comes to customer service automation or doing any kind of business support services, which can be automated, saving a lot of cost for the business and a much better experience to the consumer. So as a platform, we are obviously industry agnostic. The reason why financial services and fintechs are at the helm, because they're the biggest consumers which are, you know, being targeted. They're, you know, the way we've progressed as a nation on financial inclusion is absolutely tremendous. And that is why more and more people are coming to the platform. So that is the first answer to your question. The second part, look, you know, on a population of 1.3 billion, where we have, you know, 400 million plus consumers who are currently using WhatsApp, you know, if you look at any consumer brand, the largest of brands in our country, whether it's, you know, a Flipkart or an Amazon, they really haven't been able to go beyond targeting 150 million active monthly consumers who've consumed their product either through their app on the mobile or on their website. Which means there is a huge room for growth for any brand. Okay, let's take fintechs for example, to find that population who is digitally included but never really purchased or, you know, done anything online. They could well be having the financial power to do it. They could well be targeted in different languages depending on, you know, geography and their first preferred language. But it's just that because this audience is suddenly very visible, and due to internet penetration accelerating in the last half a decade, is where, you know, biggest of brands and marketers are seeing a potential to go and see how can they include these audiences. And the biggest reason why WhatsApp has become such a powerful medium is because brands have realized that the audience's digital presence today is highest on WhatsApp than any other platform. Right? It's an app that you probably check first thing in the morning or the last thing at night. You're there for like maybe an hour or two collectively for the whole day. So it becomes a very natural, intuitive way to connect with your audiences, because even audiences now want to connect with businesses the way they choose to, not when a telecaller chooses to call them or when an email comes to them asking for, right? They want to do it at their pace, which is why I think there is a very big opportunity across businesses, and financial services is obviously leading the way.
Great, thanks, Arzan. Would you want to kind of comment on, so SBI, of course, SBI Mutual Funds is one of the largest asset mutual funds out there in India. Do you kind of, and then we've seen that, with this whole UPI, initiatives that have been launched. However, there's still a miss, right? We still see a lot of population, especially beyond, let's say, tier 2 cities, not really exposed to digitally. We're not talking about physically somebody coming into a branch and investing, but digitally, if they, want to access or want to invest, there still remains, some dark. It's like a vacuum, right? So do you see, how do you see basically bridging this gap for the masses, right? Where does investor education, where does investments, even if they are small but consistent, right? Do you see Meta, or what are some of the things that you see in terms of, tech addressing these opportunities which still exist?
Yeah, it's a good question, because we've also been grappling around the low offtake of financial inclusion. And this is, for over the years, we had multiple challenges. The first challenge was identity issues that got solved through your Aadhaar. The second challenge was access with the mobile penetration that kind of got solved. The third issue was financial education. We've been running these mutual fund Sahiye campaigns and others to try and get more and more people to understand what these new generation products are. The fourth big thing today is about end user experience. I think that is where we are still grappling to get financial services kind of right. The experience for financial products vis-a-vis, let's say, an e-commerce, or let's say any other products that you buy, is also based on a trust index. It's money that you're dealing with, it's investments that you're dealing with. People are kind of happy with certificates, things that they know, things that they can deal with. This transformation has to happen. And sitting here in an air-conditioned room in a big city like Mumbai, it's a little easy for me to say, why does somebody in a small town want all this? I think it's an iterative process. There are, at every piece of, if things are falling in place, you have all of the levers that are required, the entire infrastructure guardrails that are available, road rails that are available for us to at least do the transaction digitally is available. Now the next thing is to get that experience right. Now to get that experience right, people have been experimenting. So you've been trying to build use cases which are, some years ago we did SMS-based banking, SMS-based transactions. And that's because your 3G was not there, your digital footprints were not there. But that was an innovation at that point of time. Today, everybody has apps and websites, but again, the experience is kind of jankier. It's not working perfectly. And financial services per se is a very high jargon-based industry because of the regulatory. So you've got to solve for that too. So there is a communication. But the last thing is that you've got to be everywhere, right? What we like about what WhatsApp is doing and what we're also doing with WhatsApp is that you make it easy. You don't have to download an app. You don't have to go to a particular website. You don't have to. You just say a hi on our WhatsApp channel, and you get all the information.
And it's trusted with that blue tick.
There's a blue tick too. But the bigger thing there is that the experience, as it starts getting, it's always a muscle memory. As you start getting better at it, you will see this take off. But the big challenge for us was solving for education. We're yet to fully solve for that. Then we solve for experience. And once you solve for experience, I think this will take off. But I'm very hopeful, right? Today financial penetration in India for a very long period of time before Jan Dhan happened was so low. Before demonetization happened was so low. Before COVID happened was extremely low. Now things have just skyrocketed. So there's a lot of fintech innovation that's happening. There are a lot of infrastructures that are coming into play, and there are existing infrastructure which are now being leveraged to make that happen. I'm more hopeful than ever before that you will finally see, I don't want to call bottom of the pyramid, but people capable of investing getting an opportunity to invest, and that they are in millions, hundreds of millions.
Correct. So, in solving for these problems, would you want to share with us what were, let's say, the top three, ways in tech or use of tech that you really, helped you kind of, get to that point?
No, the one thing, of course, clearly was that you need to build a very open structure, an open architecture. You just can't say you have this asset or this app. You have to work with partners. One of the stuff that we've done is we built in 2017-18 our own stack that we call it InvestStack, SBI InvestStack. We use this InvestStack and we have partnership with all the fintechs that they use this. So all our experience building digital experiences are now not necessarily only a B2B experience. It's a very good B2B2C experience. And the minute you are able to build a good quality B2B2C experience, that leverage actually kicked in. The second thing we are still experimenting is regional localization, right? So it's a tough cookie to crack because only a small portion of India speaks English, and all our financial conversations are in English, and all assets are in English. And we got to crack that part, right, if you really want rural penetration. So we've started with our Hindi website and Hindi transaction capabilities. It's very, very early days, and as we start building more regional and more capability, that's when it will happen. And the last thing is affordability. And for a very long period of time, we were very obsessed with having high transaction count, average ticket size being low. We today have tokenized, right? You can do transactions of 100 rupees in a mutual funds today, right? So the economies of scales actually have made penetration easy. We actually work with a small fintech entity called Pinbox. They are actually building a solution for savers in small rural Orissa, who from a onboarding experience to final even the self-service model is completely built on a WhatsApp kind of an experience. So yeah, so it's an experiment. It's some way to go, but I think partnership is a way to make this happen.
Sure. Thank you. Aditya, so building up on that, especially on the tech, so you do a lot of consulting with enterprises, right? And you also execute for the enterprises. Yeah. What are some of the, largest or emerging tech that you really see? So of course, WhatsApp clearly remains one of the most loved app that is downloaded. But again, a large part of Indian population still is surviving on feature phones. They do not have smartphones yet. So while we may say that we have about 600 million users on WhatsApp, but again they could be probably on a very light app of WhatsApp, and the others are on feature phones. So how do we leverage? What are those interesting pieces of technology that can actually be used to look at financial inclusion outside of this channel, right? For distribution, for acquisition, investor education. He talked about the onboarding experience and reducing the friction in an onboarding. So how do you what has been your experience, and what do you see as the new kind of sets that where fintechs are looking at adopting?
Yeah. So if you, thanks Songya for the long question again. Fintech has, if you just take a step back, fintech has been a key player in the whole financial inclusion strategy for India, right? And if you look at all the different companies and platforms that have been exponentially grown, right, over the last maybe, thanks to the pandemic, over the last 2 years, and maybe even before that, I think the market stands around 50 billion right now, easily. Wow, easily, okay. Right? That's the, if you look at the market cap at least. Now, why has it grown, right? It has grown because all the tech giants have invested, right, in terms of can we get people onto these platforms in various ways, right? So there's a lot of data, there's a lot of customers, right? So I think where we are moving is people, before the pandemic used to talk about omni-channel, now they're talking about omnipresent, right? So what does that mean? That means today if I'm communicating with a customer on WhatsApp or any other channel, right? How do I take that conversation, make it live across my other channels, right? For example, phygital or digital, right? It could be a footfall at a bank, like for example, SBI, right? How do I translate that conversation back into a phygital conversation? Because if you want to continue the conversation again, right, the customer experience should not drop. It should be a warm handover, as we call it, right? That could be across even IVR, it could be across the call center, right? So two main technology trends emerge. One is how do you do the communication, contacting and providing, right, information. So if you just look at purely the urban tier 1 and potentially even the tier 2 market now, thanks to WhatsApp, right? I think one of the web and app interfaces, you have conversational AI, which is playing a huge role. If you look at the number of low-code players out there in the market and the tech giants investing in natural language processing algorithms, right, it's become massive, right? Because that'll really help you gratify customers instantaneously. You can do transactions, you can do financial transactions, which is linked with different payment gateways, right? You can also raise queries and tickets even on citizen service governed portals, right? That's very important. And how does that actually translate into a physical form? Now, IVR is getting replaced by voice bots, right? And voice bots which are vernacular, which is the most complicated use case in India to solve. As Mr. Srinivas was saying, like having a Hindi website and a Tamil website, it's not easy as translation, right? You need good vernacular skills and technology to understand that, right? So that's getting translated into CCAI solutions. If you look at all the big players out there in the market, right, they are focusing on how do you replace your standard, static IVRs with really modern way of cognitive voice bots. So if you say hello loudly, it'll understand your tone, right, if you're already a registered customer, and it'll react to you in a very different way, right? So that is obviously the art of possible. Right? You do still have static IVRs. It will take us a while to get to a cognitive way of working. But then that can really transform the experience. And if a person's having a conversation on WhatsApp and continues back on a call center, right, it's not going to start from ground zero in terms of name and identity verification, right? So this whole contact center AI and conversational AI is a huge space now for urban tier 1 and tier 2 markets, right? The next thing, if you look at when you're talking about even physical stores, right, I think obviously the whole world is moving towards cloud, right, the various cloud, different technologies. But I think cloud coupled with blockchain, right, is going to be, I would say, the silver bullet for most of the physical interactions that are happening. And why is that? Is because it gives you user control for customers and for the organization and for the vendors. It gives you identity authentication, like Aadhaar and PAN. And if you look at, there are so many startups out there. Like today's biggest use case in fintech is lending. Right? There are so many articles out there and why they're shutting down a lot of apps.
No wonder RBI took a note of it.
Yes, lending is huge because lending in, as Arzan was saying, if you want to go down to the panchayatis, right? There, lending is like in 1,000 rupees, right? That's lending. But how do you get to those places, right? Through these apps. But then you need to regulate that. You can just give your PAN number and you can get onboarded. Right? You can talk to a voice bot and then it fills your form automatically. You don't need educated people, right? So blockchain is going to really transform that as well, right? And I feel this is not a technology, but I think the most thing overarching all this is someone like Zerodha who's doing it really well. It's called financial literacy, right? Today, I think financial literacy, I was reading somewhere, don't want to quote the name here, but I think it's about less than 25% across adult male and females, right? That means when you're going to invest in a platform, on a platform which gives you access to many assets, right? People don't know what it means. Like when we were talking about NAV, right? Or you're talking about returns, or you're talking about how do you calculate an ROI for a mutual fund. People don't understand that, right? They just see ads and they invest 1,000 rupees every month, right? That financial literacy, as long as it goes up, technology adoption also will go up because AI, machine learning alone will not be able to solve the future. Right? So that's how I kind of would categorize that.
So I have just one question before we kind of, we kind of move forward. So technology is one side of it, Aditya, right? There's only that much that technology can do. We talked about conversational AI, right? You talked about Hindi and vernacular translation. So my point kind of goes back to, Srinivas sir, is that, where does investment from FI come into the picture? So, as much as you may want to adopt technology, we've also heard really sad stories about failures of technologies, right? Bots have been there for probably more than a decade. We're not talking about conversational AI, which means a different kind of processing power, which means a different kind of training altogether. So, from the largest, mutual funds today that exist, how are you really solving for that problem? Because at the end of the day, there has to be a commitment from even the organization to say that, okay, I am going to invest in resources who are going to kind of help us with this financial literacy. And then, so what are some of those back-end challenges that you see today, which can tomorrow be leveraged as opportunities, with the tech that he's talking about?
No, I think that's a challenge, right? There's a limited commitment to making this work. What I mean to say it is that usually people pick up what's on the shelf and try and go with it. There's a lot of hard work that is required. I mean, I gave you this example of before conversational AI, what we were trying to do. And now conversational AI is an investment that you need to do. Similarly, there was SMS banking today, mobile banking, there is app-based banking, and now we have moved to WhatsApp banking, right? So this is a journey for which you'll have to make those investments. And one of the downside is to either wait for it to happen or be a little early and make those investments. So some of us have been experimenting. So we bought took our voice part, which is Alexa and Google Assistant, in 2018. And for the first year or so, like the usage was so low, we should have just given it up, right? The platform itself is very early. Right? Things were like not happening, things were taking time. Today it's reasonably good, right? But still we are not able to solve for identity, we're still not able to solve for, so you can just give generic information there. I wish I could talk to Amazon Alexa and ask SBI Mutual Fund's portfolio value today, which can't happen. It just can't happen because of the way the technology is kind of, I mean, some fintech guy will come and say, I have a solution, but that doesn't work because there is a regulatory environment. So you'll have to work around both, right? The solution and the regulatory environment. It's a multi-year investment. And if you're passionate about solving for it, it's going to happen. Taking this whole stuff, right? So today the advantage is that most large organizations are in the corner of their organizations experimenting with these things. We know it's too early, it's going to take a while to scale. WhatsApp experience for us was a COVID-induced experience. We had no option. Right now that COVID is kind of behind us, it's kind of taken off. And when we did, I'll give you what we did. When we did this for B2C, we were very successful. Our partners started jumping and saying, "Humko bhi to do." We are also in the COVID environment. So we had to quickly come up with this similar solution for our B2B2C experience. So these investments are critical and we need to make those investments, and large organizations are doing it, but even the smaller can do it. For that, partners are available. There's tons and tons of fintech partners available for you to work with. One of the good things that's happened, and I was going around the exhibition booth, there's tremendous amount of talent, and large organizations are just looking forward for some use case or something that needs to help us solve for our problems today. Yeah, I don't know whether I answered your question.
No, absolutely. So, Arzan, one last question for you. So, with this whole, focus on the new UI that WhatsApp is now, done with Jio, and of course we're hoping that a lot of other enterprises and partners can leverage it to really bring a more app-like experience out for, even financial services, right? So the next buzz that we are hearing about is WhatsApp Pay. We've heard a lot of things around even in the booth today. Do you see this kind of, being that trigger for that next level of financial inclusion? Do you see that, like UPI, for instance, was a huge catalyst in itself? So where do you kind of see, and what are the use cases that you're primarily looking at solving, where we can actually truly get some momentum built on, having more unbanked coming on and then consuming these financial services?
Okay, so like I mentioned earlier, we are a technology platform, and depending on what every business, every customer wants to do, we will enable them to tailor their experiences for their audiences. Now, there could be someone who's, let's say like a Cred or a Flipkart, who wants to use the platform as a sales channel to send intelligent marketing notifications and enable a consumer to do a transaction through the medium of his choice. In that case, having a payment option available within the app is something that will make business sense, because it will help him to reduce his funnel drop and get him to do a purchase natively within the app itself. Now, there are organizations that will encourage a consumer to buy regardless of whatever payment method they choose to be. I mean, it's not like you have to do it. You could do it through any of the UPI apps that are on your phone. And WhatsApp Pay is work in progress. It is one step forward towards becoming present in the UPI space. And it's a journey. We're doing pilots with a few consumers, and we will soon go live, P2M over a period of time. And whenever that happens, that's what you've seen in the Geo app, right? Likewise, there are some businesses who are less focused on commerce, but let's say more focused on customer service automation.
Right.
So there is differentiation that businesses choose to build to tailor their experiences for consumers on the platform. So it is entirely dependent on a business as to how they really want to build that journey. What is it that their customers really want? Like, there could be a bunch of them who are using only UPI apps and not really a credit card or a debit card. So, they could make it customized to the target cohort that they really want to go and tap into. So I think that is how it is, and that is something which will keep evolving as the entire payment industry also matures.
Sure. So Aditya, on this note, again, with conversational AI, especially on WhatsApp, right? If the enterprise aspiration is to kind of go and acquire customers, like he said, there are only about 150 million of them who can be on these apps, right? Beyond that, if there is really, huge audience which is coming on WhatsApp, and is getting powered by conversational AI, are we saying that the next gold mine of data is now sitting in this conversational AI, because all your events that earlier used to happen on, let's say, web or apps which are not getting downloaded anymore is now kind of, residing in the space of chat and voice and everything, right? So is there something that you are doing with organizations? Is there something that, fintechs or other large organizations which have this huge base and therefore huge amount of data, how is that getting leveraged?
So I'll take a use case. It'll be easy for everyone to understand. So we took an organization which is very similar to Staples. I think everyone knows Staples globally.
The office stationery.
The stationery, and it's called Officeworks in Australia. So they wanted to do similar for kitchen appliances, right? These small trays, the trolleys, and the handles. But they wanted to go to the local, even villages, to sell there. But now how do they go there? WhatsApp, right? So we put that whole thing on WhatsApp, right? We enabled the WhatsApp business account, and we built a different UI on top of it, right? We brought the whole business online, right? And at very low cost, at great margins for them, right? And it was personalized. When I say personalized, because the diversity challenge India brings to you is amazing, right? I mean, cultural diversity, you have language diversity, you have multiple different things, right? So we were able to tackle all those pockets.
And you don't have to build apps and then maintain iOS and Android and versions of them.
Exactly, absolutely, right? So and we enable that through WhatsApp. I'm just giving you a use case. And now all the data is residing for that. So normally what we refer to is like a data charter. A data charter is basically building in good operating model for your data, which means there's a place where you generate data, there's a place where you curate data, there's a place where you ethically use data, right, with all, not just because policies are there, but because it's customers' data, right? And there is a place where you communicate the data back to customer, either for revenue purposes or for experience purposes, right? So you build that whole operating model for data, right? And you kind of run with it. That's what we did for this organization as well. And the most important thing there is transparency, right? Because today, I mean, again, plenty of issues out there in the market. What do you do with customer data and the transparency, especially post-pandemic, right? People are fearing in terms of where all my data is being used, right? So you want to be very transparent with them in terms of where the data is going to be used, right? I think that is very critical. I think that's the key thing we tell people in terms of you have millions and trillions of data, but can you start being more transparent? Can you be more ethical, right? That is going to get you a better revenue uplift than just going and bombarding with offers.
Correct. No, absolutely right. So it's important to get all that data back into your maybe your CRMs and your CDPs and then continue to harness that. Great. Thank you so much. I would leave this session quickly open to the audience. If you have any questions, any queries for the panelists here, please. Yeah, of course. I think he's just getting you the mic, so. Yeah, we'll do 2 questions.
So the question is for Mr. Srinivas Jain. So while you're talking about the ways SBI Mutual Fund is using to leverage, it's more about reaching out to customers, right? Technology used for that. But what is SBI doing for the strategies that are there for mutual funds, right? How to improve that? For that, is any new technologies being used like AI or something else?
No, just this morning I had a session with SEBI chairman, so I can tell you. So I think the mutual fund business of investment management is a little bit of an art, a little bit of a science, and of course now a whole lot of data. We've just kind of scratched the bottom on the data side. There's a whole lot that can be done. But data can also be too disruptive. So we need intuitive approach with data. So we're building lots of models internally. We have a data science team. But it's very early days. We don't want to be an algorithm company. We want to be a company which can add value. At some point of time, these things will become big. But at this point of time, it's like a small experiment incubation that's happening in the company. So we are one up on it. We are one of the few asset managers who spend a lot on data science. We have a dedicated data science vertical. Specialist, we have a small R lab in the company. We do a lot of that stuff. But when you were to ask me, is there a proof of the pudding? Not yet. Like in one example, I can give you one thing that we did very well is when the COVID happened and there was this whole, so the issue was about understanding how was the impact of COVID. And we used a lot of big data algorithm coming from open data, especially on logistics and transportations, where things were stuck up, where things were not moving, to predict how bad the situation was. So at a macro level, we still are able to make some opinion, but not at an investment decision level. That will take some time.
Okay. And is SBI MF doing anything on the quant fund side, developing a quant fund, real quant fund?
Like I said, quant funds are, I'm not saying it's bad or good. We do a lot of passive funds. You might have seen today we launched 5 new passive funds. For us, quant and passive are in between, right? You try and take an algorithm and work on it in a quant. Here, you've already built out an index that's out there and you work on it. Somewhere we'll come to what is not necessarily quant, what we call a smart beta. At some point of time, we'll come to that level. We do 1 or 2 small smart beta, but we'll come to that. But this conference is more about
inclusion. Yeah. I know. Thank you.
Hello, my question is for Arzan. So as you mentioned that WhatsApp is looking to be a front for a lot of businesses and a lot of future applications, like as ma'am also mentioned what you did with Geo. What is the outlook when it comes to health services? Is that something which is being explored? Because earlier today when there was a session on e-rupee, for example, and there was a lot of discussion on how targeted benefits can be given, and as you must be aware, NHA is leading that effort. So on those lines or on any similar lines, is there something that WhatsApp is exploring on the lines of health services or on health financing even, especially when you look at WhatsApp itself being a payments portal now, or a payments gateway, sorry.
So thank you, great question. Unfortunately, there's not much that is currently visible to the outside world on what's happening on healthcare. But one is, of course, the entire discussion with NHA and the central government is parallel track. And whenever that goes live, that goes live. But to give you a few examples in India, Narayana Hospital, one of the biggest hospitals headquartered in south of India, they have enabled patient care for patients who have got diabetes through WhatsApp. So notifications as to when does a patient have to take an insulin shot every single day, which is critical. Those kind of notifications, getting a feedback back to the consulting surgeon to make sure that everything is on track. So they have been way ahead of the curve in terms of envisaging how technology can be a game changer within healthcare. And they're working with one of our partners to identify use cases that will give consumers a much better experience rather than standing in lines or waiting in casualty to get an appointment. So again, like I said, it's a start. It's, they're probably thought leaders in our country, but looking at what they've successfully been able to implement, I'm sure a lot will follow suit, especially as there is some kind of direction and order from the central government with respect to technology adoption within healthcare.
Okay, so we'll wind up the session. Thank you guys. I quickly want to summarize my key takeaways from the entire session. Of course, Aditya, going back to you, organizations have to be omnipresent. And I think different tech stacks are kind of, enabling that. The largest amongst them is conversational AI. And that is something that, alludes to why WhatsApp is so popular, because, it's something that really makes absence of an app, not really felt. It's something that helps in distribution, customer acquisition, literacy, really adopting a lot of these services that, fintechs and FIs have been aspiring for. And and of course data, like you said, harnessing all this conversational AI data and then using it effectively within organizations. I think there's a huge opportunity that presents, to every one of us in the next, I think, about 24 months or so. So great having you guys here. Some really key learnings and takeaways. And look forward to interacting with you guys, more.
Thank you.
Thank you, Sonia.
Thanks a lot.
Thank you so much, Sonia, Arzan, Srinivas, and Aditya for doing this with us. Our next session is a special address by Mr. Muzaffar Hamid, who is the CEO of Mercury. May I call upon Mr. Hamid to talk to us about the present and future of real-time payments. A special address on the present and future of real-time payments by Muzaffar Hamid. Welcome, sir.
Good afternoon, everyone. I was just looking at the session and saying, what an opportune time just after lunch to talk about real-time payments. But I promise not to bore anyone. So, in fact, just before we start, a quick introduction about me. I'm a career banker. And now I've shifted to a different field, which is domestic payments, networks, etc. And I think the idea when I received this topic was looking at how over the years my career has changed with respect to payments. And then I looked at rewinding the clock and figuring out how I did payments before when I was in banking, in payments, and how it has changed over the course of the years. And what I noticed is that our consumers are becoming lazier, so which means that technologists in the room and in the industry have to become smarter. And often we look at different kinds of transactions in a very siloed manner. And I think the talk and the presentation is aimed at communicating the fact that this is not about just transactions, it's about much more than that. So I actually added, my ticker is not working, and there we go. So I added a theme to it, saying it's just not about transactions, it's about relationships and how we create and manage those relationships. I think more often than not, a lot of people believe that you can acquire those transactions over and over again while not maintaining a solid relationship between a sender and a receiver. More often it's a fling than a more formal kind of relationship, and that's what we aim to achieve. If you look at the big numbers, right? What does the present have? I think I'm fortunate to stand in a country where obviously is the birthplace of a lot of domestic payments, and nobody can talk about domestic payments more than what has happened in India. I manage a company in UAE, which is a domestic payment network, and of course, we always look at what developments have happened in India. If you look at across the world, we're talking about a lot of money that changes hands. A lot of countries in the world are participating in ensuring real-time payments domestically, right? Which is going to save a lot of money for governments and countries and consumers across the world. So you're talking about $200+ billion that will be saved while having real-time payments enabled in those domestic countries, right? However, this also leads to other situational problems like fraud and risk that arise with that. So the present is really something that tells us that the adoption of real-time payments domestically is widespread. If you look at this entire map across the world, you will see countries really adopting standards which the local consumers enable real-time payments between whether it's P2P or P2M, etc. Now, obviously, India is the lead runner in this, and we always look at it. However, I think when it comes to looking at it from an international perspective, there is definitely a need for a global RTP. And that's where we are missing out at the present time. And the fact that there are close to about 300 million migrants, which are all around the globe, the fact that a lot of money is sent across the border, especially from these migrant countries and into their domestic home countries, there is definitely a need, and hence, I guess the topic was very apt, that how do you take a domestic RTP and convert it into a global RTP? When we look at different ways and numbers that really matter, I think annual remittances are close to about 700 billion and increasing every month. More people are migrating to countries that provide better jobs, better facilities, etc. So all these payments lead to a hidden amount of money that lies within networks, and which I call, if you can look at it, about $10 trillion is locked up in networks. So this is where the absence of real-time payment, settlement, etc., will really enable them to have much, much better and easier and cost-effective thing to do. A large proportion of people also look at how they can move money from one place to the other without actually having the knowledge to do so. So obviously, the international migration has created corridors between different countries, and the flow of funds is across the board. And the need is really significant because the way people move money from country A to country B is often defined by convenience, often defined by price, etc., where they don't really maintain relationships across the board. If I look at the evolution of the payment industry over the years, and I'm still in the present, I haven't yet gone to what we can do. So we've gone through a lot of stages of payment evolution, and it's really all about the experience. So when you talk to consumers today on why would they select one aspect or one mode of channel versus the other, it's experiential. And a lot of times now, and we can see it in young consumers, they really don't want to interact with different people, right? And this is my personal experience as well, that there's a store now in Dubai, in one of the malls, where you can actually go in, have an app downloaded of that store, card number registered, pick up whatever you want to buy, and then just walk out. And your checkout is done as you walk out with the item. So this is what is contextual or invisible payments, right? This is really where the market is heading. So contactless, all of those kind of payment aspects that are really a thing of the past. The consumers today really want to do very little when it comes to payments. And I think that is very important to understand. So experientially, how do you ensure that the consumers today are able to seamlessly move out, make payments, and enable themselves across the world, right? If you look at the journey again today, it is somewhat like my career graph, which is going all over the place, right? In fact, a lot of experience today is broken. And hence, even Mercury, the company I belong to, I head, our aim is also to look at this broken journey and, of course, have the opportunity to see how we can fix it and make it much better. If you look at the graph, the experience in terms of price, of what is expected by the customer is often different. And this is largely due to, the sender and the receiver not really having a relationship. I think the next couple of slides actually describe what the problem is. So if you look on one side, that's the existing sort of payment infrastructure that we will all be familiar with. And what I put on the other side is what really it should be. So I think there are plenty of people that have crept into this chain of sending money from one side to the other. And there is definitely a need to harmonize this. A lot of people are making unnecessary amount of money. And the only enablement, and we will talk about it in the next few slides, is how do we ensure that payments from the home country to the destination country go through as less number of hands as possible, and then have a way of actually talking around compliance, governance, and security. I'm always afraid of any regulators in the room, so I hope there are not any regulators around. Unless that the regulators back a whole change in this way of interaction between different countries, it is not going to be easy to adopt a very simple phenomenon. We all know you can't have a talk about future of real-time payments unless you talk about cryptocurrency. And I think that is one of the things that will definitely happen in the future. If you look at, in my view, humble view, that the future has to be interoperable. You have to have payments and networks talk to each other. Today, the only interoperable solution is a bank account, and people are used to this legacy type of arrangement and legacy type of frameworks around SWIFT, etc. Eventually, I think the catch-up will happen, and it's a matter of time when we will adopt new standards of integration between different countries, harmonize them, and lead to a more immediate and instant settlement. I think that is the key. How do you enable it? And this is, again, my take on how do we enable the future. Identification is a real challenge in the current scheme of things. So using concepts which have been used domestically, even by UPI, etc., on aliases or phone numbers, mobiles, etc. They are unique numbers, especially mobiles on the telco side. And telcos do this beautifully, by the way. And the way we go to different, we cross borders, our phones change networks, and we don't even realize that it has happened. We roam like home, as they call it. But when it comes to payments, it is very unique, and often we don't understand. So I guess account identification is really something that will drive the future. We're also talking about compliance and governance, as I mentioned. The whole idea that you can have tokenized compliance which can be shared across when the payments travel from point A to point B is where you build a source of trust between the sender and the recipient. And often there are a lot of regulations across boundaries, and once you build a source of trust in the network, and I think that's where it will become easier for people to have payments across the border. I think clearing and settlement, which needs to happen instantaneously, is also something that will drive RTP payments, global RTP payments. This is done wonderfully in domestic networks all around the world, and people are used to doing this domestically. There is obviously a challenge when it comes to cross-border, foreign exchange, etc. But if you have a harmonized clearing and settlement, this is where it will take us to the next road. I think adoption of blockchain technologies or cryptos is essential. This will really enable settlement in real-time basis. Eventually, as I said, it is definitely going to happen. And I think all of us are waiting to have some bit of a regulatory push. And that is really what is going to change the game as we move forward. I think that's all that I wanted to say. And I would be more than glad to answer any questions if you had. Yes, you had? Yeah, please.
So I just wanted to ask that how Mercury is intending to position themselves for this change of present to future of payments.
Sure. I think we are blessed to be in a country that is really a fountainhead of a lot of origination of remittance to different parts of the world, right? Mercury being a domestic payment network is enabled across the country, where we control a large portion of these flows today domestically. We want to enable them across the border by different arrangements, and we are talking to different countries, their national domestic payment networks. The idea is how do we have lesser hands touch the payment from one place to the other? How do we remove latencies as we see it today in the payments, and how do we make it efficient? Consumers today pay a lot of money to remit from one country to the other. And the moment you make it efficient and fast, that's where Mercury is all about. Thank you very much. Thank you.
Just a second. We have a token of appreciation from NPCI for Mr. Hamid. May I ask him to receive that, please? Thank you so much. Our next session is a panel discussion on interoperability for cross-border payments. I'll announce the panelists in just a minute while the stage is being set. Pat, just a minute. Yeah, I'll just announce that. So a panel discussion on the interoperability for cross-border payments. The moderator for this panel will be Mr. Pat Patel, Executive Director, Elevandi. May I request Pat to please take the stage? Thank you. Pat will be joined by Mr. Naushad Contractor, the Chief Executive Officer, Fable Fintech. Naushad, please. May I also welcome Richard Anderson, Senior Vice President, JCB Card International South Asia, and Stefan Merz, Managing Director at Chief Strategy at Growth Officer, PPRO, who will be joined with by Subrajit Basu, the Regional SVP APAC Markets, Wallets and Fintech at Discovery Financial Services, and also welcome Don Kwong, Head of Partnerships at Pomula Pay. Thank you so much, gentlemen. May I ask Pat to take it from here, please? Thank you.
Thank you very much. And it's a great pleasure to be here. So just a little intro on me. My name is Pat Patel. I am the Executive Director for a company called Elevandi, which was set up by the Monetary Authority of Singapore, in clearly Singapore. And we set this up ultimately to build bridges between the public and private sector around the world. And so the purpose of this conversation today, as you can see, is around interoperability for cross-border payments. But the bit around this, ultimately, is nobody wakes up in the morning thinking, I'm going to make a payment today. I'm going to have a great time at making that payment. And so that begs the question, why are we all here? And the simple answer to this is payments are complex. Payments can be inconvenient and can be very costly. And so that is the reason and the purpose of this panel. And it's also one of the key facts about payments is that it is probably one of the most lucrative verticals within fintech. If you look at some of the investments that have been made over the years, it's absolutely insane. We're talking about billions has been poured in from investors around the world into payments. So whether it's companies like Stripe, whether it's Klarna, whether it's Wise, they've all been really well funded. And it's a spotlight because while payments can be quite mundane, it's absolutely crucial to the functioning of an economy. And so if we look at, say, India, and there were some great presentations yesterday by the legend that is Nandan Nilekani. About 87 billion USD in remittances occur in India, whether that's receiving, ingoing or outgoing. And it's probably more if you include the black market, and it's an unknown number there. So it's way above the 87 billion that's currently quoted, which equates to 3.2% of GDP. So today we have an esteemed panel from all walks of life, and I think I want to ask each one of the panelists to give maybe a one or two liner on who you are and a little bit about your organization. But if we can try and keep it to 1 minute, that would be fantastic. So your time starts now.
Hi everyone, my name is Naushad. I run a company called Fable Fintech. It's a cross-border transaction technology platform company. Anybody who wants to think of making a cross-border transaction of any kind, person to person, business, whatever, legal, illegal, etc., you should think of us, because we'll ensure it's legal, but you should anyway think of us. I'm just taking a cue from the 50% extra that Pat just alluded to. Very nice to be here. Thank you for your time.
Hi, I am Richard Anderson. I look after JCB's business in India. JCB is the only brand, international brand from Japan. We work with a partnership with NPCI. I look after India business.
Yeah. Hello? Hello? Oh, okay. So my name is Per Mertz. I'm with PPRO, right? And we are helping payment service providers, banks, fintechs to solve the complexity of cross-border business. We're operating an infrastructure layer where we're connected, where we have 150 local payment methods connected to, and we are really an infrastructure layer and the whales, right, for what Pat described, payments, and we're not waking up in the morning and thinking about we're doing a payment today, right?
I don't know. Maybe there's some people in the room that do that. We'll find out.
Hi everyone, my name is Shubhrajit. I work for Discover Financial Services. If that name doesn't ring a bell, then Diners Club. And I'm responsible managing commercial payments for APAC and geographic GM for this part of the region.
Hello everyone, my name is Don. I'm from Pomelo Pay. So it's a UK-based fintech with eyes in the emerging Asia market itself. Our customer is the banks itself. So I take care of the global partnerships, and basically I'm building a partner ecosystems for our customers to make more money.
Thank you. So it's great to have a diversity of voices, but also a diversity of companies on a panel. And that's why this session is going to be really compelling. We're going to start off with a small game here. And some of the panelists know about this game, but not all of the panelists. And it's a game called Underrated, Overrated. So what I'll be doing is either throwing in a phrase, something maybe a little bit controversial, or a type of payment method. And the panel have to simply say whether this fact or this phrase is underrated or overrated. And so the first thing I'm going to start off with is cryptocurrency is the best form for cross-border payments. Underrated or overrated?
Overrated.
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 Agree with the crowd, overrated.
I want to agree, but maybe to make it interesting, I would say underrated.
Wow. Wow.
Let's have a discussion.
Does anyone in the room think it's underrated, cryptocurrency, as the form for cross-border transactions? There's nobody in the room. So I think if you went to a blockchain event, you went to Consensus, it would be the other way round. So okay, give us a reason why. Why is it absolutely overrated?
In most parts of the world, cryptocurrency is not a need. So as a form of, trading in them, it's a very different thing versus using them as a payment method. For trading in them, a lot of people must have made a lot of money, and that's why it's great for them. But as a payment method, do you really need it? The answer is definitely no. And that's why it's underrated as per me.
But if you take away the trading, the casino style of cryptocurrency, let's park that, and you look at the utility, the value of the actual technology, surely it can get from point A to point B much quicker without intermediaries.
No, I agree with that statement. The only point is any payment needs to have inbuilt trust. Does at this point in time crypto inspires that kind of trust? That's a question mark. The day the technology and the payment form inspires trust, I think the answer would be different. But as of now, no.
I see it fairly similar, right? And SP Pro, I think one of our shareholders is PayPal. And I once talked to the PayPal chief strategy officer, and he told me PayPal is actually a security company that happens to be in payments, right? And this was very eye-opening for me because it's about trust, right? And the reason why people using different payment methods is because there's trust in a certain payment method, right? And that's exactly, I think, the answer. I think to make money, probably Bitcoin is the right thing, but is there trust? I don't know, I have question marks.
So does it change if it's digital currencies and we're talking about CBDCs? Does that change?
If it's a sovereign back, yes.
Okay, stable coins?
I mean, personally, I don't really believe in cryptocurrency because there's no underlying fundamental values to that. But the underlying technology, like the blockchain, I think is undeniable. It will be here, and it is really making things very differently. So if you talk about CDBC and stable coins, I will personally vouch for that. That should help really, especially all the smart contract stuff like that. Yeah.
Okay.
Yeah, I think it's a no-brainer that blockchain and the technology is going to actually take this thing forward. But in the current form, like the panelists have mentioned, with the security issues, with trust issues that they have, and also the acceptability issues that a lot of countries will have on crypto right now, it's not a viable form for people to look at, for transferring money from A to B. So at this point, the technology is great, the idea is great, but implementation is going to require building that trust and security in the system.
Okay.
It's very much like NFC was, say, 10 years ago.
Okay.
Exciting, but not useful.
There's another meaning of that, no effing chance. So we're going to move on to card transactions. So card transactions are the best form for cross-border transactions for commerce.
Any kind of transaction is always got its own requirements, and for certain use cases, I'm sure cards are one up on the others, and for other use cases, probably they are not. So it would be incorrect to make a blanket statement that any form of payment is God's gift to this ecosystem in general. So there could be certain transactions where cards are great, but certain transactions where cards don't play any role because of multiple reasons. It could be cost, form factor, unavailability, requirement of infrastructure, so on and so forth.
So we're going to go back to the game. So it's underrated, overrated.
Sorry, didn't say that.
It's two simple words. And I'm going to flip this. Cards will die in 5 to 10 years' time.
That statement is underrated. They won't.
Okay.
They won't.
They won't.
Very underrated, they won't.
This one I can't say they will. Yeah, because I think they will still need some kind of form factor. Yeah, you need to feel it somehow.
Next time you have to ask him first.
I was going to ask you first.
Yeah.
It just goes onto your mobile. You just don't need that plastic. Okay, so embedded finance, embedded payments. So underrated, overrated.
This one I would say underrated. Yeah.
Okay.
They are critical. Yeah.
Purely from a financial inclusion lens and the way you spread the finance, underrated.
Yeah, I would say it's also underrated, and I believe it's a growth opportunity.
Yeah, underrated.
I would say it's underrated in the short term and overrated in the long term.
Okay, because explain a little bit further.
The incumbents will catch up, and then this embedded finance thing might not become relevant. That's my view.
It's a buzzword at the moment around the world. Everyone's saying embedded finance is the way forward, but ultimately that means the money leaves your account much quicker.
That's fine, as long as the place where the money is finally actually placed in embedded finance, when those guys take over the rails, the guys creating this embeddedness will kind of become irrelevant.
Okay. Anyone want to add to that, or should we? It sounds like everyone's unanimous. Okay, we're going to move on. So banks will continue to be spectators in the cross-border payments race.
Definitely underrated. Yeah.
You asked him first, he's got a different answer.
He's got a yeah. Okay, explain.
I mean, they definitely have to be an active participant. No way they can, be a spectator for now. If I look at our friend P-Pro here, there are major banks invested into the company. Right. So
Okay.
they are definitely doing something on that. Yeah.
Let's move on.
Definitely underrated because no government will lose control of the ability to own the monetary system. And banks are the instrument to own the monetary system, right? So
Even for cross-border?
even for cross-border, because it's again still between one monetary system or one monetary authority to another monetary authority, right? So as long as that dramatically doesn't change, banks will be fulcrum to money movement irrespective.
But what if you use TransferWise or Wise?
It's still a technology play, but end of the day, if you look at the broader spectrum of money movement, banks at the end user place, like end of the day, it has to come into an account, right? Banks will be fulcrum to still being a very important part of that system.
I see it similar, right? Okay, as just mentioned, I think we have JP Morgan Chase and Citi as shareholders also in PPRO.
And they're watching.
They have different ways to innovate because I think they know that they're struggling internally, right? And it's hard for them to compete with a Stripe or some of these fintechs. But for sure, they will play a role going forward.
So I look at it in two parts. When you look at cross-border, we're looking at basically P2P or smaller ticket transactions versus large ticket transactions. I'd say banks play this very well when it comes to large ticket transactions, and one of the big reasons why they're so strong on this is the trust thing again. A lot of people trust that. But when it comes to small ticket transactions, and I think that's where a big play, a lot of fintechs also coming into that smaller ticket bucket because they're providing much more efficiency with regards to cost and speed as well. Okay, so for example, if you look at a cost of 5 to 10% of transaction cost on a transaction from a large entity, some smaller or newer fintechs are giving into that in a fraction of that cost. And very often they're not even moving the country cross-border, money cross-border. It's coming from one account here to being dispersed from a different account in a local bank in another country. So bringing those things across, I'd say that in such a scenario, banks I think are going to be a little slower to move on this. What's going to happen, I believe, is that over a period of time, these fintechs are going to get more and more market share. I read a recent report that over the last 3 years, it's gone from 93% of bank control over cross-border to 87%. I think it's going to continue to move. It's going to move through the small ticket transactions primarily first. And over a period of time, these same players will start playing on the larger side as well as they build confidence in customers at a lower level.
So I'm trying to work out if that's overrated or underrated.
So
it's a lot of words.
So I'm saying that it's underrated from a perspective of smaller ticket.
Yep.
And overrated from a perspective when it comes to corporates or large ticket transactions.
We got there in the end.
I think it's heavily underrated. In my opinion, banks are just waiting and watching and learning. And they've got these switches that they can just quickly turn on to start participating if they so wished. They're also waiting for, in many cases, they're waiting for the unlimited funding to fintechs to be able to buy that business from them to kind of go away before they step in and say, let's talk now that we are on an even keel and an even playing field.
Yeah, I definitely agree with the last comment there. I'm not sure if there's a switch that can be flicked.
It's called Fable.
Ah, okay. We're coming to the end of this game. The future is cross-border ACH in real time on your mobile. It's nothing else. It's not cards. It's ACH, connecting to each other. Still uses the bank network, but it's point to point. So who's going to come first with this?
Underrated.
Underrated. Okay.
Underrated.
Yeah, same with me, underrated.
I think I'll disagree. I think it's overrated. Connecting ACHs of various... End of the day, I think the topic is interoperability, right? You are never over till you finish the last mile. You cannot be say just 3 of the ACHs. And so if it's... The reason I'm saying it's overrated is, yes, I agree, real-time payments is the future. I'm not very sure ACH to ACH connect across the world will take a very long time knowing how difficult and the process is. There are some phenomenal work being done in India and stuff, some of that like India and Mars and all that, but I don't think the entire world is at the same level. So it's taking a very long time, so I'd say overrated.
Anyone want to argue with that?
ACH. How about, do I consider UPI similar to ACH? Yes. Okay, if it is, then yeah. I would say so. Yeah.
ACH is statement. Whether it's real time or not is not relevant, right?
So real-time payment,
It's rarely real time. It's ultimately near real time. But you're seeing that with India and Singapore, Singapore and Thailand, Singapore, Malaysia. And so these are the pilots. And then you've got similar waves of this happening across Europe under a funny name called SEPA. And you've started to see this happening. But it's moving. And it took maybe 10 years to get the first one going. And within a year or two, you've started to see more. So I'm just curious to see if anyone disagrees or agrees on this.
The biggest risk to this pilot is, the biggest risk for this piloted plane to crash is not having thought through the other aspects of a cross-border payment, which is the purposes, is the documentation kosher, am I by mistake sending money to or from a person who I shouldn't be sending money to? All those things are not taken care of by these apparent innovations or government-to-government linkages. And that needs to be built, and I'm reasonably sure, I mean, since I'm a James Bond fan, I'll never say never, but principally, I don't think any government is willing to take that risk upon them. I've built these amazing rails between the government of X country and Y. The payment is absolutely real time, but you got to decide whether it's Osama bin Laden's cousin and Dawood Ibrahim's nephew transacting or not. That is the big reason why this pilot plane could crash if it is not taken care of.
Anyone want to add anything?
I think coming back to what you mentioned earlier, the question is time, right? For some of these statements, right? For sure, I think it took 10 years. It will go faster, right? You mentioned SEPA for Europe, but clearly there are still hurdles. I fully agree, hurdles that have to be overcome, right?
Okay.
But I really believe it will come.
Okay, last one in the game. So payments is a race to zero. Why are we sitting here right now? So underrated, overrated?
Depends on venture capital.
Okay. I'm assuming that's...
that means it's
sitting on the fence.
Highly possible, but extremely underrated.
Okay. Payments is a race to zero.
Yeah, it is underrated. Look, payments, while it enables everything, right? Payments are central to life itself. So I'd say that statement is underrated.
So you're saying payments is life?
Payments is life.
Wow.
I think, yeah, absolutely. I agree. Payments is life, right? Because there's lots of complexity to solve, right?
So do you wake up in the morning thinking, I'm making a payment today?
No, but I know I won't get through the day without making a payment.
Yeah. Good. Yeah. Correct, right? So we are not waking up, but payment is an important part, right? And for me, I think the interesting piece, if you think about, coming back to the earlier comment, it's a trust factor, right? In most cases, I think what we all experienced, we started shopping cross-border during the pandemic, right? We didn't know about the merchant, I didn't know about the name of the merchant, right? But I trusted my payment method, right? It was a super important decision, right? And I think that's the rationale.
Agree, it's underrated. I mean, payments, end of the day, is still clunky, right? There's so many frictions still to solve. I think there's a long way to go on that.
But if you have a good infrastructure, national infrastructure, the friction goes away, no?
It reduces some of the frictions. I don't think any country has been able to do away with all the friction, right?
So for me, I guess everyone here is really payment-related audience here, so it's definitely underrated. One analogy I would want to share is like, I actually started with a telco, so we make money from IDD call. You know, last time, many years ago, you actually pay exorbitant fees to make a cross-border international call. But nowadays, WhatsApp is free data. So looking into payments, it has been evolving. So I believe it will continue to evolve. You never know. I mean, 20 years ago, e-commerce, unheard of. Now, the last few years, boom, everyone, everywhere. Digital, contactless. Yeah. So it will continue to evolve, I would say.
I think that's overrated or underrated.
Now underrated, yeah.
Okay. All right. We're going to move on now because I want to get the energy levels up. So, what is the biggest challenge in cross-border payments? And I want you to pick one of the four. So, is the biggest challenge cost? Is the biggest challenge compliance? Is it speed, or is it interoperability? So we're going to start with Stefan first, and then we'll roll round because I think I'm picking on you too much here, just by virtue of where you're sitting.
You asked, we should pick one, right? This was the task that was given to us in the prep meeting, right? And clearly for me, it's right now, it's compliance, right? And I always give an example. I joined People 4 years ago, right? I'm one of the 3 managing directors. If I had 3 interactions with our regulatory body 4 years ago, it was probably a lot, right? In half a year, right? If I think about the interactions we're having right now, and the scrutiny and the level of maturity, I think we brought to the system, it's unbelievable, right? So I think it's clearly, I think the compliance piece is an important part, and you have different systems in different countries, different requirements, and aligning this, I think, is, to pick one, the biggest challenge.
Yeah, I think there's a lot of work coming out at the moment to say, and this is research to say that fintech companies that crack fraud and compliance are the most successful. So if you look at the last 10 years, so fintech as a term, it's a horrible media term, came out in 2012. For the last 10 years, those companies that have cracked compliance and fraud have gone on to be the winners at the moment. And so that's probably one of the things, if you're going to take one thing away from this, is think about compliance and fraud. It's absolutely boring, but it is very, very important. Next, pick one. Don't be shy.
For me, it's, even as a consumer, it's myself, trust. Trust is very important for me. Yeah. For example, I do a remittance to Malaysia itself. I actually test with a small ticket size, $100, whether it's sent or received the other side before I commit to do a bigger transaction amount. So to me, I guess if you're talking about money, we need to trust that it works in a sense. Yeah.
Okay. Next up.
I would agree with Stephen. I think compliance. I'm taking a purely network lens, right? I think the toughest part actually moving money from one country to other is actually compliance. And if anything goes wrong, you're liable, right? And so, and it's a brand impact and everything. So I think when people become slightly more risk averse and not willing to take that, it slows things down. There's not too much of, I would say, innovation coming in. So I think if somebody can sort out the compliance piece, I think there'll be a lot. Everything else, other 3 you said, will move in sync with that.
So I think it's interoperability for me, but it's largely driven by compliance and regulation. So I think a lot of the times the systems can't talk to each other the way they need to because of different laws in the land, the different checks and balances there. So I think that's what drives the interoperability for me.
So one of the big reasons why the banks are not active players, and as per some statistics mentioned, losing market share to the fintech world, is because the regulatory lens is very different for a bank and different for a fintech company. If the bank makes the same mistake, they're fined 20 times what a fintech company would be fined. Whether it's fair or not is for you to decide, but that's the reason why they're staying away from this. So regulatory compliance and regulatory and compliance are definitely, even in the Fable platform, they're the crown jewels. And contrary to what Pat believes, in fact, in our industry, one of the reasons we don't wake up and think of doing a payment is because the compliance guys don't let us sleep at all. So it's one of the truths, whether we accept it or not. And that's the fact of our lives. And we need to, the biggest mistake we can make is to assume that X company or X person or X group of people have cracked it. The cheetah will always run faster than the gazelle because it has to eat. So fraudsters will always run faster than our solutions. So we have to keep making new solutions and trying to beat getting eaten up by the cheetah in this analogy.
Nice. I was going to say, is there a silver bullet here on compliance or interoperability? What could happen? Because I agree that your compliance function, fraud detection, all of these elements need to be evolving. So it needs to get smarter as it goes along. So you have complex models using algorithms. But is there a silver bullet on this? Who's got a silver bullet?
I don't know if it's a silver bullet, right? But for sure, I think with we have some large PSPs like Stripe as our customers, and we're debating with them, is there anything where we can work together? It comes only, I think, with working together, right? If I think about our network, yeah, we can be a meta layer, right? Because we're sitting in this two-sided network with local payment methods on the one side and all our PSP and merchant partners on the other side. And can we help detecting fraud patterns earlier? Can we help to make a risk and fraud solution of Stripe more powerful, right? Those are discussions we're having with our strategic partners, right? Is there a silver bullet right now? I can point to most likely not, right? But I think it will evolve, right? And it will evolve around these collaborations where the solution will come from.
Silver bullet for interoperability, seeing as it's the purpose of this session?
So I think it's going to be a natural evolution, very honestly. And the natural evolution, I say it this way because, especially given the post-pandemic scenario and how things are emerging, we've got a more connected kind of a world. You're going to have people demanding more and more towards doing cross-border payments. And the moment you start having more people pulling towards that, you're going to have discussions moving towards things like even crypto, things like this. You're going to have central banks talking about how do we actually give that kind of convenience to our customers while managing control. So they're going to find ways to create these pipes between countries where cross-border payments will move much more faster, quicker, and in a cheaper manner. I think that is going to drive an overall change in the whole industry.
I think the fundamental point is information. Why is this a challenge? Why is a risk? It's basically lack of information, right? Till I think regulators or entities figure out to get more information in the domain, which helps reduce the compliance risk, I think this challenge will remain. I mean, that's not going anywhere as a silver bullet. I see actually a contra scenario evolving. Look at the data privacy laws coming in every domain of geography, whether it's data localization. I think it will be more difficult to actually get data outside your geographic domain. So I'm not very sure there's a silver bullet of this compliance risk going away in a one polarized world. And second, very, very strong geographic denominations of their laws. Earlier, a lot of the stuff would be dictated or said by like what US follows or UK follows. In a multipolar world, India may think differently, China thinks differently, and European Union thinks differently. So it's going to be a much more interesting place with everyone having their strategic reasons. For Russia may or may not be a very different, but for EU countries, Russia may be a very, very different animal, right? So this is going to be actually getting more difficult rather than actually reducing. So there has to be a lot more work to solve it.
Yeah, agreed.
I think the silver bullet exists. It's just that the gun that fires it is missing. That's my personal view. So I think somebody needs to focus on. We figured out a few silver bullets. They're all lying on the table. There's no gun that it can fit into. And one of the reasons that is lack of collaboration. Lack of collaboration between not even just competitors, but even complementing solutions are not collaborating. Having said that, information is very important, but on 10th September 2001, Osama bin Laden was fine. On 11th September, he became a criminal. That kind of speed of change of information is also very difficult. You can aspire for it. You can think about, I want it like that. It may not be available at the same speed. So these are the reasons why, like Pat just mentioned, most real-time payments are actually near real-time. I think we will definitely achieve a near silver bullet. The silver bullet itself is probably similar to a unicorn.
For myself, I really see the silver bullets are the regulators around the world. They're opening up. It's just like my Singapore Deputy Prime Minister was here in India to discuss, interoperability. And I'm really looking forward to use my, my bank as my pay now to do a UPI transactions in India. So it is something that I really envisage that maybe in the next 5-10 years, I think even the G20s are also talking about all this collaboration at the same time. So maybe in 10 years' times, when I do a UPI kind of transactions, I actually do it seamlessly, immediately, transparently. And at the same time, I can get some cashback and rewards. This is what the credit cards are giving me now, cashback. I'm not getting cashback if I do a UPI now. Yeah.
That's because there's no fee that can be charged for UPI to cash back.
Exactly.
Give it time. So I think the interesting point you just made there around kind of collaboration occurring across markets, and it's the concept of a cross-border sandbox. I think there is a lot of mileage there, and fintechs can start to experiment and launch products and services in different markets. But I think if you're going to take another kind of soundbite away from this session, I think the silver bullets exist. It's just not the gun. I think that's a quality soundbite. I hope you guys are recording that one. The next one is to flip challenges to needs, because you've got these challenges, but it's got to be based on the understanding of a consumer. And so, what is the most important consumer need today? And so we've solved, as an industry, we've solved some of these over the last 10 years. But if you had to pick one of the four, convenience, security, trust, and cost, which one would you pick? And we're going to start right at the end. Come on, Don.
I would probably still choose
Sticking
trust.
with trust, aren't you?
Yeah, for me, trust is really important.
You seem so paranoid.
Exactly. Because I have been scammed many times, you see.
Okay. My sincere sympathies.
I think fundamentally, why does a consumer use a certain payment instrument or use cash or whatever forms of payment is because he has fundamental trust in that payment instrument. I think that's the final decision being factored. Till any method doesn't inspire that trust, whether it's cross-border or domestic, things are not going to change. So if we can figure out a way to inspire trust to the lowest denominations of the society, right? I mean, if you divide society, the top half have all the payments instruments they use. It's actually the other lower end of the spectrum where still it's a very cash-heavy market. And thanks to you, likes of UPI, is where now we have newer digital payment consumers coming in. I think why did they start doing it? Maybe because of need, but now they trust that payment instrument. I think that further the trust develops in the system, I think that's the way to go.
Fortunately, Pat, I have to say the same thing, right? It's trust. No, I think it's very simple, right? Coming back to the PayPal statement from earlier, right? The PayPal sees themselves as a security company, right? Trust is super important, right? Again, in particular around cross-border, you don't know the merchants, but you trust your payment instrument. This is the reason why you're using it. Will it change over time? Yeah, hopefully, right? Because I think the industry is evolving, cross-border is evolving, and then other things are more important. But we know out of our data, because we can compare in our two-sided network merchants, we can compare PSPs, we can compare their conversion rates, that if you don't have the relevant local payment methods on the on your checkout page, right? A lot of times, I think the site will be abandoned, right? And we're estimating roughly 20%, right? So you need this trusted payment method. Because otherwise the shopper will at the end switch and look for something else or somewhere else.
I just can't go with that big ticket, small ticket things. At big ticket, I think trust is the one for me. But if it comes to small ticket, I think it's speed and cost. Because sometimes your small ticket things makes the cost to it, makes it unviable, it makes it no-go itself, if there's a fixed cost to it. So that's how I look at it.
So numbers speak louder than words, which means that if venture-funded fintech companies are spending some of that venture fund on acquiring customers by buying them. Still only 13% from whatever I heard has moved to them. The remaining stays with banks who are charging almost double, but customers are still sticking to the bank only because of trust. There's no need, there are lots of banks in India who offer 6% interest instead of 4% interest. Just by that logic, all 100% of the India's banking should have been done by those 2 or 3 banks that offer 6% interest. The point is that those guys who are at 4% trust their existing bank and they don't. So trust is genuinely in banking and payments number one consideration in the consideration set of customers.
So it's all about trust. Okay. So in my opinion, and not that you want to know, it's cost for me. It's cost. I think trust we've kind of resolved to a degree. If you go via your bank, it's costly. But anyway, let's move on. We're coming up to the last question. And so if you've got questions yourself from the audience, we'll try and get some time so you guys can ask those and the panelists can attempt to address them. So last question for me, in 10 years, what should cross-border payments look like? So let's try and be quite creative about what that should look like. Hopefully we've resolved trust, there's no paranoia. Who would like to go first? Can I have a victim? Go for it.
I think in 10 years, it will be a different form factor. Majority would move to mobile. It will be almost near real time.
Will there be cards?
There will be cards, but majority of a certain segment of population would have moved to a very mobile-oriented or even something more advanced. It will be near real time in certain geographic corridors, for sure. And definitely more seamless, one-touch transaction.
First of all, I would say in 10 years we don't talk about cross-border anymore because it's the same form factor what we're seeing on domestic. So this is my hope, right? And I think we'll get there from a technology point of view. So there won't be any cross-border discussion anymore. I agree, it will be mobile, it will be seamless, it will be embedded, right? I think always refer back to Uber, right? If you think about why they're so successful, because there is no payment button, right? Coming back to your comment from the earlier, from the start of the session, you're not waking up in the morning to make a payment, right? You want an Uber ride, and a payment comes with it.
So I think trust will be developed in many more parts of the ecosystem. Today it's just a few, and that will then lead to experience being the most important thing. I'll give you an easy analogy. So 10 years back, you would have to open your car with a key. 3 years back, you could press a button. And now with smart key, you just walk into your car, you just open the door and walk in if you're a certain distance, etc. Payments would evolve into doing that.
What car do you have?
My company is not very well funded, so I'm ashamed to say that.
Wow.
Right now. In 2 years' time, we'll talk. In 2 years' time, we'll talk.
Sounds like Knight Rider.
Yeah, it sounds like that, but that's how it is. When we saw Knight Rider when we were kids, we thought, oh my God, but now it's the way we are. I see a world, even in cross-border, where through the camera of the laptop or the phone you're rocking, that guy will just scan your iris and the payment's done because it's linked somewhere to your payment instrument. The experience will be the king in 10 years' time. Form factors, I don't think there are many more to evolve to. But depending on use case, the user experience will become number one. People will be willing to pay a 5-10% premium for a great user experience. In those 10 years, a handful of companies would have consolidated themselves in multiple ways and created enough trust for now trust being much wider than it is today. And that's my view.
I think we've got everyone's out.
So,
yep.
In 10 years' time, I would foresee, hopefully, like all the cross-border pain points are all resolved. We can make payments seamlessly. The phones or card form factors, I'm not sure it will still be what it is now. It's just like you look at iPhone 14, it's not much different from 13. So, probably there's no more phone anymore. We might be, using metaverse to do cross-border payment if there is a need. And like what he mentioned, iris payments is truly the experience. In 10 years' time, I think that is very possible.
So in 10 years' time, there will not be this panel on stage. We will all be redundant and retired. Okay, no, you're good. So we've got 5 minutes. Now's your chance to ask those questions. Make them tough. These guys need a grilling. So we've got a few questions at the back. I think we don't have any microphones. But maybe you could stand up and shout your question out.
Think of me as your wife.
Wow. You're a lucky man.
Can you hear me? Yeah. So very useful discussion. You did touch upon cryptos, but I think somewhere there's a difference between cryptos and blockchain, right? So in that context, the Swift GPI, for example, they're trying to do something which is information as well as speed. So in that context, maybe there'll be solutions where a blockchain, along with the standard rails, where the trust factor already exists in the banks, can come in. That's what, let's say, a Flywire or a Wise is doing already. So get wholesale and distribute retail using blockchain for information. So that's the future, you feel? That's how the interoperability and the speed and the costs will go down? Is that a possibility?
Do you work for Swift?
Beg your pardon?
Do you work for Swift?
No, I don't work for Swift. But I did work for a company which developed on the sandbox a blockchain-based solution for cross-border. That's how I was thinking that as a competition to Swift, maybe a blockchain solution away from Swift GPI.
Cool. So Swift or Ripple or any one of those players that are doing good work in this space. Any thoughts?
So maybe in principle, I think I agree. Blockchain as a technology, as we discussed earlier, has merit, right? And I believe in it from a technology point of view. I think, as we discussed earlier, cryptocurrencies right now, I don't see it. And I have data because we have BitPay as a payment method, right, on our platform. It's super small, right? I think there's no consumer demand. At all, right, to pay with crypto right now. It's similar to what you discussed earlier. It's all about making money and yeah, betting on it.
Like we say in the industry, we're still waiting for the ripple to become a wave.
Wow, what a poet.
I agree, yeah.
Next question. All right. I work for the Mojaloop Foundation. We're trying to solve the problem of making sure every country has UPI or Pay Now, so we'll solve that problem if it's not every country in the world. So my question is related to real-time payments. Projects like Nexus are connecting all real-time payment systems for P2P, but the use case of being able to use my UPI app when I go to Singapore or vice versa to make a merchant payment is the one all the bilaterals are focusing on. So what's going to be the use case that we focus on? Is it going to be P2P remittances, or is it going to be merchant payments, or is it going to be e-commerce, or something else?
So I think the fundamental question is, does every country or every use case really need real-time payments? That's a very important question, because real-time payments is not cheap. While we love it, we'd love to talk about it, nobody talks about its cost and its impending price to the customer. In my opinion, real-time payments are not required in probably 75 to 80% of the cases. Real-time information is. As I'm happy to get the real-time information, I'm happy to do the transaction, and I'm happy to get paid the next day. So it's actually a fundamental question which you guys need to also think about, and all of us as well. Having said that, real-time information is very important, and you can buy a ticket tonight to go back to London on Expedia.com using your MasterCard, and Expedia doesn't even get paid till you reach London. So it's perfectly fine, it works amazingly, nobody really cares about it happening real time, just to make an easy example for you. So you need to think about those things when you ask these questions in your mind, saying, is this use case, is real-time payments critical to this use case or not? And then you'll start getting the answer about, do I need to do it this way or that? So even if it's a merchant payment through even UPI or whatever, as long as the merchant gets comfort and confirmation he'll get the money, I think the transaction is considered real time for us.
So I see it absolutely similar, right? It's about real-time information, and as a platform, I think we just have redone our what we call sub-ledger, right? We have real-time information at any given point in time, and I see it similar, right? As long as I think I know this payment will come, right? It doesn't really matter if the money arrives a day later, right? But real-time information is important, right? And we believe in it. We invested from a platform point of view in these capabilities, and so that we can expose it to PSPs and merchants. At the end, I think you want to change the paradigm in industry, right? Right now we're pushing it out. We're pushing out a settlement to a Stripe, and then a Stripe is pushing out a settlement to a merchant, right? At the end, with real-time information, you want to change this paradigm. You want to have a pull, right? So the merchant sees right away after the transaction, hey, the transaction took place, and that's the most important part. And if he wants to get the money earlier, then maybe pre-settlement he takes a charge, or he waits a day or two, depending on the payment scheme. But real-time information will be key.
Okay. And what happens once these ACH link up? P2P's done, person to business, that's coming through. What then happens to business models?
Yeah, it's a good question. If it happens, I think we'll have to all search for new jobs. But till that happens, I think networks have a dominant share of how money moves in this world. And I think even networks are evolving. I mean, what networks were 10 years back, I've worked for Visa 11, 12 years back, to what they are also evolving how they move the money. So end of the day, I think businesses are a function of dominant power, right? Look at the way, how large and how well funded networks are, or how many investments they are making in other allied areas. That power of ecosystem they're building, it's almost impossible to dislodge unless something absolutely earth-shattering happens and a domino impact. Otherwise, they're not going anywhere.
Okay, I think we're running out of time. So 3 things. We're all going to be redundant in 10 years' time if you're in payments. You need a silver gun to shoot silver bullets. And I want a brand new car, exactly the one that you've got as well, because I think that sounds fantastic. I've just got it there. Cool. But thank you very much for your time and deciding to listen to us talk on about cross-border payments. Thanks.
And for those from outside India, welcome to India.
Thank you, gentlemen, for doing that with us. We appreciate your time and your inputs. It was quite an engaging session. Thank you. We now move on to our next session, which again is a panel discussion on grasping the opportunities in embedded banking and digital identity verification. Before that, it is time and appropriate for us to thank our partners, our co-agenda partner, Lyra, our co-agenda partner, PayPoint. We thank our session partner, Feedzai, Bureau ID and RIICO. Also our gold partners, Jokata, Pay10, Innovity and Beams VC. Our next session starts in a minute. May I request all the gentlemen in the room to either take their seats or maybe move on further to the back of the room. Thank you. May I request the gentlemen to please take their seats or move further back into the room. Thank you. Okay. So ladies and gentlemen in the room, the next session is a panel discussion on grasping the opportunities in embedded banking and digital identity verification. And the moderator for this session is Ankit Ratan, the CEO and Director, Scienzy. May I call upon Ankit to take the stage, please? Ankit will be joined by Ajay Setia, who is the founder and CEO of TrueG Emtra. Welcome, Ajay. We also have Prabjit Singh Bhatia, who is the co-founder of Falcon with us. Welcome, Prabjit. Pratik Daundkhane, co-founder Decentro. Welcome, Pratik. We also have with us Pushkar Mukewar, who's the CEO and co-founder of Drip Capital. He's not here with us, maybe joining in a little bit later. Sabyasachi Senapati, who's the CXO and head banking vertical Bharat Pay. May I now ask Ankit to take it from here? Thank you.
Thank you so much, and thanks everyone for still sitting there while I think majority of people have kind of, walked to some other panel. So thank you so much. I think maybe let's just give 2 minutes because Pushkar is not here. But let's start with introductions. I'll request my panelists, maybe starting from Sabyasachi on the right, to give a short introduction of himself and his business, and I think then we'll start with the panel.
So I'll keep it really short. I think no one is interested in introduction. I think we should get to content soon. So I lead the banking vertical at Bharat Pay. I think Bharat Pay needs no introduction. At Bharat Pay, we started off as a payment solution, QR payment solution company. And now we've gotten into deeper partnerships with banks and other institutions to offer a range of products to our merchants and consumers. In addition, we, in partnership with the NBFC, got a license from RBI to start a small finance bank, right? So that's another area also where a lot of effort is going towards product and technology, which I am leading as well. Prior to Bharat Pay, I've spent a few years in the fintech and e-commerce industry, was part of Paytm and delivery organizations, and before that I spent a good number of years in management consulting.
Maybe Pushkar, given that he's just joined.
Sorry for the delay, guys. So I'm Pushkar Mukewar. I'm the founder CEO of Drip Capital. We are essentially a digital trade finance platform focused on providing working capital solutions for SMBs, which are engaged in cross-border trade. We are a global company. We operate across multiple markets. India has been one of the key markets for us. However, today we do operate with sellers and buyers across 80 plus countries. To simplify, actually, we offer two kinds of solutions. One is for suppliers. We offer invoice discounting solution for small and medium-sized exporters. And then for importers, we offer sort of a buy now, pay later solution. We have been around for about 5 years now and have, sort of operate a global team of about 400 people spread across 3 main offices, Mumbai, Palo Alto, and Mexico City. And personally, I've had a background in financial services and technology, spent a number of years in financial services across consulting as well as risk analytics and so on and so forth. Yeah. So look forward to the discussion.
Yeah, Pratik, yeah, please.
Hey, can you hear me? Yeah, perfect. Hey, hi everyone. My name is Pratik. I'm the co-founder at Decentro. What Decentro is we are a fintech as a service infrastructure company. So essentially we make it very easy for any company to integrate any fintech app into their ecosystem. So as quick as 1 to 2 weeks. I think Ankit mentioned I should make it a little bit more light. So I'll just say a couple of things about myself. So yeah, I think the reason I'm into fintech is because the first thing is my father outsourced all his corporate banking stuff to me, which I did not necessarily like. So yeah, I think that's one of the major reasons. Yeah, otherwise, I split my time between Mumbai and Bangalore. Yeah, that's a very quick intro on me. Thank you.
Hi, I'm Prabjit Bhatia. I'm the co-founder at Falcon. We are a BaaS platform that helps companies launch their fintech products. The need for Falcon actually began from our own, in our earlier avatar, we were Kite, which was a B2C platform, and it took us almost 2.5 years to launch our platform and our product into the market in partnerships with banks. And one of the very interesting things that we realized was that 90% of fintechs don't even see the light of day because of how many resources go into just making sure that you're able to launch. The first meeting with any FI is very, very good, but due to lack of resources, lack of bandwidth, lack of understanding between the two sets of companies, everything after the first meeting starts going downhill. We actually have a program where we help you launch your fintech in a day with low-code, no-code solutions. And why I believe in this space is because in my earlier avatar, before Kite and Falcon, I have built a company from scratch in a tier 2 city called Raipur in Chhattisgarh, where I built a beer business from scratch and realized I was the founder of Simba Beer, and we realized that how broken banking is. And while my company got a 100 crore term line from a very large public sector bank, we could not get something as simple as a corporate credit card and many such solutions, which actually made it a nightmare for us to compete in the real world. Yeah.
Hi all, I'm Ajay Setia. I'm a second-time entrepreneur. Before that, I bootstrapped one company called Invincible Publishers and E-Learning. I recently sold that in March 2022. The name of our new company is Emtra, where we are automating the verification process. This is a 1-year-old company, and this is about us. Thank you.
No, thank you, panel, for being short. I can see people are very happy that it was not a long introduction. So thanks for that. So I think, so the panel topic is on embedded finance. I'm sure it's a buzzword like blockchain, but given that people are so interested in blockchain, our goal is to actually make you interested in embedded finance also, even though it has that boring word of finance. So I think to start off with the most, let's say, obvious doubt that every guy who has been in finance is, that is embedded finance just DSA and BC in a new bottle? Or is there really truly anything differentiating? So maybe I'll start with Prabtej on this very obvious question from an old finance guy.
Yeah. See, DSA, and it's as starkly different as Internet 1.0 with Internet 2.0. Internet 1.0, large part of the web searches were related to porn, and how the world has changed after that. You're going to see the similar effects of that in finance. Embedded finance is largely going to make the entire financial angle to your life invisible. Before you know it, before you can understand it, there will be products and services that can get delivered to you. Verification, ID, the whole friction has to be moved away. And today, what we talk about is, right now what we've seen is some sort of a customer front-ending of the fintech or the leg. But as more and more backend services keep on getting added, be it trade finance, before your company comes to know, the fintech enablers will be able to see your needs and how they're evolving, and we will be able to underwrite risks to you, loans to you. And loans is one angle. They're able to, they will also be able to launch newer sort of products that will give the customer the the control. Today, a relationship with your bank or with your FI or any institution is very transactional, one way. They are the sellers, you're the buyer. Soon it'll become this interaction between the two parties, and you'll see newer products like a completely independent company that has nothing to do with finance giving you or selling you a solution to make your life easier. Maybe I can, should I?
Maybe take an example, because we have heard this good stuff. Maybe like take an example which truly helps the audience understand that, how can, let's say, an HRMS really add value beyond, your marking your attendance.
Yeah, so I think one of the very interesting companies that we're working with is an earned wage access company. And based on the analytics of their HRMS and the way that you've worked and how much you've worked, they'll actually they'll start with giving you a earned wage access. So 15 days you worked in the company, they'll give you a finance for that, the customers, without even them knowing, at very low interest rates, because it's being backed by a very large company that's definitely going to pay you. The second leg of it is most companies in India, most people in India are blue-collared, grey-collared workers who don't even have a credit card or any sort of credit solutions. Last night I was sitting with one of the India's leading CEOs of home finance companies, and they are actually now embedding their home finance business into this HRMS. So, moving from earned wage access, it's going to also go to home finance and a secured credit card lending product, because they're not sure of being able to, they're not sure of, they're not able to underwrite risk on a lot of these customers. But with this HRMS data embedded and getting this information in real time, how much this person is coming, what is his attendance like, they are able to build credit scores, and also pattern justification is being built within their systems to see, to foretell what kind of needs or risk this customer might have.
No, I think that's amazing. Yeah, I mean, of course, there's an angle of privacy which we'll deal in the second part, that, if my ratings are known to my borrower, like how much I've worked in the company, I'm sure people will work harder and stay longer. So, but we'll deal with privacy in the second part of the panel. But I think to give even more flavor, I think we were Pushkar having a chat offline, and you were describing how a product that's manufactured in India and sold in US, like every leg of that has embedded finance, in that chain. So it will be super interesting to understand for the audience, I think, how that's happening.
Sure. So I think just to elaborate on a typical transaction, so as I mentioned, we are a trade finance platform. So when you, if I walk you through a customer example, let's say you have a small business exporter or a manufacturer in India. They get an order from an overseas buyer like Zara, right? They manufacture the goods, takes them about 30, 60 days to manufacture the goods. And then they are shipping the goods out. The goods leave their factory, get packaged in a container, clearing customs, and then getting on board a ship. And then they are still waiting like 30, 60, 90 days to get paid, right? So now if you really think about it, what we are essentially offering is a trade finance solution which allows these customers to get paid as soon as possible, because that then frees up their working capital, which they can use to do more orders and so on and so forth, right? So I think, of course, through the journey, I think as we've seen, right, there's a lot of third-party digital platforms and entities which are touching the transaction, whether it's customs, whether it's your logistics companies, whether it's clearing agents at the importer end, and actually partnering with each of these entities provides an opportunity to somehow inject ourselves in that transaction and be able to provide financing for that transaction. And we are actually, I think, as the world has evolved in the last 5-6 years, we've seen a lot more technology adoption across the value chain, and that is what is creating opportunities for a trade finance player like us to essentially partner and embed our solutions, right? So like, for example, even large shipping lines, we are working currently with a couple of very large shipping lines where the use case is that the exporter is actually booking the container to ship the cargo out. And while booking the container itself, we are trying to figure out if we can provide them a one-click financing solution, saying that instead of, whatever is the value of the container, we can help you get the money upfront, right? So I think as my co-panelist pointed out, the experience for the customer in such a scenario could be completely seamless. They don't have to deal with a bank or a lending institution, which they typically do, and they can get financing within the context of what exactly they need it for. So this is again something which we are seeing in the trade finance side also, a fair amount of innovation happening and a lot of technology players coming up, which creates opportunities for us to adopt and partner with them. So.
Yeah, no, I think that's, again, super interesting, especially you at one side and maybe so many players who you are embedding into, like Sabyasachi maybe, but your business is slightly different, right? While you do have a banking NBFC license, at the same time you have the largest merchant base, or probably one of the largest merchant base in the country. So how do you think about embedded finance? Do you see yourself manufacturing all the products for your consumer base? Do you think about partnerships? Like being on both sides, like how are you thinking about this space?
Yeah, so interesting question. So I think the short answer is we will look at partnership with banks or the larger financial institutions to offer a range of products. See, we start off as a QR payment solution provider, and in that respect, we've onboarded a large base of merchants, especially the smaller merchants across the length and breadth of the country, right? Now, these merchants are doing transactions with us on a daily basis using the UPI QR code. That's the base, right? That's the foundation of what we do. Now, a lot of these merchants need banking products, right? I think it's less to do with financial inclusion because a lot of the merchants already have bank accounts, basic banking accounts they still have, right?
Yeah.
But I think it's more about financial empowerment where they need the right kind of products. So I'll take an example, for instance, lending, right? Everyone wants to do lending. Everyone wants loans for a variety of reasons. A lot of these merchants will not qualify for lending under more formal banking channels, right?
That's true, yeah.
That is where BharatPay as a platform can come in because given the fact that these merchants are transacting on a platform on a daily basis and we have a rich history of this transaction data over a period of time, we have built a vintage there, we can collaborate with banks to offer banking products to them in a much more accessible, cost-effective way, right? So I think the answer is while we will create some of our technology, like the payment stack is built in-house, right? But a lot of the other products which banks can do, and banks are better positioned to, like lending, there is both a product and there is a regulatory angle, right? Where
Sure, yeah.
a bank or NBFC would do. We will collaborate with them to offer it in a seamless, accessible, cost-effective way to a large base of merchants and consumers.
And small merchants have, as you correctly said, I am from Agra, which is a very large small merchant base, and I know they take loans at like 3% a month from the informal sector. So this is like lending, of course. But what about things like fire insurance, right? Like so many of these people actually go through huge financial trouble just because they are not protected through the right instrument. So any thoughts on what about these other instruments, financial instruments, which can protect them?
Yeah. No, so you're right, Ankit. I think lending is a more obvious product. But if you look at lending and then insurance and others, the penetration of, for instance, insurance is so poor, like it's like abysmally poor across our country. And in our interactions with merchants also over a period of time, insurance, shop insurance, house insurance, goods insurance for warehouse and godowns, that has come up as a real need, right? And that is where, again, a platform like BharatPay can play a role, or a lot of the fintechs can play a role, because, you've already built a channel. You already have access to it, right? Now, the problem today is if banks have to go directly, right, without any existing relationship, there is a significant cost involved. But if you already have a platform cross-selling insurance products, right, it's to that extent easier. But yeah, I think I agree. Beyond lending, there is insurance, potentially investments. We figure out a lot of merchants, whatever surplus they have in their current accounts or whatever surplus they generate, which is not going into their either expenses or working capital, they would also want to invest, right? So that's another product where you can offer in partnership with institutions.
And so would you say that that is something that more than manufacturing, you feel somebody else is better? Like, is the core of embedded finance that, you are partnering not just for access, but because somehow you are not the best. Is that true?
Yeah, I think, see, all said and done, one fintech cannot create and distribute all the products, right? I think we should acknowledge where the strengths lie. Both from a product technology as well as from a regulation angle, right? I think you should play to your strengths. If your strength is distribution, access, and also ability to get data and analyze data in a certain way, then you can always partner with the right institutions to offer the right products.
I think that's a super good example, and especially coming from Agra, I know that all of my friends and their dads, I mean, financially, it's one of the most underserved sector and segment. But coming from payments, I think a question directed to you, Prateek, like whenever we think about embedded finance, whether globally or India, right, everyone talks about cards. And every big unicorn is embedded finance unicorn is actually a cards company, right? So in India, like, wouldn't NPCI and UPI has solved every problem possible? Like, how come so many cards company are coming up and how come they're turning out to be unicorns?
Yeah. So I think a couple of things. Like I think what you're probably referring to are companies such as Slice and Unicards. The kind of gap that they're addressing in the market is twofold. One, the first one is a traditional bank is not able to underwrite those particular customers and give them a credit card. So that's where someone like a Slice comes in and is able to underwrite.
And just sorry to, like, also if you can explain to the audience why, like why can A underwrite and not B underwrite the same person?
Exactly. So banks have been very, I would say, conservative when it comes to lending, right, in the first place. If you have, let's say, 100 people, like a bank would probably only lend to 7 people or 8 people. And that's their core strength, right? That's something that has made them a lot of money in the first place. They don't have the necessary time, they don't have the bandwidth to, let's say, essentially look at someone who's earning below a certain threshold. And that's where you have these long tail of companies who want to, let's say, offer credit to individuals. Now, this credit can be in the form of a credit card or it can be in the form of a prepaid card. And not only does it become like a form factor, but at the same time, the access to the inclusion to financial services sort of increases, because here is a category of customer that is relatively underserved. I'll also give a parallel. I think you were speaking about insurance as well. So I have a customer, it's a pharmacy marketplace. They're doing something very interesting in insurance, right? Whenever you're selling, let's say, medicines, on top of the medicine, they just sell you a very small sachet health insurance that just costs like $50 or $60. What that potentially covers you is whenever you are, whenever you have out of pocket hospitalization expenses, that covers that covers a part of it, and that's very powerful, right? Because when you're purchasing medicine, the shopkeeper is pushing their own insurance product on top of it. So again, I think there is this we have this whole big nation, and too many consumers, too many users, a lot of opportunities. Not all of them have been met. And hence there have been these companies that are coming up.
Yeah, I think 50 rupees insurance sachets is, I think, great. But like the question or the point suddenly that came in my mind is that with the new KYC AML norms for insurance, is it possible to now give 50 rupees insurance? Like like I was talking to somebody in one of the large cab aggregators running insurance business, and they said they'll just stop that business. So the question to you is, like, is regulation kind of reducing innovation in India? Like, what are your thoughts? Like, I'm just trying to change the flow, but what are your thoughts on that?
Yeah. I'll probably spend a minute on why regulation exists, right? I've been running multiple jobs before, and I've saved a bunch of money, right? All my money is probably lying in a savings account or a fixed deposit or in some form of investments. The reason it's lying in an account is because I trust the bank, I trust the regulator. The moment that breaks, right, I will have to figure out a way to move my money out somewhere else. It's trust that is, that is essentially what is keeping the banks together, that is keeping different, I would say, financial institutions together. Now when it comes to innovation, right, again, I think banks are, I would say, have a stone wall when it comes to new product launches, right? Because at the end of the day, the ultimate, I would say, objective of a particular bank is to protect the end customer. Now I'll just like draw two parallels here. I think I'll go a bit deeper into banking, right? The first thing is the payment gateway space. As of today, the payment gateway space is being regulated after 10 years. So initially, anybody could be a payment gateway, like, some of the big names are Razorpay, Cashfree. These are some of the bigger names. Right now, and the share of digital payments was very small. This was probably back in 2010, 2011. Now the share of digital payments has gone has grown manifold. And hence it becomes extremely important for someone like me, right? If I'm paying to some merchant through a Razorpay or a Cashfree, I need to make sure that my money is secure, my money is authentic. There's nobody who's fraudulent, that's behind the scenes. And that's where the regulator has probably figured out that it's the job of the payment aggregator to ensure that, hey, it's your job to make sure this merchant is genuine, this merchant is authentic, because my funds are eventually going to this payment aggregator company. So I think initially, just to sort of draw parallels, right? I think the initial phase goes into a couple of years of innovation, and then there is regulation at the end of it. I'll just stop and check if you wanted to add something else. I'll add one more point to it.
No, I think given the way everyone is today thinking about regulation, we can always keep talking about regulation, but just to go back on innovation, right? Like maybe the question is to Sabyasachi, like, and also related to maybe a topic that you were touching on, collections. Is Sabyasachi was describing to me a very interesting way of collecting. So maybe if Sabyasachi can talk about that, and I mean the question that will come back to a panel is that how will regulation affect these things? And we'll take it maybe later, but if first Sabyasachi can go through that example, will be interesting.
Right. So I think before getting to the example, I'll just touch upon the broader area that we're discussing, like the partnerships, who will manufacture the products and all. I think there's one area which is around technology, right? I think Prateek was alluding to it as well. See, banks, they have their own challenges and limitations when it comes to technology innovation, right? They have certain cycles of technology, change, upgrades, innovation, right? And fintechs, because, they are less constrained, right? And they invest potentially more, or the disproportionate amount of their capital goes into technology teams and creating tech IP. I think their cycle of technology development innovation gets sort of quicker. That is another area where, you can work with banks. It's not just about, using the banking product as it is and giving access, but also a reverse flow of technology where you're helping enhance product, right? Now, in light of that, right, the example I think we were discussing earlier was on collection, right? So, the QR code, right, the humble, plain, vanilla QR code, which is ubiquitous everywhere. I think it's a great instrument. It's a great tool, right? We use it, we started using it for, payments, obviously, right, which became the foundation. But we soon realized if we are providing any other cross-selling, any other products, whether it is lending or tomorrow it could be insurance or anything, right? That also becomes a mechanism by which you can collect whatever is due to the institution or the bank, right? It could be your repayments of loan, it could be your platform charges or whatever. Right? Many industries today are not, and you mentioned this whole Agra example, right? So whether it's a cottage industry or let's say agri-tech, or it could be retail supply chain, right? People who are daily, dealing in cash, their transactions happen, high volume transactions happening on a daily basis. They need working capital financing. They need financing for a variety of mechanisms. They're not able, banks are not able to lend to them because it's a costly affair. Costly affair to both underwrite process as well as collection. Therefore, given the cost involved, the rates will not justify it, right? Now, but, with this whole QR payment-based collection, right, we have a mechanism by which you have like in some ways sachetized, right, have a sachet sort of product of collection, where instead of, collecting on a monthly or quarterly basis, like you would typically do in a bank loan, you create a EDI product. You're saying that, I will connect a very small amount on a daily basis. The way it then benefits is, one, it reduces the burden of the merchant. A merchant does not need to plan for a certain outlay at the end of the month or beginning of next month, right? It's part of the regular income that he's generating. One part of that goes towards repayment of a loan or any other charge. I think the other thing is also it helps in risk mitigation, right? Typically what happens is you may miss out on an EMI, and that causes a red flag, right? If you miss out on 2 EMIs, then certain action needs to be taken, right? But banks have the whole, like there's a 60 DPD, 90 DPD cross, certain actions are taken. Here, if you're collecting on a daily basis and you miss out, let's say on 3 or 4 daily installments, that itself is a warning signal, right? Itself is a warning signal to figure out what's happening with the business. Is there an issue with the payment stack or is there an issue with the business itself, right? So it could also help. It also helps in mitigating some of these risks.
So I think there's a lot more industry beyond the small merchants where some of these daily collection driven through QR or driven through technology is highly relevant, where again fintechs can help enable this and make it a lot more cost effective for banks, larger NBFCs to lend and collect from these segments.
Well, I think super example, and with so much of innovation happening on the front end, right? Like where banks have to move away from like something as simple as a payment bucket model of 30, 60, 90 to daily. With so much changes on front end, I'm assuming banks also have to change on the back end, right? There have to be change in risk, operations, etc. So maybe my question to Ajay, given your company, like how do banks actually make this change? Like you have WhatsApp, you have mobile, you have DIY with embedded finance, so many changes on the front end. How do you think banks cope up with technology change at their end?
I think like there's a lot to do with the operations and technology at the back end, and we can have more robust underwriting process and customized risk engine. And considering, let's say, for example, like lending, either it's 50 rupees lending or 50 CR lending, there's only two ways like we can judge a person. Either they have the ability to pay or the intention to pay. And we can collect data in multiple data sets from different sources from front end. But working at the back end, like we can judge like whether this person, depending upon the credit score, depending upon the GST data, or other data like data sets, we can find like whether this person has the intention or ability to pay. I think the back-end system can be made more robust in terms of like for the banks.
And like maybe to anyone on the panel, right? So I think you guys are doing a lot of innovation, but when you're working with the banks, like any challenges, Sabyasachi, you also have a bank, a strong bank partner, right? So you have seen hopefully both the worlds. So any challenges for anyone on the panel who can talk about how banks may, or maybe Pushkar, how banks maybe need to change?
Sure. So I think one of the key partnership areas for us is actually also banks. And we have a partnership with ICICI Bank and a couple of other banks in the pipeline right now. And I think one key thing which we've seen is that, which I think was mentioned earlier, is that you do have, so there's a lot of interest from the executive team side, right? Like there's a lot of interest, obviously bank executives are also looking at the fact that fintechs there's so much innovation happening. So then there is this push towards like, hey, why? I mean, there's generally a push and in the banking system that, hey, banks need to partner with fintechs. I think what we've seen is that though the process of that partnership is a very painful one. I mean, it takes a long time because while the head of the bank may want to partner, but at the end of the day, till it doesn't percolate down to either the technology team or the sales team or the distribution team, it's I think the partnership oftentimes just fails, right? So through our experience with ICICI Bank, it's taken us almost 9 to 12 months to try out different approaches. I think we had a co-branded product where we were looking to integrate with their net banking platform. That itself took like 4 months. Then we realized that where they put the button was not visible at all, so you could never get customers. So then it was about figuring out, okay, how do you sort of incentivize or have that conversation to highlight what are the challenges, also working with their sales and distribution teams across the country, training them, hand-holding them, right? So I think because there was sponsorship from the top, that partnership could happen, but I think executing that partnership literally required us to build a ICICI service team at our end, so that's the reality of how actually things are happening. But again, I think things are changing as well. There are some banks which are more tech forward now, and I'm sure the panelists can talk about them.
Yeah, so hopefully nobody from ICICI is there in the audience.
No, I think Pushkar is bang on. I think exactly what my experience in the last few months has also, I've seen that. So I think there is, one good thing is there is a strong intent, right? Irrespective of which bank you go to, whether they are large private sector or large public sector banks or SFBs or smaller banks, I think everyone has an intent. People realize, and this may sound cliche, people realize that world is changing, there's a lot of innovation happening. And while they cannot house a lot of innovation because of a variety of reasons, they can at least partner with players outside the banking domain, right, who are more nimble, more agile, who have access to some of these innovation, right? So there is a strong intent. But again, like Pushkar was mentioning, what happens is from intent to execution, you have to go through 10 different layers. And that is where, some of the things get lost, right? The original intent, how the leadership would have thought of a partnership, by the time you get to the third or fourth level of execution, some of that would have been diluted, right? But I think banks are catching up. The good thing is some of the smaller banks, some of the SFBs who have come about, they have caught on to the game, quite well.
That's interesting.
Yeah. So they have realized, I don't need to build everything in-house. I don't need to own everything. There are players who have, who have credibility, who have a strong, robust technology. They have a good consumer base. And if I can effectively partner with them, then I can improve access of my products. Obviously, there is some kind of sharing that will happen. So I think some of the smaller banks have caught on, and they have shown not just intent, but also agility in execution.
I think that's super interesting because in some ways they are trying to catch on to a bandwagon which maybe they have equal rights on, because the branch-based banking, the corners, like lower parallel, all corners are already taken by the largest banks. So
it will take, some of the larger banks have taken decades to build. Now the banks which are coming up today, they don't have that luxury, right? And they don't want to spend next 30, 40 years getting to thousands of branches and getting to a certain consumer base. So therefore, they need to be smart about it, and hence they are more agile, a little bit more open.
And it's something that you were trying to brush, but let me just bring it on the panel very obviously, sharing, right? Use the word. So let's assume it's going to be a big sector and there's going to be a lot of spoils to be taken. But how does the sharing happen? Like today, that small bank is very happy to get access to a consumer base. But after a time, it becomes big. It becomes like one of the large 4 banks. And then it believes they are more important. And, while you had the consumer base, but they are the manufacturers. And then there are players like Decentro and Falcon in the middle who have been helping. So how does this sharing happen? Who is more important? Maybe not today, maybe 5 years down the line. How does this, and maybe let's start with Prabhatej and then go back to you. Like, how do you believe the sharing of spoils will happen in the sector?
Well, I think, it's just the beginning, and at the moment there's not much spoils left to share, but whatever is there, right, like in, let's say for example, the PPI area, there is a large interchange that still exists. Obviously, UPI has no spoils. Interchange, UPI credit is coming, so we're hoping that a lot of that will start coming into play. But I think also to your earlier question, maybe I'll just come back to this one. To your earlier question on middlewares or how banks are looking at who gets a larger this thing. I think what we're realizing is that how can you commoditize banking? How can you commoditize a lot of the basic processes in a manner where, let's say for example, a drip capital here has the resources to deploy, right? And they can work with an ICICI bank to take them live. He said 9 to 12 months. I'll actually say kudos to him because that's the earliest I've heard go to market, right? Most fintechs don't even see the light of day because it takes minimum 18 to 24 months and they don't have that kind of runway. So can you commoditize a lot of these partnerships? Can you commoditize a lot of these integrations in a manner where you get the company, the fintech, the tech company to do what they're best at, right? Not work with basically integrating with the banks, but work on their core value proposition of customer delight or solving the distribution side of problem. And what we are seeing right now is like right now, a lot of conversation that we've had is about selling and cross-selling. I think in very soon it will be a problem of instant availability, and embedded finance in the way forward will be instantly available to people, because I think we are underappreciating the fact that if a Bharat Pay is able to understand before even the merchant realizes what he needs, and is able to give them in the front row that, okay, I'm here giving you 10,000, 100,000 rupees. I think that's what's going to be the game changer, because a lot of times it is not the cost of capital, it's the sheer availability of the capital and the availability at the right point and right time. So being at the right place at the right time will become very, very critical. Our generation, the Gen Z, millennials, we are an instant gratification generation, right? And that's going to change the future. And I think to your later part of the question about the spoils and how the sharing will happen, like Sabyasachi said, and everybody is saying that small finance banks are very, very hungry. They don't have the capital. They don't have the time to build a very, very large organization, right? Build branchless. So they are going after branchless banking. They are going after connected banking. And the future of money is liquid, right? And how fast you can flow through, make that flow happen. So we are realizing with more and more SFB partnerships and newer banks partnerships and NBFCs partnerships is that a lot of these basic services that banks were treating as the halo product have all kind of become very, very commoditized. And at the end of the journey, whoever owns the experience, so the customers will come, right? But whoever owns the experience, whoever owns the convenience will end up having a larger part of the spoils, whatever they may be.
I think on that note, I'm getting a prompt for 5 minutes of the panel. So maybe I'll open to Q&A, but I guess no bankers on the panel. So the winner seems to be the embedded finance and UX. I'm sure if there was a banker on the panel, there'll be a strong differing opinion, but so may it be. So let's open it up to questions, given we have so less time left. I don't know, like, should we? Yeah, so will you direct them or should we?
Yeah. Hi, my name is Jairam Bani. Prabtej, I am from Raipur and Simba was a great product. Before I ask the question, so in the pursuit of this digital innovation and embedded finance and funding and everything, I believe that one thing which is getting lost is the accountability to the customer. What's your take on that? Who owns the customer? Even though recently the guidelines have come, the entity owns the customer. But how strictly it will be followed, and how are we going to ensure the compliance that, customer is not at loss?
Yeah, I think it's a great, in fact, I had it as one of the questions if it was not run on short on time. So yeah, so I'm sure nobody wants to take that question, but
there's no easy answer.
Yeah, but I think Prateek, you were supposed to take it, so.
So,
I know mics don't work at these times.
Hey, hi. Yeah, hey, thanks for the question. So, I think when you look at embedded finance, like ultimately the goal is to make sure that this particular consumer or this particular institution is getting onboarded to a particular financial institution, right? Let's take a neobank, for example, right? You have Jupiter, you have Epify. Ultimately, these are federal bank customers, whether you like it or not. And a federal bank does have the right to, let's say, even cross-sell some of the other products that they want. So today they get onboarded on a savings account. Tomorrow they could offer a credit card, for example, for instance. So the ownership of the customer is very clear, right? It's always going to be the regulated entity unless, and a lot of it is driven by regulations.
Actually, if I can press on that, but at the same time you are front-ending, you are the one, not you, but the eventual customer. So doesn't the customer believe that I'm talking to this e-commerce and why are they not responsible?
Exactly. So I think customer ownership can mean many things, right? I think it can mean servicing the customer. It can also mean giving them some other, let's say some other add-on products as well. For sure, I think to sort of add on to your point, yes, like if you look at the fintech, yes, to some extent they do own the customer in part. But at the same time, again, I think maybe a fintech may not necessarily have the license to, let's say, offer, let's say, a product C or a product D, which might not be compliant. So again, I think maybe what I want to, if you have the mic with you, I would like to go a bit deeper into when you say customer ownership. Could you give me an example on what exactly do you mean by that? Yeah.
Maybe it will be a good offline conversation. Do we have time for a question or? Okay, I think there was one question there. But yeah, I think the answer to your question, it's complicated.
No, great. Thank you, guys. And my question won't be that complicated, so I'll make it easy for you guys. And the way Ankit started the discussion, saying that the embedded financing, is it like a glorified BC model or more like a DSA model. So my question to everybody is this. So embedded banking, it starts with when you make life easier for your financier or the bank to acquire a customer, right? And you have given the loan. But where you actually lose the track of that bank or their NBFC is where you're not able to tell them the early warning signal. And that is where Sabyasachi was mentioning out, when you see whether the daily collection is happening gradually or not, and that throws you the early warning signal. So don't you think, somewhere where the embedded banking is losing, or maybe, it still has to see that growth, is where you have that kind of control. You help your, partners at the behind, your bank or NBFC, in figuring out what exactly is going wrong with these customers. Because getting somebody as supply, that's a easier part. Don't take me in the wrong sense, but that's a easier part. But where do the real value comes in for the guy? Because unless until this 30, 60, 90 or this NPS kind of things is resolved, that is where the main challenge comes in. So what you guys as the stalwarts and what you guys as the think minds of this entire industry are working around this, and how you think it can be made much more easier for the entire industry?
Yeah, maybe Sabyasachi.
Yeah. So see, the way a lot of the fintechs and platforms started, I think the focus was first always on the customer, right? Whether it's the merchant consumer, how do you create a great experience? How do you customize the product, package the product so that, access to the product, onboarding, using everything becomes easier, right? To the extent the backend, which is the banks, the NBFCs, the financial institutions, that came secondary. But you're right to the extent that now when you're looking at more embedded banking or deepening the relationship, going beyond basic products like payments, getting into accounts, neo banking, lending, right? Now the focus, or there has to be both lens needs to be kept in mind. Both the consumer lens, why is the consumer coming to you and not going directly to your bank? There is a strong reason, right, why some of these fintechs, neobanks have a certain base. They have seen some early success, right? But on the other hand, right, if you have to really add to the value pool, right, you cannot just say that there is a product and then there is a certain commission as a channel I'm taking, which is like what a BC or DSA used to take, and I'll distribute the same, right? Then you're not expanding the pool. The way you can actually add value is if you're adding more customers to the fold, which a bank traditionally could not have sold directly, or you are making it much more cost effective, either to distribute or to collect, right? Or you're addressing risk, only then you are actually adding to the pool, right? That's when the bank will see the true value. So to that extent, I think we can do a lot better job in customizing the product, in figuring out, for instance, insurance, what is your right target segment, who will buy this insurance? For lending, obviously, right, what is the credit worthiness, what more data points that I can collect which can help the bank underwrite the customer better, right? And I think fintechs and platforms are in a position to do it because now they have a rich history of transactions, of interactions with the customer, right? And plus, they have a bunch of algorithms and analytics on top of that, which can lead to a better sort of outcome or solution, right? So I don't think we are there yet, but the tools, the platform is in place, and probably soon, you'll see a lot more things happening on that front as well.
Sure. No, I got that. Thank you so much. So to his question, where he asked about the customer ownership, and that is where what comes to my mind. The moment you generate a lead for a bank or NBFC, and you pass it on to him, and that's where your ownership goes off. To be honest with you, as you mentioned about a FI or a Jupiter for the Federal Bank, they are getting the customer, then they are selling the credit card, and that's where your ownership of the customer ends. But the moment you have all these banks and NBFCs getting a regular engagement with these guys, and you don't lose the customer ownership, and that is where you as a fintech, you don't have to figure out what will be the regular revenue stream. And I don't think so regulator will be playing a major spoil sport, sorry for the wrong words, but they will not be able to play that spoil sport thereafter. So a regular engagement model has to come in, wherein you keep giving these banks or NBFCs some kind of idea about how these guys are going to behave and what these guys are going to need in the near future. And I think somewhere or the other, fintechs currently lose out on that particular domain as of now.
No, I think that's a great point, and I mean, if I can add one point of my own is,
surely,
at least for banks, I used to have one primary bank and I moved all my money to another bank. The only time I got a call is when his March ending of my RM was there, and he said, "Can you increase my average balance?" I didn't get a call for 4 months since I moved. So something as simple as that, if the banks are not doing analytics on, so I think banks really need to, like, this is still level 2, level 3, like even the customers banks have, I don't think there's enough analytics to, kind of target them. So hopefully we'll reach both places, that, banks also become super data science advanced and fintechs can also kind of help them.
Great. Thank you, guys.
Okay, thank you everyone for patiently listening, and I think we are out of time. Thank you to the panel for taking the brave questions and being upfront about it, and hopefully you guys enjoyed the discussion.
Thank you. Thank you. Thank you, Ankit,
Thanks.
for moderating this panel as well. Thank you, everyone.
Thank you, gentlemen, for doing this with us. We appreciate your time and your inputs. I'm sure the audience liked that interaction as well. Thank you so much. Our next panel discussion will start in about 5 minutes from now. We are waiting for the panelists to arrive. Until then, we can take a quick 3 to 4 minute break. Thank you. Thank you, gentlemen and ladies, for being in the room and looking forward to the next session. Our next session is a panel discussion on profitability of Paytechs, and the moderator of the session is Shobit Mohan, the Vice President Marketing PayU. May I invite Shobit on stage, please? Joining Shobit will be Chandan Joshi, CEO of MobiKwik. Chandan, welcome. And along with Chandan, I have Deepak Tomar, who is the CEO of Novus Loyalty. Welcome, Deepak. I now ask Shobit to take it from here. This is a quick 30-minute panel discussion. There may not be a possibility for us to take any questions. However, let's see how it goes from here. All the best, Shobit. Take it from here. Thanks. Yeah.
Hi everyone, thank you for being here. I will briefly start with a little introduction to myself and then ask the panelists to introduce themselves and talk about their stories and where the businesses are at before we get into some of the questions. I'm Shobit, I head marketing for PayU Payments, been with PayU for a year and a half now. Chandan, why don't you?
Yeah, hi, I'm Chandan. And I've been with MobiKwik for 4.5 years now. Started in 2018. Prior to that also I was an entrepreneur. Before that, 10 years of investment banking. So at MobiKwik, I hope you guys know. So at MobiKwik, I hope you guys know, we are one of the, I would say one of the largest pure play wallet companies left in India. We are in fintech as well as in payment aggregation. Thanks.
Hello, myself Deepak Tomar, I'm CEO of Novus Loyalty. So we are a SaaS-based reward and recognition platform. It's open for enterprise, it's open for e-commerce, it's open for other businesses too. We've been operational in India for about 3 years now. We work very closely with NPCI and banks to do their enterprise-wide loyalty programs. Yep.
All right. So I think the first question I want to ask both of you, maybe one by one, starting with you, Chandan, is just explain to us as a business where you guys are at, profitability, how high that is in terms of focus, what have you guys done, what you're looking to work on?
Sure. So I think profitability, this is one of the most important and I would say controversial topics, in the payment industry or fintech industry in India right now. Since, UPI came into the picture, it became extremely difficult. Although it has been great for overall ecosystem, users, merchants, everybody in the industry to come on to the digital payments network. But considering it has been free, that has been a little bit challenging, I would say, for most of the companies in the payments industry to generate revenues. So, however, for us, I would say, to give you an example how we have grown, in 2018, we had around, I think, 35 to 40 million users on our platform, and I would say less than 1 million merchants who were transacting. And in the last, I would say, 4.5 years, now we are close to 130 million users who are digitally transacting or who have onboarded onto our platform. In addition to that, we have more than, I would say, 3.7 million merchants, including offline mom and pop stores, online everywhere, who are accepting payments via MobiKwik today. Now, we have never raised billions of dollars, in this, during this period. We have always been extremely conscious about the fact, that we have to ensure unit economics of every transaction. And we kept acquiring merchants for our wallet business, for wallet acquiring. We give UPI as a free service, but primarily it's difficult to generate revenues from, I would say, as anyone can agree, from free transactions. For wallet, of course, there are value-added services that we can do. We can do cross-sell and number of other things that we have tried over a period of time. running marketing campaigns, joint marketing campaigns, co-funding campaigns. So these are all tactics in which we have been consistently trying to grow year on year instead of trying to, I would say, be 10x in a couple of years just by funding in a lot of money. So we have grown in, I would say, in a scalable way, consistent way, and where we are today, we continue to invest money into the business, but we try to remain close to the break even. So for example, last year, year ending March, so for a couple of quarters in a row, we were net profitable, which was, a great feat in the fintech industry for us. And of course, now going forward, we are planning to keep growing and investing money, whatever we generate from the business.
Thank you. Deepak, you're in a slightly different business model, so I'd love to hear from you as well.
So profitability is definitely very important, unless until you are a non-profit organization. So I understand in Chandan's space, like it's very important to scale the business, and then you need to continuously invest in customer acquisition and a lot of stuff. In our business, where it's a SaaS business, you need to invest a lot upfront. Like you need to invest lot in technology, but once you are there, once your product is mature, then it's easy to achieve the profitability. So depending on the business model, 100% profitability is super important. Either you're going to get profitability soon or later. It should be there in your business model. In some of the paytech companies, they need to continuously invest in that. In our case, we need to invest a lot in first 3, 4, 5 years, but once it's there, then it's easy to make a SaaS company profitable in comparison to a paytech company. Yep. So in our case, we've been investing heavily on technology upfront, but yeah, of course, in 3, 4, 5 years, then there is a roadmap like how it's going to be more profitable over the time. Yep.
Perfect. One of the questions I had for you overall is, I remember in 2016, I remember reading a report which said that if India reduced its dependence on cash, it would mean another extra 10 to 20% to our GDP growth rate. So I think we were growing at about 6, 7%. That means like, 1 extra percent of growth. In 4 years, we've taken so many people off cash for a large portion of time. A lot of technology development, market development has been done. Is it very important from a overall ecosystem standpoint? Like, should profitability be so important in your mind? At an individual company level, obviously, like you said, if you're not a non-profit, then obviously it's important. But do you think the ecosystem should worry so much about profitability when so much has been done in like such short time, and more is to come? So
100%, we are a growing economy. A country like India should not be worried about only profitability. Of course, a lot of investment need to happen. The kind of financial inclusion is required here. So I won't say profitability should be the only factor here. Of course, you as a company want to be profitable, but it should not be the only key. A lot of investment need to be done by either its regulatory bodies, and they need to make it little bit, they need to amend few things so companies can leverage those things, leverage those policies to be profitable. But in my views, profitability should not be the only thing we should look here. A kind of financial inclusion India was able to achieve through all new age payment companies, like hats off to them. Of course, government provide a lot of infrastructure, a lot of policies and all those stuff. But I think real inclusion happen from people like MobiKwik and other partners as well. So we should not only concentrate on profitability, we should also concentrate on how they are contributing to the digitalization. Digital payments are happening, a lot of other things are happening around that. Maybe unit economics are not profitable, but eventually the kind of inclusion is happening. That's going to make, I would say that's going to contribute a lot.
No, I completely agree with you, Deepak, there. So I think for us, we are in a B2C business, primarily B2C business. We have a B2B business as well, which is payment aggregation. But in B2C business, there are two metrics that everybody looks at. Of course, profitability is the most important metric that you would like to look at any company, but important thing is growth. So if we are able to drive, like digital inclusion, we are able to provide most of the tools for most of the India, like in tier 3 or tier 4 towns. If we are able to bring them on digital platforms, the experience that has to be funded, we can't start charging them, money from day one. This is the first time if they are experiencing new technology, it has to be, someone has to fund it, But over a period of time, for any business or any company, it's extremely important to have some kind of visibility that at what point in time you will be able to generate some profits to recover all the costs or investments which has gone into the business. And as long as that visibility is there, we can keep investing or reinvesting the cash flows that we are generating from day-to-day operations and keep bringing more and more users onto the platform. So this is kind of the thought process with which we have been able to achieve the scale. Of course, we are still growing. We are still able to acquire more than somewhere between 2 to 3 million users a month, which is not a small number. But in order to stay, not to go into too much red, going into red is very, very easy. If you just start giving cashbacks and stop focusing about where the money is going to come, it's very, very easy to spend 100, 200, 500 or 1000 crores also in a month, and everybody will come onto your platform to transact. But all those people are actually coming for cashbacks. As soon as you stop giving cashbacks, they will find another platform, So with acquisition, retention of users onto your platform and engagement of those users who have already visited your platform once, over a period of time, that is another metric which of course we have been trying to do by adding more and more products and features for which user does not need to necessarily move on to some other platform. And these are kind of cross-sell opportunities for us where we can generate additional revenue. In addition to that, for user acquisition also, if you start using performance marketing, the cost of user acquisition is extremely high. In last 2 to 3 years, we have seen a lot of companies reporting, how much marketing spends they have done and how many users they have acquired. But for us, because we have done this for 10 to 12 years now, for us, we have seen enough ups and downs to stay sane, even if everyone is going nuts, if I may say. So what we do is we just stay focused on it, and 80% of the user acquisition we try to drive organically. So we don't pay for, all the users that we acquire. So average cost of user acquisition, we try to keep it below 15 rupees, so somewhere between 13 to 15 rupees for every user that we acquire onto our platform. And, that effectively fuels what, we do. But the biggest challenge for, in at least specifically in B2C industry is when you hear numbers like somebody has 500 million users onto their platform, and so that triggers a reaction that let's go, spend more money to acquire more users if someone else is doing. So important thing is to stay focused on what you want, consistently keep doing that over a period of time, because ups and downs will keep happening, which makes it B2C industry specifically extremely, competitive in fintech. And with UPI coming, all other features and products which are being launched on UPI, it's extremely easy for anyone to launch a payment application. In fact, any one of you can start a UPI acquiring app and start making payments from your own app. So it's like the level playing field is completely open for anyone to start today and build whatever you want to build on it, which is a great thing. It keeps everyone on their toes. But then at the same time, it makes it extremely difficult to stay profitable. So, that's what kind of my opinion is.
Thank you. You mentioned performance marketing. So, like, as a digital marketer or marketer, one of my favorite observations is that like in any competitive market, Google is always the only winner. So, I will raise my bids, my competitor will raise their bids, next day I will raise my bids. Our acquisition costs will go up, numbers don't go up, but Google is now making double the money that they were a week before. So, totally get that. I want to ask you, I think one of the things that maybe people in the industry realize but outside don't realize as much is that fundamentally most companies' unit economics are profitable, but it's other costs in, things which have risen in the last 3 to 4 years. So maybe starting with you, Chandan, can you just talk a little bit about some of the other costs that, maybe not very visible to people outside the company in terms of what is dragging profitability down, or, some of the costs that people need to consider before they look at profitability of a company?
Yeah, sure. So I think Deepak just touched upon it, like technology investment. So in last, I would say 4 to 5 years, at least, since I've been, looking at the payments business, the biggest cost which has been there for last, since lockdown also started, it has been technology cost. Technology cost is not just infrastructure, AWS or other tools. They are also extremely expensive, and you have to pay in dollars when your revenue is in 1 rupee or 2 rupee, at scale. And second, people cost in technology also, it has been the, biggest driver. And we have seen it, I would say, in 2020, the competition to acquire, talent in technology, people were giving away bikes, cars, and everything, So that's another thing which has risen consistently over the period of time. So for good people, there is no top limit, at least in the technology business. In addition to that, infrastructure cost, we have to keep upgrading our infrastructure for, new things which, so for example, NPCI, I'm sure you guys were there for the launch yesterday. All the products which are launched, it's not that it's all going to happen like that. We have to invest resources, product, business, everybody's time, effort. We have to find partners who will actually utilize our BBPS, Bharat Bill Payments, cross-border system, APIs. So we have to actually travel across and find partners who will consume those. So all those things are there, and it all adds up at scale. You can't necessarily say this is one thing, but continuous investment in technology, infrastructure, and people. These are basically the biggest cost drivers. On top of it, if you add user acquisition also. So in fact, some of the fintech players, nowadays, there is a lot of competition for acquiring merchants also. So it's not just customer acquisition cost, it's a merchant acquisition cost also. So if you go to an offline store and if you want to put on your QR code, I'm pretty sure you guys must have read news about it. People fighting, tearing each other's QR code. And so if you want to maintain visibility on a shop, that even if it's UPI interoperable QR code, for that also people are fighting. From marketing, that that space is extremely valuable. So all these are costs. So ensuring that whatever merchants you have acquired once, you have done their KYC, you have trained them to use your product and services, and then and 15 days or 1 month later, he is still accepting payments via you. That is also a cost. It's not, and then of course, if you are processing payments for all different modes, you work at PayU, so net banking, debit card, credit card, everything has a cost. We have to pay to acquirers to process all the transactions. So that is input cost. So there are enough costs to to think about before I would say entering into the business. But of course, if you build whole platform on free rails, so for example, if you use UPI to transact everywhere, so there is no cost for a user. So as a user perspective, I think we were just discussing about it. You mentioned that if you are in US or wherever, so just like last week we were outside India, I withdraw some money from ATM, at 2,000 dirham, and the fees was 26 dirham. So if whatever you withdraw, you are paying that cost. It's free in India. So it's kind of the best place for a user to be. you know, here, because you get cashbacks, everything is funded, everything is free, you know, so it's amazing, great experience. But I think right now, if we have, you know, a couple of 100 million users who are onto the digital platform, 500 million users who are on smartphones. So we still have a long way to go there, but once everyone is used to all these platforms, I think there will be a time when we can start, you know, people will be comfortable, for example, buying insurance on app. You know, right now, I think majority of us, we might buy a small 20, 50 rupee insurance as a cross-sell on an app, but if you want to buy health insurance, you want to interact with someone. You want somebody to come to your house, explain everything. But I think once all these things start moving digital, there are opportunities for, you know, fintechs to add more revenue also to the kitty.
Okay. So Deepak, I think you are in a slightly higher margin business in SaaS, but you know some of the things that you mentioned, technology costs, AWS costs, are you also experiencing that to the level of magnitude that a consumer business would?
Sure, sure. Specific to our business, if I need to calculate the cost, so I'll always, what cost I can pass to customer and what are the costs I will not be able to pass to my customer, right? So we are in a B2B business. We touch customer in at some point, but mostly it's B2B. So there are technology cost, infrastructure cost, I won't be able to pass it to my customer. And then it's geographical specific as well. In India, we cannot pass a lot of costs to banks. Banks are direct customers. They're not going to pay you for technology. So you need to find other ways, or you need to change or pivot your business model a little bit, how you're going to pass that cost to your customers or your clients. As in business, that's what I think all the time, like if there's a cost, how I'll be able to pass that cost to customer. We as in SaaS model, when we just do one kind of service, right? So we just say, okay, customer not going to pay for the technology, customer not going to pay for this, how I'll be able to recover that cost from my customer. It's going to be a transactional, I'll just charge him 1 paisa per transaction or kind of a thing. If we give platform as a service, like, and you mention it, absolute, like Google is the winner here, right? So if you're using Google Maps, right? After certain point, they charge you for API calls. Like if you're going to use more than these API, after you meet a threshold, then you need to pay them for each API call. That's how we are building our business. Like if you're going to use this many API calls, then we're going to charge you for these APIs. So I would say always calculate what you can pass to your customer, what you won't be able to pass to your customer. To be profitable in a SaaS business, that's important. If you've been able to pass that cost to your customer, you'll be profitable. If you won't be able to pass that to your customer, then you won't be able to make profit out of it. So that's how we segregate our cost. Of course, as Chandan mentioned, infrastructure, technology, of course, tech talent being expensive, at least the cost is 3 times what it was a couple of years back. So it's really hard to retain that kind of talent, and it costs you a lot more what it was costing you before, right? But we all are sitting on this technology, so we have to bear all those costs in our margins. So if you do a good segregation, what you can pass and what you cannot pass to your customer, then it's easy to be profitable. Or at least you can put that in your business model.
I think I was sharing with you guys, I'll share with everyone. One of the observations I have is, I used to work for an IT services company way back, and we were competing in the US and Europe and all these markets. And every time a lot of customers would come back and say, what does your financial sustainability look like? It was very coded for, they want to work essentially with the deeply entrenched multinational large companies, right? Like, so IT companies, Indian IT companies, HCL, TCS, Wipro, we were all sort of disrupting a very well-entrenched business model, and financial sustainability was, in some ways I felt, like in my personal experience, I felt it was like a code word for saying that, look, we don't want you here, we want to work with the established players. And I kind of feel like some of the conversation now also has maybe a risk of disrupting the innovators in our country, right? Like if the only way to innovate is to innovate profitably. There is only 5 companies in the world which will be able to innovate. And so I think I want to sort of understand from you, apart from profitability, which again, right, like any business, no business leader does not want to make a profit. Like why? That is what your entire reason for existence is. But what can like a customer or a client look at in a company in terms of sustainability, which is not just, the final like sort of line item on the P&L, but if I'm trying to evaluate a company, what should I look at in terms of this is a sustainable company or not a sustainable company? So I'll start with you, Deepak. Yeah.
So of course, when you start a business, of course you want this to be profitable business, but what your customer gonna look at? Customer not gonna look at you as a profitable company, that how much profit they gonna make. Of course, they want you to be there in the business. They don't want to work with anybody who gonna run away. Like after 3 years, they're not gonna be there, so they're not profitable. They're not gonna be around, of course. But they'll see one thing, brand as well. You need to build as a brand. Like, of course, you don't need to be that profitable, but you need to build a brand. You need to have your own set of rules. These are the rules that gonna define you, that gonna define your company. That's what you do better than everybody else. So you need to create your brand image, and that's gonna help you to retain those customers, right? So although everybody can say all these companies are doing same thing, but every company is different. Every company is different in a way it's been structured, the kind of people it has. What are your values? As a company, what are your values? Like how, and that's what customer gonna see, not just the profitability, if they're gonna be there, not there. How you put yourself in front of the customer. These are my values, these are my core values. I'm gonna stick to these 5 values, and then customer gonna trust you on basis of those values. Of course, those values need to reflect whenever you're going to talk to your customer. Those values should reflect, and those values going to come from the founders, your basic team that you have put together. So those values are very important. If you put your values in front of the customer, customer will going to create a brand image as per those values. So not just the profitability, how you put yourself in front of the customer, that's very important too.
Yeah, completely agree with you, Deepak there. Just to add, as I was talking about it earlier, that anybody is open route right now, at least in the payments industry, to start a payments app. If you want to process payments, it's extremely easy for anybody to do it. After interoperability, UPI interoperable QR codes, which are already there. PPI interoperability is also, we have already launched it. So ultimately it does not matter who acquires the merchant. So for example, if PayU is the merchant acquirer in anywhere, it's possible for me as a user to use any of the apps to make a payment to that merchant. It does not need to have your own QR code or your own acceptance there, because everything is interoperable. You can use any app to pay to anyone, wherever. That makes it extremely important, going forward, to have the best user experience or user engagement for any app. So choice is with the user, not with the merchant. So user decide which app I can make a payment using any app, which app I want to keep on my phone. So basically repeat usage on any app, kind of the metric. So if you see that if you have acquired 100 users and 80 of them come month on month on your platform to transact, because you are able to provide them the best experience. Ultimately, making a payment is just a utility which everyone has, and every app will have. But with that utility, what are the other product services and the experience, customer service, all those things which come together, and you ensure that the user will end up choosing your app to make the payment. That is the differentiating factor, at least in the payments, in the payment space, I see going forward, which is going to happen. And we are actually very, very strongly trying to, build that into our app experience for all the users. So That means that at any point in time, if we are able to retain more users, at any point in time, if we are launching other products and services where we can make revenue, or we can cross-sell, or we can show ads, or whatever, we will be able to make money. So that opportunity is open for us. But if we are not able to retain the users who are coming onto our app, then it's a new user acquisition every month. So you'll never be able to become profitable. So
I think we are over time, so we'll wind up. Thank you, Chandan. Thank you, Deepak. I know this is a very important topic, but also not a topic that is very easy to talk about. So I really appreciate you guys being as candid as you were. Thank you so much.
Thank you.
Thank you, everyone. Thank you. Thank you, Shobit, Chandan, and Deepa for doing this. Take care. Thank you so much. We now have a 10-minute break, and then we'll have the Lord Mayor's interaction with UK startups in a bit. Thank you.
La noche no se muere. La noche no se mueve. La noche no se mueve. noche no se duerme. La noche no se duerme. La noche no se mueve. La noche no se mueve. noche no se duerme. La noche no se duerme. noche no se mueve.